Alrighty. Check mic. Good morning, everybody. Sorry I was a little bit behind today. We had some pretty damaging storms yesterday and last night, so I got to bed again awfully late. I think it stormed last night all the way up until about 1:30, 2 o'clock. So, good morning. Thank you guys for joining. Hit the like button. Subscribe. We're going to go through the watch list. We're going to get ourselves ready for the day here. If you're new, welcome, guys. Don't be shy. Again, hit the like button, subscribe. If you have any questions, post them down in the chat down below. If you have any tickers, news, anything of the sorts, while I start to log in, post them in the chat down below. Again, we thank you guys for joining. If you learn anything from this stream, if you find this stream valuable and you would like to give back, it's greatly appreciated. The links to the donation and contribution is in the description. If you want to book a one-on-one, you can email me. That link is in the description. Or you can also send me a message on Twitter/X at Ivy League Trades. So, GameStop. We've been watching GameStop, DJT, crypto. Let's go right into GameStop here. All right, we were targeting $28 to $30. This whole area up here, and you got a smack bullseye right there at $30. I told you guys yesterday that I was really hoping for a pullback here to 27. We didn't get it, and sorry, just give me 1 second here. I am just trying to log in. Okay, let's see here. And I think we have some earnings as well coming up. All right. So GameStop, you can see here, $28. Again, this was our first target because you can't get the 30 without getting the 28. All right. What are we going to want to see here? What are we going to want to see? Well, first, we're going to go take it all the way back to the daily chart. Let's just go right into it. Let's go right into it. We're going to talk about GameStop first, or you know what? We're going to give it a second for some people to join in. Let us know how you're feeling today. What is a goal of yours? All right, post that in the chat. I want you guys to stick with it. Secondly, I thought about this yesterday, and I wanted to tell you guys, or at least like drill it into your brains. And I need it done for me too. But I've got, I've been doing this for a long time, and I've gotten pretty good at it. Let the market come to you. Let the market come to you. Don't trade just to trade. Don't trade just for the sake of trading. Let the market come to you. Let your setup. If you see an opportunity that states, hey, if I risk $1.50, I'm going to potentially get $3, $4 here out of this. And that risk to reward is what I'm looking for. All right. If the market's trading sideways, there's, you go ahead, scalp it, whatever you want to do. But if you look yesterday on Twitter, I ended up posting a Twitter from yesterday that said, be careful, don't get backdoored. All right. If you go here, because there was a setup happening right before our eyes from the past 3 days, and I didn't mention this. Now let's go look at the S&Ps. From what I have seen or heard, we are down a little bit today. That's what they're saying. And look at that. What happened? Okay, you guys let's go find out what happened. So we got to do some work here. Plunge. After Trump's comments and ASML's weak forecast. I said it. Guys, I said this. This is exactly what I said. So I said, let's see if Taiwan Semiconductor, TSM, continues with the rhetoric of we're booked, we're full, business is booming. And it looks like you're already seeing at an ASML. Now understand this, that TSM is, or ASML is a big component to Taiwan Semiconductors. Taiwan Semiconductors TSM cannot be TSM without ASML. If you guys, for anybody out there that has, you know, done a little bit of research and looked into and knows how these semiconductor chips are even made, so you're seeing it here. I mean, let's see here. So ASML was this morning. Give me one. Okay, sorry about that. I had to grab my charger real quick. Alright, so already weak guidance. Already weak guidance. I posted this yesterday and I said don't get backdoored. Don't get fooled into that long. Alright, so hopefully you didn't get too bulled up. You know, watch that back door, baby. Watch that back door. Alright, so what are we going to look for here? Let's get right into it. Alright, daily chart. Where are we sitting at first? Alright, so we're sitting here. Oh, man, this was the level I was looking at. I was eyeing this level up yesterday. You got to be kidding me. 559. 559. 559. Papa Lima Delta. Papa Lima Delta. Papa Lima Delta. Alright, so let's go ahead and get our watch list together here. Let me post up some of the news. Let me refresh that. Refresh. And let me refresh this. Shares hitting $4.39 at the high for LGBN. Trader Joe superfan with 2 million followers. The 9 best things to buy now. Novo Nordisk, Eli share slide on obesity drug trial. Alright, so global chip stocks fell sharply. ASML, NVIDIA. I was a little worried about NVIDIA when NVIDIA broke its 20-day moving average. Like, there were a ton of tails on that thing. I should have traded that yesterday. All right, so they reported, so they reported earnings that beat market expectations. So yesterday, you guys remember I said, let's see, and remind you guys that it's okay for these companies to guide lower, or not necessarily guide lower, but I really honed in on, do we see more and more CEOs? And I brought up Elon Musk stating, what, you know, the outlook is uncertain, right? The future outlook is uncertain, and I said, let's see if we start to see that more and more, and let's see if we start to see it in the semiconductor space, because again, I brought up TSM as a prime example, the very first one, rocking demand, businesses booming. I said, let's see if we see that again. All right, so it's honestly, I think they're putting it out there. They can buy their stock back at a lower price, whether business is good and or bad. Business could still be good. All right, a lot of these semiconductors, in this sector here with semiconductors, is a lot of big business. Honestly, with this new AI big business, I mean, you're talking chips that are 30 grand, 60 grand a piece, whatever it was. I think it was like 30 grand a piece, 30 grand a pop or something like that. So we're starting to see it. I literally talked about this. All right. I posted this on Twitter. I posted that the setup that said, hey man, this is probably a short, and don't get backdoored. If you're going into today long, I would be worried. And I didn't look at the SPY that much yesterday. So, all right. So we have this flat top resistance, 561. You can see 561 here. I like that one better, 561.50. Again, it's an area. Here's what I'm going to do. All right, so we'll see. We have already popped into 561 and retested it today, all right? So we have this, and you can see that little gap there. All right, so we're going to put a little box there at 560 just in case we can get back up there. We have the 20-day moving average moving up. I'm going to move a lot of these. I'm going to get rid of all these lines, guys. You know, I'm going to get rid of all of them except 5 where there was a level that I marked this 557 level yesterday. This level right here, we have a gap fill. So yesterday, I looked at the S&Ps for just a little bit. We have a small gap fill. Look at this small. Nah, it's not necessarily a gap, but you could consider it a gap. There's still a little gap here from this close to that open. Maybe it is, maybe it isn't. It's hard to say, but I was just eyeing this level up because it felt like we never made the support. Like, you see this resistance here? You guys see that resistance right there? Right there. Right? Flat top resistance. You never really, like, okay, you hit it right there. You did double bottom on it. You did kind of double bottom at it, but is that enough? Because this breaks, right? And it doesn't really, it's not holding that level. 556. I mean, I guess you could say 556 is a level, but all right. 557, 556. That's what I'm going to be eyeing up today into tomorrow. We have Netflix earnings coming up, so I'm just curious if that really helps out this downside action. I mean, I saw this yesterday when we ended the stream, and I said, oh, shit. All right. So if you guys, again, real quick, if you guys don't follow me, head on over to Twitter if you have a Twitter account. And here you are. I said, watch the back door. This was the S&P 500, spiders, and I posted this yesterday. Like, man, if anybody was long at the end of yesterday, it could be an ugly morning. All right. So the S&Ps, let's look for a move back down, a 2-3 day move. Let's see if we can target 556. 557. All right, that's what I'm going to target. Now, I want to get short bounce backs. Also, keep your eyes on yields. All right, Bitcoin's starting to pull back now. I mean, this part of the month coming into the back half of July is normally pretty weak. All right, July as a month as a whole is somewhat strong, but the second half of the month is where, you know, I should say this. The first 2 weeks of July, the first half of July is where that, statistically, this rally has peaked. So, you know, there's some charts that I look at and stuff like that. I didn't save the chart to show you guys. But, all right, so Bitcoin's pulling back. Let's stay focused here. I do apologize. I wanted to pull up yields. All right, let's go take a look at the 10-year. And I think we have so yields have not really moved. What about the dollar? Has the dollar bounced? No, the dollar's pulling back too. You guys see the type of time we're in? It's just, everything is just like the opposite, right? Dollar rises, so do prices of goods. Like, technically, that's not supposed to be how things are supposed to work, but and I think that, you know, that's why gold's doing what it's doing. And again, that's another stock that I gave out on the lows 2 weeks ago. So guys, this might be a nice swing trade here. Like, I look back at the track record, y'all, and I'm like, God damn, if half these people just you know what I mean, just followed along and could understand what it is that I'm telling them and trade the market correctly, these motherfuckers would be a freaking millionaire. All right, you'd be hitting $1 million in no time. In like, I don't know your guys' account, and I'm just, you know, I'm just saying, I'm not always going to be right, but this type of market has had so much opportunity, and I've called them out on the stream over and over and over. Okay, so let me get rid of this. I don't want to get rid of that. All right, so we do have a minor level right here, guys. So let's get back to the SPY. I do apologize. So let's see if we can get a bounce back into this this level up here at like 560. Wait, we're at 560, right? So I can get rid of 561. So at 561, 561. And look, we're just retesting level after level after level. Sorry, just let me get this so we can go back a few days. Okay, so here we go. 550, 559. So 559, if we crack this, we have room down to 556. So that's what I'm going to be watching. I will be watching 559 because it opens us up. Look at this. This consistent upside acts like a brick wall there. So 559, we get a break through 559. Let's look for a move back down to 557 on the SPY. Obviously, the Qs have been your leader to the downside. So if we pull up the Qs, let's go ahead and make sure and double check. Compare. Now again, I'm going to compare some of this stuff to prior day's action. Yeah, like look how far down the Qs are. The Qs didn't even attempt to grind higher at the end of the day like the S&Ps did, right? The S&Ps at the end of the day made a new high. That's divergence in and of itself, guys. All right, so there we go. We have that. All right. All right, so we said 559. All right, so let me get my watch list together here. All right. We've probably had good numbers, but had been a weak stock that all of a sudden rebounded sharply. So it might be noisy as we get through the reaction. I wonder if we could target this 20-day moving average, even the 50-day, man. We could have some nice downside on the way. Because just by looking at this chart, watch out. Be careful out there. Okay, so we have 561. So I'm still on the SPY. Okay, let's see here. Let me remove that. Yeah, I do actually still kind of like that level at 562. Man, that's a hell of a wedge there. Victory in November has also essentially pushed in the same direction as this rotation that you're getting from. All right, guys, sorry about that. Let me just go back here. All right, so SPY. Sorry, I'm just writing this stuff down real quick. All right, again, get your pens, get your papers. I wonder what Apple did. I wonder if Apple had a gap down. Has anybody looked at Apple? That was a nice trade. I forgot who called that out. But it's really awesome. And that's why I started this channel, was to, have a community where we could all, work together, breaking news, trade ideas, all that fun stuff. I mean, nobody does it. Nobody does it. Nobody does it. I don't blame them. You can't even give this shit out for free. And half of them, don't. I'm not going to, I'm not trash talking anybody, but. All right, so the S&Ps, let's see here, 559. So we said we were looking for a break of 559, correct? Yes, I think we were looking for a break of 559. Dude, what is going on? Yeah, so we're going to look to see if we can get a break. Look to see if we can break 559. Again, I would like to get some upside action. So here's what I want you guys to pay attention to. All right. Notice how we had support yesterday on a SPY at 562.20. All right, 562.10. Notice how we went down to it, hit it. Now we are, and then what's next? 560, 561. Bounce back into that, reject. Here, support, hit that. We'll see if we can reject. You may not reject here. You might, but it's hard to say here. I think you'll probably bounce. It looks like you're starting to get some volume to come in there. All right, so the SPY, we're gonna look for, where would our entry point be? I would honestly like to get back to 560, you guys. I would really like to get 560, if 561. 561. See, we broke that as well.
Advent PAI CDNR bids value European value business at up to 15 billion euros. That's from Bloomberg. Then November Yankee.
562. All right, so that was that previous high. 562. 561, 562. All right, so guys, if we end up breaking back above 560, I'm gonna look for 562 to get short. I want to see if we can get back up to this area. We have to get above 560 though. We have to get above this 560. So ultimately, I would like to get a test back up at prior highs again. We could, listen, you've seen it last week and this week that we could just continue to make new highs. I gotta hurry up. I have to hurry up. But I would like this level here at 562 to 562. No, we're not getting that far. I mean, we could, but let me see here. Fuck. That sucks, man. Yeah,
WPX Wallbox expands commercial offering in North America through Charge Land Partnership. That's Whiskey Bravo X-Ray.
562.
What's your reaction to the selection of JD Vance as VP? It's a good pick. It's a good pick, there's no doubt. So, a couple things you want in a VP. You want a clear contrast with the current Vice President in Kamala Harris, and you have that. I mean, he's a Marine. He's incredibly brilliant. I mean, this guy had a book and a movie written about him and done about him even before he was in the U.S. Senate.
557, 556.
Well, he is a U.S. Senator. He's only been there about a year and a half. He's an outsider, right? He's seen as somebody that can come in, do things a little differently, have the voice of the American people, disrupt this establishment that everybody kind of wants to move on from out of Washington, D.C. And he clearly is.
All right, so everybody got that? 552 or 562. 562, 563 rejection. All right, we're going to want to look at technology today, obviously, to be short. All right. I think I don't know if we're going to be able to get a short off today. I'm just being honest. I think everybody could get thrown for a loop today. I'm just going to say it right now. I think that downside move pretty much was enough to really do it all in pre-market and grind back up to previous highs. So we are 589.50 right now. Yeah, we'll watch this level here, 592. The low 490s, and see if you might even get another test back up there to 495, 496. Say boom, you held, tried to bounce, you break it. Yeah, I would look for that area right there. Oh, but look, there's your 20-day. That's why. Right there at that previous double top. All right, and I got to go back to GameStop. Damn, that 50 day is just ripping higher.
It almost sounds like an oxymoron. It almost sounds like mostly progressive policies, and that JD Vance adheres to these completely, and it's going to be, he's going to be in Trump's ear the entire time talking about this new populist movement. And everybody I ask about it says,
there's no way, but that's not stopping these people from saying they're going to have.
Got a little low there, 494. All right, so QQQ. I don't really want to worry about these indexes too much because we understand what's going on here. I wanted to delete a lot of these levels so that I could just have a fresh canvas.
I think you're going to see a lot of a similar type of reaction in the second term. I think the big question, it's the right one that's been talked about, is tariffs. Right?
Took it all the way back. Boom. Boom. So I do got to put 494 here. I do got to watch 494. Because I think even if we can reclaim 494, you could see some really nice upside to 498, if not 500. All right. So that's that. And look at that wick. What did I just say? What did I just say? And you put that wick in. Guarantee. Watch if we don't go to the top of that wick where that order was just filled. That's hilarious. All right, so you got to be able to get back above 496, but 496 is the area that I would look for. If you guys look here, look at this, right? Support, support, support. We break it, try to reject it. You reclaim it. We reclaim it. You reclaimed it Monday. You broke it. You closed kind of at it. You come in with the gap up, then you break it. Resistance, resistance. We come back up, resistance, 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 and then we break above it, and you pulled into it to try to rally, and then you got backdoored. Again, follow me at Ivy League Trades. I posted this right after the bell because I wasn't paying attention to the overall markets. So if you got long yesterday, I do apologize because I didn't pay attention to the overall markets yesterday, but there you go. Watch that backdoor. Whoo, boy. And boy's hurting today. All right, so I'm going to write that down. You might see the Qs possibly be bullish. You just hit that 20-day moving average. So now I'm going to kind of just watch the rest of this pre-market on how the day pans out. I still am going to lean technology to the downside, but I think that this move pretty much just did it. Like, I think this was enough to bring in some buyers, at least to take today, maybe even into tomorrow, back up to 496, 498, and then we'll see if we can start to sell this thing off again. If they rip this thing up quick with like a lot of volume and this thing just floors back to the upside, you know, that's what they've been doing. You guys saw it last week, and we'll see if they continue. Because what that's going to do is it's going to take those indicators and put them back into, you know, oversold positions on all, like, on longer term time frames. Okay, right now you should see, we should see some dip buyers. Yields are still pulling back. It's not like the dollar ripped. The dollar's dropping. That's good for equities. The 10-year US 10-year, it broke this level here, so it's like we're living in backwards land. All right, so I guess we're going back to 4% there. All right, so that's that. What did I say? Bounce backs to 490. Watch 496. Is that what we said? And we're gonna get into GME and all these other tickers. I gotta hurry up. It's freaking 8:30. I talk way too much, man. 494. So QQQ. We're gonna look for pops back into 494. Oh, look. So we're below the support level there, and we made it a resistance. Sorry, guys. Hold on.
But again, the more Joe Biden tries to nail, Joe Biden's got a lot of other problems right now that he's worrying about the institutional rules
Okay.
in the Justice Department. How about
Yeah. So you guys can see here 490, 490, and you have massive support down here, guys. You guys see that support? Resistance, resistance, resistance. So you pretty much are in a support level. This is a really nice break, and look for that retest, right? That was the retest in my opinion. Maybe we pop from here, and then you get a pullback off of the bell to shake some people out, or put them into the short side, and then we see this market go higher, at least for tech. So I'm not falling for it just yet, because All right, so that's that, guys. You feel me? I'm looking long here on the Qs. If I'm going to trade the Qs at all, I'm looking to the upside. All right, I'm looking for the upside. You know, if we break the 20-day and we break 487, then okay, different story. All right, then a different story. 487. Let's see here. 487 20-day moving average. I want to see us pop back up through 491. Is that 491? I just hate this, man. Yeah, 490. 491.25. 491.25. All right.
I'm Landon DePasquale, digital strategist at AmericanEagle.com. Our clients have complex website and digital needs. Ecom options needed an engaging.
All right. You might be safer and better off,
We solve digital challenges like
you know, trying to get back above 492.
the same sort of craftsmanship.
All right, 492 might be the level, and that could be a level to look for to reject. All right, 492, and we'll go here. Let's go to a 15-minute chart. So, yeah, 492. That's what I'm going to be watching for. If we reclaim it, or do we reject it? Reject or break and hold equals a target of 494, 496. 494, 496.
Every day, more dog people are deciding it's time for a fresh approach to pet food.
All right, so that's the SPY. All right, does that make sense, you guys? Let me know in the chat. Again, hit that like button for me. Thank you guys. Whoever was a subscriber yesterday, we finally got to 270, man. That's awesome. Let me turn this on. All right, let's get into it. Let's get into some stocks here.
Gusto is the #1 choice for small business care.
Let's look and make sure that we don't have like a 10-year bond auction or something. So we have building permits coming out right now. Fed barking. We have industrial production. That's so weird that we have it at 9:15. I thought I went through this and we didn't have much. We have 17. Okay, so we do, guys. We do have a 20-year bond auction. So let's see if we get our pop up to the up till like 1 o'clock or so, and then we look for this 20-year bond auction to guide us either higher or back down. I think that's our catalyst. I really do. All right, let's get into it. All right. So we have ASML. We have a lot going on this morning. All right, Bloomberg News reported Biden is contemplating stifling trade restrictions over U.S. concerns companies are giving to China. NVIDIA pullback. So semiconductors are in the face of news. We'll get into that. Five Below. Discount retailer plummeted more than 15%. This might be a good short. I think Five Below might be bankrupt like in the next few years. I mean, it's a store people go to and stuff. I just think that it's just, I just don't know if they can sustain operations. Just my opinion. I don't think they, or they make enough just to operate, and I don't think they make very much money. Once again, banks strong. All right, U.S. Bank Corp. The bank stock rose more than 1% after the second quarter earnings topped expectations. All right, JB Hunt pulled back about 3% after second quarterly results missed estimates. The firm reported earnings of $1.32 with a revenue of $2.9 billion. So, you know, they were expecting 3, so, you know, less freight, less demand from the consumer, higher prices, higher insurance, higher fuel. So that's taking a toll. VF Corporation shares jumped 6.8% after the eyewear group Essilor said it agreed to acquire Supreme brand from VF Corporation. Supreme. Oh wow, really? The transaction is set to close by the end of 2024. So Omnicom, the corporate communications company, slipped more than 3%. GitLab and Datadog. Okay, cool. All right, shares of DevOps software company soared more than 14% following Reuters report that the firm was exploring a sale after receiving acquisition interest from firms including Datadog. Shares later slipped more than 3%. Software company.
Housing starts 1.353 million versus 1.3.
Oh, I thought they said sell. I'm like, why would that sell off?
Versus 1.4 million expected.
All right, so we're going to look at GitLab, Datadog, not necessarily Datadog, but GitLab, GTLB, Johnson & Johnson. Shares fell marginally back on the back of disappointing full-year guidance, so Johnson & Johnson pulled back. That's a shame, man. Johnson & Johnson's a good company, at least you would think it is. It's just, you know, they spend a lot of money on little things that aren't really used. So, semiconductors, GTLB, we have GameStop. So here we are, right? 2 days in the market. I haven't traded really anything. I'm pretty sure. No, we traded DJT. I traded DJT Monday and just made like some small money. So, you know, being patient, letting the market come to you. So here we are, semiconductors, GameStop, DJT, right? You know, we still have Netflix earnings. Like, so let's get right into it. If you guys have tickers, throw them in the chat. So GTLB real quick, and we'll go into GameStop. Let's see here. So I'm actually not going to do this. I'll look at this one later, but this one actually is big news. This could be a really nice trade here. We get pullbacks on this. This could be a really nice trade that could make us some really good money, because this thing might sell for a lot, and the valuation's pretty beat up right now, guys. This is trading, understanding things like that. You guys remember Credit Suisse? Oh, what did the Saudis buy them, bro? If any company comes in to buy another company that is distressed and they have to buy them because they're distressed, they're going to buy them at a distressed level. That means they're not going to pay for what it is, for what they're worth, because they're not worth what they are. Because if they are what they're worth, they wouldn't have that trouble to begin with. I thought it was so funny. Like I can't forget it, you know. Sorry, my stuff is frozen, guys. I was just trying to. Okay, there we go. I got it. See how it went back to the hand? Alright. Bro, what is going on? Oh my gosh. My stuff is frozen. Come on. Okay, there we go. Finally. Okay. 200-day moving average. Flat top resistance here, GTLB. I'm going to eye up this level here, okay? So I'm going to target $60, even though we're at 57. $60 on GTLB. $60 edit properties. Let's go to 2. Bada bing, bada boom. Now, where's the entry point? The entry point would be at this previous high. Gap fill back here to the left. Boom. That would be our entry. Alright, then you look to trade this thing off of $52 and look to bounce this thing back up into 60. Listen, if you get through 60, you have a massive gap fill here. That's why this thing could be a big hitter. Up at $75. This might be a swing trade if they're going to buy this thing out, because this thing is at a discounted price. Alright, and that's the whole purpose of them buying it out. So let's keep an eye on this. This is how I'm going to trade GitLabs, guys. That's how I'm going to trade this. I'm going to look to see if we get pullbacks. We'll look for intraday pre-market areas to buy pullbacks. And we'll look to see if we can break $60. If we break 60, we hold 60, and we look to charge the $70. Get yourself some time. Huge trade right there. Watch. I guarantee it. Watch. It's going to be a nice trade. I feel bad for anybody that left the stream that, You know, I understand being worried about GameStop, but GameStop really isn't moving like that unless they did an offering or something. All right, so we have that. Boom, 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 boom. Oh, look at that Head and Shoulders there. Oh man, they got lucky. They got lucky. All right, so that's GTLB. We'll look for pullbacks. 56.
Now, Rick was talking about mortgage rates. We did see the average on the 30-year fix well over 7% for all of June, and so that has builders seeing their buyers come in and
56.
about those decisions. We saw builder sentiment
Hold.
actually drop, but the 6-month forward-looking indicator on builder sentiment was actually the only part of that index that was higher.
56 holds.
It was at the highest level of any other of the components on the index.
Long
So we do expect
through
to see
60.
buyers coming in over the next 6 months, but current buyer traffic very low right now, and so that's why you're seeing that month-to-month housing starts come down. Still better than a year ago, but if we continue to see rates come down, which they are now, they're in the
Target
high 6%
is, what was it again?
If they come down with a potential cut
So that's
from
where
the
we're
Fed in
at.
September,
Target is
then we could see
75.
buyers coming in. Builders are going to have to step up and meet that demand because there's still very little existing supply on the market. Back to you guys.
All right, I'm writing swing on this one.
Builder sentiment is most closely tied to mortgage rates, maybe closely followed.
All right. I'm going to keep my eye there on that.
So we got the July number on builder sentiment yesterday. So they actually did that survey just last week. So it's the most current indicator. We have again seen mortgage rates come down a little bit, but they've been back and forth. And so I don't know if the builders think they're still going to come down this month.
Let me make sure. We have sound and everything, correct?
9-month supply of
We do have sound, right?
product right now, and that's very high.
All right.
6 months is considered balanced between buying
Okay, so there's that. That is GTLB. Let's keep going. So we'll go into. You guys want to go into GameStop right now?
Okay, Diana, thanks a lot. Great to see you.
Let's see. Go into the charts.
Former Boston Fed President Eric Rosengrens is going to join us, so we're going to talk about his reaction to former President Trump's new.
All right, so we're holding 28. We're now holding 28. I was hoping to get 27, guys. I was hoping to get 27. This thing's ready to go. This is crazy. I just don't know if we can get enough people to step in here and really start, you know, getting a hold of this thing. Okay. All right, so some people were so $30, guys. Like seriously, $30 is the level. If we break 30, then shit could be really on. Like seriously, you could really see a you know, a squeeze here. That's the level I'm going to watch on GameStop. It's $30. All right, GameStop, $30. I would just be cautious of an offering, okay? You gotta watch out for an offering. Look, we didn't hold that level there at 28 or 29. So if you guys see here on this 4-hour chart, this like support level up there, it's like $28.75, $29. You can see this little range. I had that box there for a reason. You know, this is still a nice support level. So if 28 continues to hold, then I think you look for another run back to 30. And I think $30 might be trouble. I think you could run into trouble up there. Thank you. Yes. Yes, I did. I did. Yes. So, guys, if you guys learn anything, or if you guys want to give back, if we help you guys make any money today, you can donate, and any contributions, again, go to the stream and not myself. That link is in the description. I just think it's important for you guys to know that, you know, my money, I'm going to make my money. And I also put in stuff for the stream, for, you know, for news, all kinds of stuff, and things that I would like to do. So, that link is in the description for donations, any contributions. If you guys want to set up a one-on-one, or if you want to, you know, work with me, if you want some help, the link is in the description for my email and Twitter. You can message me on Twitter, send me an email at Ivy League Trades on Twitter. Hit that like button, subscribe. We get to 1,000 subscribers. I'm doing a giveaway to you guys, as if, you know, we aren't doing it. You know, we're all as if helping you make some money isn't cool enough. So, all right, $30. Watching $30, guys. Nothing's really changed. We're sitting here holding 28. I would honestly watch out for $29 because you broke it yesterday. Now you're going to open up underneath of it. All right, we're going to open underneath 29. It's not a major level, but it's turning into a major level because it was a minor level that you're gapping below. Chances are we might start to turn that to resistance. Again, I don't know. You know, maybe we could just break this again and just hit 30 because we haven't hit 30 during market hours. Remember, 9:30 to 4 is the peak prime hour for market participants, okay? So nothing has changed for GameStop. 28 holds, I'm looking for 30.
So I think the market is telegraphing that they expect a series of cuts over the next year and a half. So the first cut is indicative.
So 28 holds equals a target of $30. And then, let's see here. Let me go
A steeper rate path cut over the next
here.
through April than I personally would expect. The Fed's been pretty conservative in terms of wanting to be sure that
Yeah,
they're
$30.
well on the way to get to a 2% inflation target, and inflation's still a bit higher than their target.
And then after that, honestly, it's 32. All right, target's 30.
So there's still a bit of a ways to go before we get to 2%.
30 breaks
There's a lot of uncertainty about what
equals a target
will be next year. There's a lot of
of $32.
There's uncertainty about what fiscal actions will be. So I think the Fed's going to move pretty slowly, and I would expect at the press conference.
All right, let's keep it moving. Let's go look at DJT, guys. Guys, let me know how you guys are doing today. What's some of your ideas? How's your week been? Don't force trades. I mentioned this yesterday. I just want to reiterate it. Don't trade just to trade. Not every day. You have to let the market come to you guys. I didn't trade yesterday. I didn't trade. Or Monday I traded DJT. But the market came to us. So, and I didn't even. It wasn't even. It was a base hit trade. I didn't even make much because I didn't. I got in it. I made some money, but it wasn't anything to be even talking about. So it's practically to me a no trade. All right. So being patient, letting the market come to you, and look, if you would have wasted all your time and energy on the past few days, look at where we're at. You know what I'm saying? Look at where we're at. We're finally now in the midst of volatility. So, all right, DJT, let's go have a look here. I hate saying I hate that fucking word. I want to stop using it. We got to look for $30. You have a nice tail here at 36. So this could be a support level. If we continue to hold here for a third day in a row, I'm going to look for a move from 36 back up to, I would look to break the, this is a tough level too though, 38. I think you got to watch for 38. I think you got to watch 38. If you hold 36, you got to watch 38. If you break through $38, then it's the 50-day moving average. It's 42. All right, so let me move it. Let me move this over.
As it relates to Jay Powell, seemed to suggest that he would like to keep him in place. until this term ends. But if you really were looking at some of the wording, there was an implication that if he didn't do what the president wanted, that maybe he would fire him early. There's obviously a big legal debate about the independence of the Fed.
Man, that's the support levels down at $31.
Yeah, I have no idea about the legal implications. I think it's unlikely that there'd be much benefit to doing that, and there'd be no reason.
So it broke 36, and now it's trying to reclaim it. Let's see if 36 breaks. It may not, but... So here's what I'm going to write down. All right, this is what I'm writing down. Moves back to $38. 38. DJT. So we're going to look for $38. Well, we're going to watch 36. We're going to watch 36. 36 holds. 36 holds equals...
What is it, Eric? I don't know what the number is anymore. I think it was about 450, right? Maybe less.
A target of 38, right? $38.
The chair in New York, you get more. Right? Isn't that right, Eric? I think the chair in New York gets more.
38. And then really it's like 38. Then you just go right into 42 in that 50-day moving average. 42.
There is some precedent that Congress, or that the Supreme Court has taken up a case. The only time this has happened was when...
All right, so that's what I'm watching for, you guys.
It was at the FTC.
Now, if we break,
Over policy differences. That was
if this breaks,
Humphrey, the guy this happened to, sued for reinstatement. He died while the litigation
I think you got to look for the 20-day moving average,
took up the case. And
which is a no-brainer. I think that one's pretty obvious. I think that's obvious. Let's go look and see what we actually think, though.
that is the closest legal precedent there is for it.
Eric, thank you.
Thank you.
Coming up on the other side of this, inside small caps recent
Oh, that's what that line is. I get it. I got it now. All right.
here, and then
Sorry about that. I kept seeing that line, and I'm like, what the hell is that? Okay, so you're seeing here how we're pulling into 35. Yeah, it's like $35. You can see there's a minor level of support here. Damn, so see if you don't use the daily chart like you said. So you guys can see right here, right? Look at that. Pivot low. Pivot low. All right in there. 38. You break it, or you held it right there. So support, support, support. You break it. It reclaims it. What's it do? It regains it right here. Breaks, comes obviously back up. So, and again, resistance. Gets above it. Holds it. Okay. Breaks, rejects, right? That tail is a rejection off of it. It gaps above it, pulls into it, bounces, fails again, bounces back into it, and then it starts to downside. Then the news comes out, it gaps up. So $36, $35, that whole area there is what we're looking for as support. I think we can try to get a bounce back to the 50-day moving average is what I'm kind of looking for. I'm looking for like a bounce back to this previous pivot high. You didn't quite get there with yesterday's price action. And look for like 40, 41, 40, 50. And look to reject, bounce, and then see if it rejects. Or if it bounces, gets through that level, and then it holds 40. Watch out. Boom. Blast off. That's how I'm playing this. Does that make sense? So if you guys need the levels again, let me know in chat. It's pretty much this pivot high here at $40. All right, but the support level, again, we still have to hold 36, 35. All right, we still got to hold that. So I'm just saying, right now it's holding, and it looks like it's going to. And if it doesn't, I think you have a quick fake and, you know, a quick like shake and bake where it puts them into the short, but then it rips right back up and higher. Alright, so that's that. So you guys can see now, we already tried to break it, but then it quickly recovered it. Alright, let's go have a look real quick to the Qs. The Qs are still sluggish. The Qs are still a bit sluggish here today. Still sluggish. Let's go into NVIDIA and the semiconductors. So NVIDIA is the, wow, are you kidding me? You gotta be kidding me. We're already down to 120. I should have took this trade. So yesterday on the watch list, if you were with us pre-market, I told you guys yesterday, look to see if NVIDIA, if it breaks that 20-day moving average, look for NVIDIA to get back down to the low 120s. Mid to low 120s. Alright, 125 and then 120. So let's go to the daily chart. I gotta go get a coffee here in a second.
Chief Medical Officer, early 2025, that's
She's sick if you. I don't know, but most of them make it.
Those are the injection ones. This is the ones that they call. I think it's this for people that aren't suitable for the other ones.
All right, so we have some support here right at 120. I got to get rid of these lines. I feel like I do. I got to get rid of some of these lines, man. We're not up there. We are not up there.
I don't particularly care. I mean, what you want. All right, former President Trump telling Bloomberg in an interview that if elected in November, he will curb inflation by opening the United States to more oil and gas drilling. Joining us right now to talk about this and the state of the American and global energy.
So this is really our level, was yesterday's close. Let's see if we can get a reversal to come in here.
And let's just talk.
It's a nice level there at 125 or 126.
We've seen very low volatility.
So we got that.
Oil is not something we talk about all that much because it's come into a range that's fairly comfortable for both sides of the equation.
Remove. Remove. I feel like I should just remove it all, honestly.
NPR neighbors announcing preliminary operating results. Quarter ending June 30th. November Bravo Romeo NPR. Company expects that for the 3 months ending June 30th, operating revenue to be about $735 million.
So very much in the middle of a range. And implied crude oil price volatility is now at a 9-year low. And while we had always predicted that
adjusted EBITDA of about $218 million.
120. Mild level down here. 120. 114.
Okay, so you think there could be more at play. We did have an analyst earlier this week who said that, look, there are a lot of areas of the equities market.
I think we got to target 125, you guys. 125, 126.
His point was that more drilling that might come with the Trump administration might be good for consumers, but it's never good for suppliers because more oil means lower prices.
Regulation in the oil sector is definitely an area of
TSLR completed solar raising $10 million from Chinese energy company.
Second Trump
Sandy
administration,
Romeo.
you would see some regulatory easing. For instance, an expansion of leases.
Alright, so support. Alright, so we have 120 there. 120 is the level. We'll see if we can run a test back up here to like, 126. Yesterday's close. So this morning, for those that don't know, if they're wondering why the markets are weak, And again, you know, I ended up posting this on Twitter, and I'm sorry that I didn't see it, you know, at like yesterday's stream. But I noticed yesterday that we were setting up for failure, and I posted this of the S&Ps. Don't get backdoored. And I think some people may have gotten backdoored. Alright. That is a reversal setup. So, semiconductors. Biden administration is contemplating stifling trade restrictions over concerns the U.S. companies are giving to China too much access to domestic semiconductor technology. NVIDIA pulled back 4.4%, TSM, and AMD declined 4.7%. So take notice, TSM and AMD, they've fallen up more so than NVIDIA, obviously, and 4.1 for ASML. ASML reported earnings, which sells semiconductor equipment for chip makers, sank more than 8%. On the news, which overshadowed better than expected quarterly results, the VanEck ETF SMH was nearly 4% lower. And AMD declined 4.7 and hold on. Okay, so 4.7 was for TSM and then 4.1 was for AMD. AMD didn't pull back as much, which is good because it's already kind of respectively sold off. ASML, which was equipment for chip makers, which I told you guys for TSM sank more than 8%. On news, which overshadowed better than expected quarterly results. Oh, so they did beat earnings. Okay. All right. Better than expected earnings. All right, let's get back to business real quick. All right. Let's keep it moving. So, what I want to do, guys, is look for a move back to 126 on NVIDIA. I want to find support down here at 120. Look for a move back to 126. 126, 128. Can you guys see this level here at the top right of my screen? Look at this. Resistance, resistance, resistance. Support, support, support. Support, support, support. Support, support. Resistance, resistance, resistance. Okay? So 127, 127, 128. Shit, sorry about that. I almost fell over. Alright. Sorry, just gotta fix my chair. Okay, NVIDIA. So, where are we right now?
Now everyone's so productive, they're operating at a higher gear. Now their network is self-configuring.
Alright, so 120.
So their IT team deals with up to 90% fewer network trouble tickets.
11967.
Sound barrier? That's the now way to network at work. With real AI, putting you in the fast lane.
Don't miss a members only event.
Hold on one sec, guys. I don't want to go crazy on this, but yeah, 120, guys. You're gonna have to give it an area. Like if we do test 120, 120 support. All right. NVIDIA.
Well, now you can have a gorgeous new bathroom shower that's safer at a price you can afford with a one-day jacuzzi bathroom model.
It was done the same day. We did not have to wait. It is amazing.
I would give this whole experience an A+. I definitely wish I would have called sooner.
From soft close shower doors and adjustable shower heads to features like grab bars and custom seats that combine safety and style. It's never been easier. Get your free design consultation. Schedule your
All right. So again, I'm gonna look for holds and moves back to 125.
Quick installation and no interest and no payments for up to 1 year. Go to jacuzzibafree.model.
Yesterday's low 125 and the 20-day moving average.
800-605-6816. Call now.
That's what I'm looking for.
Welcome back to Swag Box. Small caps, perhaps the biggest story in the markets right now. I want to get straight over to Dom Chu, who's taking a look under the hood. What are you seeing?
So Andrew, I'm going to show you, it's only been in the last couple of weeks that the small cap story has really taken off. That sizzle has really
125
here. But I'm going to show you the year-to-date chart just to give you an idea.
127.50.
The last couple of weeks. The blue line here is the Russell 2000 ETF, the ticker IWM, and that spike higher just cues is what's really been driving, again, underperformance, but a big catch-up trade right now. As for what are the sectors and industry groups that are driving some of it, about 35% of this particular Russell 2000 ETF.
All right, Prime Day results are in, guys.
$60.03 versus $56.64. So from the same period on Prime Day 2023, that's Alpha Michael Zulu November. About 3 cents average order. Average household spend in the first 32 hours of Prime Day is about $126.54.
You got Wheels Up, Huma, and Aurora. These three stocks have made up the biggest moves on a top 3 basis of any of these small cap stocks. And the reason why it's important is
128.
autonomous driving / electric vehicles.
And that's AMZN.
The top 10 with regard to the best performers on that kind of month-to-date.
All right, so that's NVIDIA. 125, 127 to 128. We'll look for bounce backs up into the 20-day moving average.
UAVS, Ag Eagle announcing drone sale to National Department of Transport Infrastructure in Brazil. That is Uniform Alpha Victor Sandy.
There may be some underlying rotation going on away from like the Magnificent Seven into some of the smaller names. That's why the NASDAQ is on a relative basis not doing as well. Make sure you join Small Stock and Series next. Bye.
Let's go look at Amazon, AMD, AMZN. Let's look at Amazon real quick. It's not even really moving. All right, guys, another day. I'm ready to dig in that. You know what? Again, if you could hit that like button, subscribe if you have not already done so. If you have any questions, post them down below. This is probably, again, I said it last week. I've been in the process of getting some things together, and we'll probably be going live like a few days a week, maybe like 2 days a week, like Monday and Thursday or something like that. You don't have to join the Discord because it feels like, it's just like a lot of time and energy that, I tried to build a community here and it didn't necessarily work out too well. We have some people here, don't get me wrong. We have some good traders, some good ideas, yesterday. I need to do a better job. I need to do a better job at the streaming part. But yeah. So, AMD. Nice pullback here for AMD. Let's go look at the daily chart. We have a really nice pullback here on the daily, guys. Really nice level there, 174.25. 174.50. Sorry. 174.50. You've had this pullback was nice low volume pullback. Let me make sure that, because I haven't looked at AMD in a while, and I want to make sure that that 20-day is in fact on where it should be. Keep an eye out for this 100-day moving average also, because it could very well just pull back to test that. But other than that, man, this is a nice support level. I think this is your range. All right, 175, 174.50, longs to 185. It's a nice move there. It's a pretty nice move.
ATRA, Atara Biotherapeutics, announcing FDA acceptance.
There's a little bit of resistance. Support, we broke it. Damn, I don't understand why this thing is so overbought on the daily. It makes no sense at all. Seriously, it makes no sense. There is no reason why this stock.
Russell went up 55% in 17 months. We need to see a rotation within the Russell.
Damn, this is a really nice weekly setup, guys, at 174. Oh shit, we're at 169 now? Are you serious? Bro, that sucks. So if you guys look here, this weekly chart pattern is actually really nice. Really nice. Alright, cool. We're starting to recover it. We are starting to recover it. So you can see here at 174, that pivot high there. You just pulled back to it.
J&J says continue to expect innovative medicine sales growth to be lower in the second half versus the first half of 2024. She would expect it to see a STELARA biosimilar in Europe. She says while company had COVID vaccine sales in Q2 does not anticipate any future sales. That's due in November. Juliet, J&J.
It's too early to buy GME Aviation. Why? It's going to be a $70 trillion.
$9 trillion.
He remembers. Well,
Because it struck you at the time.
Did of course, I can't remember the number anymore. Well, David, you did. $9 trillion. This was a Morgan Stanley report. Just to refresh, I believe that yes. Maybe you just stop me in my tracks at the point where they say yes, the aviation market for these kinds of the flying plane flying cars.
That's all back. I mean, now there's trillion. I feel more good. Did you say we'd be safe in Foghorn?
75. So AMD.
No, I mean, I don't want to make too much fun, but I do. This is not the list.
I still got to go to Tesla. Like, we have a lot to go through here. 178.
But my problem is that we can discuss this list.
175.
There's a video.
I mean, you go to Starbucks, which no one does anymore, and you say triple venti cappuccino with froth. Well, this is what they produce over and over again, which is why the quarter is so hard. It kind of brings us, Jim, to slightly larger names that are issuing a lot of downside pre-announcements. We looked at Spirit. We mentioned JB Hunt's guidance. Five Below, of course, is a story today. Let's hit some of these Spirit. To talk about a prepackaged bankruptcy. Now, they were going to merge with JetBlue, and it was going to save them. That was broken up by antitrust. I think the Trump administration might have let that one go through. I don't know. They take that Palm Beach trip and it was going to raise the rate. That's a Palm Beach trip.
Alright, so what I'm doing here, guys, is...
I don't really know it's worth. I mean, what's the market cap on this for?
It's not big anymore, but Five Below.
One of the names you were just talking about, right? It's a tiny little company.
I would like to look for a move back to 175, 178. Alright. So that's that. I'm giving you guys all my watch list for free. If you guys could, you know, we just asked that you guys give back to the stream and hit the like button, subscribe and stuff, and you know. So. What time is it? It is 9:07.
When you say hurt by China, you know, we obviously over the last couple of days saw weakness in high-end luxury names such as Burberry.
And look, what I tell you, DJT. DJT, again, pulling back.
Competition. Too expensive. They have $5. You know, they.
All right,
well,
but you didn't answer the question. What
do
about
you think
China?
it is?
Hurt
what do you
by
think
China.
It's a sporting goods store where if
No,
it's Five Below, you buy their stuff like VF Corp. What you see the deal with VF Corp? They sold
an answer
the
when you
skating.
said they were hurt by China. What they were hurt by?
No, it's just you can't. There's a problem. This stuff costs too much to make, so they can't stay below Five Below. Plus, they also had those self-checkouts in the front like CVS, where I still, Carl, I'm hidebound. I pay.
In person.
Yeah, well, I use those machines. Now, most people just, you know, like,
you
hey,
actually
I
give them your money.
Yeah, David, there's a CVS in West Hampton. I have paid, and I feel like such a sucker.
Do you?
Yeah.
Yeah, the same way getting on the subway every morning. I feel like, hey, I'm paying.
You don't hop?
No, I don't hop. I would be so at this point.
That's an Olympic sport.
I can't hop.
That's just
or squeeze even.
The jump turnstile.
No, I'm happy to pay. I wish everybody else felt similarly, but they don't.
It's good to have you back.
Oh, it's good to be back.
Yes, I'm sure it is.
It's good to be together.
Lloyd. What is this, the California room of The Shining?
Meantime, it's a rough morning for the chips today, including NVIDIA, with the U.S. now reportedly mulling a ramp-up of its chips crackdown on China. According to Bloomberg, the White House has told allies it's considering using the most severe trade restrictions available if companies like ASML continue giving China access to advanced chip technology. Meantime, you got this interview in Bloomberg Business Week with former President Trump, claiming Taiwan took about 100%, he says, of America's chip business and should pay the U.S. for defense. In his words, Jim, how stupid are we?
Yeah, well, I mean, I don't want to say that that's kind of, it's an ill-advised position, because what happened is the Taiwan Semi, the man who runs, Mosheng, he was here. He recognized that they have many more engineers in Taiwan, because, per capita. It's much cheaper to make things there. So obviously the real intellectual property is KLA and its Applied Materials, ASML, and of course, Lam. So those are the ones that have been at the forefront. But the president has said over and over again, you can't keep sending this stuff, ASML. We have the ability to stop you. And like ASM was basically saying, well, I don't really care about what you have to say, President Biden.
I know they have, although, I mean, the company was based and created as a result of U.S. technology, certainly its history in terms of lithography and everything else. It's obviously very important in chip making.
Very.
TSMC, as you might expect, a huge customer. That's in Taiwan, so that's not what we're talking about here. But a number of these chip makers are finding themselves out of a market where other competitors are able to benefit from it.
Correct.
Although at the end of the Bloomberg story that basically is the key here, I did kind of laugh when they said the U.S. export controls are costing affected American suppliers a total of $130 billion in market cap. I kept thinking $130 billion in market cap is 1/30th of NVIDIA, or one day, a move either way in NVIDIA.
Okay, let's understand that Applied Materials already took the hit, about $2 billion. Lam Research took the hit because the president said, listen, you can't give them the latest and greatest. ASML didn't. So, I mean, level the playing field. Now, of course, because the market's so stupid, ASML goes down and Lam goes down. Applied Materials. Lam and Applied Materials have already had the hit. ASM hasn't.
Although they did issue this Q3 orders forecast that was light.
Well, it's still up 54%, but they did say it's going to be the same as 23. That was surprising to me. I mean, but look, what matters is that ASML has not played ball, and the administration's absolutely right to go after them, given the fact that they haven't played ball. But let's understand that Secretary Raimondo, Commerce Department, has done everything she can to make it so that key semiconductor plants are here, which is why Intel's up, because it has really embraced that. But I think that the president's saying that Taiwan stole it, so therefore Taiwan has to pay protection in order to get...
that's a different president you're talking about. You get people confused here.
Oh, okay, so candidate Trump is saying that you need protection. Now, I think that if they want to pay, they have to pay protection. They have to pay like insurance.
Protection money, right.
Yeah, well, that's the same position he has with NATO, okay?
Yeah.
And there's no give without a get is Trump's
No, but
view.
all these things are resonating in the market today. Both the story being reported by Bloomberg about potential crackdowns on those that are supplying, continue to supply chips.
And that's President Biden,
not clear to me these bans ever work, because the Chinese are effectively increasing their output and sophistication of chips. Huawei has been able to operate with a new phone pretty well. And, they're going to create their own ecosystem that's going to have no part of U.S. supply in it and be probably just fine. But separately, then you've got this Taiwan comments from
you
Trump.
can sell NVIDIA because it's up a lot, and you're nervous and you're scared, and President Biden's after him, and Trump. But
isn't your club meeting at noon today about whether or not you buy tech at a discount?
Exactly, and I think that what's going to happen, you have to be a member of the club. But the one thing I would tell you is that knee-jerk moves have historically given you a chance. That's how we build our NVIDIA position, because people felt that this thing is just nonsense. You buy, but not. You have to do it slowly.
We'll get some more on what the former president said about TikTok and Jay Powell and corporate taxes. We are on track for a sharply lower open. Interesting diet of downgrades today of names like Chevron, Qualcomm, American, Morgan Stanley. When we return.
All right, sorry about that, guys. I was just getting down. I was just writing. It's just writing down the AMD is really nice. It's just, you know, I think you get a little more downside off the bell, but I mean, we'll see. You know, I'm not going to rush. I'm going to let these trades come to us. Let's check in on the Qs real quick. So the Qs are still just hanging out at the 20-day moving average. You okay, Turkey? All right. Nice. Okay. Why is this not saved? Like what the fuck, man? Like, come on. I'm so tired of dealing with these charts. You guys have no idea. You guys have no idea. Okay. All right. Let's go here. Let's do this. Let me make sure I did. Yeah, look. Keep time zoomed in. Click. Apply. Okay. All right, so we got that. Where are we at right now? 170 or 169.90. You do have an area here if you do break at 165. This thing could extend to 165. I'm not sure if it does. And or the 20-day moving average. So, again, with AMD, we have a few minutes here. With AMD, I want to see if we can get some buy-side volume in here. Well, you know, again, it's going to depend on the overall markets. The SPY, 562, 563 is what I'm looking for there.
So your standards for installers are pretty high, right? Yeah, Brian, you can have the best window of the world.
You guys remember me bringing that up yesterday?
So we don't hire these jack of all trades installers.
It was like, what, 562 and 563. Okay, so that's what I even have written down. For the SPY, yes. 562, 563. I mean, that's support level, because I thought we were going to get to 561 yesterday, at least test it, and it never did. It just never did. It never got down in there. So, it may be wise to just look for bounce backs into 561 and see if you can reclaim 561. Again, man, if we get going, if this thing really kicks off, I could see some downside. Like major downside. Here's the thing. A lot of people don't think about these things, right? Risk to reward, right? Think about what this gap down is on the SPY. Let's go to the SPY real quick. I still haven't written down AMD. We have a couple minutes here though, so well we have 10 minutes. So the SPY, right? The SPY is going to be down. Let's look. I'm going to give you guys the percentage. Now, imagine if the SPY not only goes... I was going to say. Imagine if the SPY not only goes green, but it goes green 0.2 to 0.5%. Think about this. Risk to reward. All right? Risk to reward. Technically, we're down 1%. All right, we're down 1%. So we're going to be in the red about 1%, depending on where we open up. And think about if we were to go green today and have like a 0.5% day. So you're making up that percent to break even, and then you get that extra 0.5%. I'm not saying that that's what's going to happen, but certainly got to be on your radar. All right, I'm going to look for bounce backs. I'm looking for bounce backs into I am looking for bounce backs off the bell. Come on, man. I was going to say, please work with me. Alright, guys. Let's, alright, AMD. This thing didn't even save. You gotta be kidding me. You gotta be kidding me. That should be the last one I have to save. Alright, AMD. So we're going to open up here at the 100-day moving average. 169. Damn. I mean, I got to be honest, man. This. That was a nice break and retest right there on AMD that I missed. I didn't see that. I also wasn't watching AMD either. So. All right, guys. Good luck today. We have a couple minutes until we open up. I'm looking for bounce backs off the bell. I want to see how the Qs react. Let's see if. Dude, why is this not saving? Let me just go ahead and save it right now. Okay, so it's trying to bounce.
There's a huge sea change generationally in the Republican Party and their approach to the economy, David. This is an era of economic populism, and there's a group of economic intellectuals on the conservative side who spent the past 5 years coming up with a set of conservative populist policies.
Okay, so we have GameStop, DJT. I might go ahead and replace. I can't believe I didn't get that Tesla along yesterday. I should have taken it, but I just didn't feel comfortable in it. And we're underneath it now. It feels like Tesla. See if Tesla tests it again and then tries to go higher. It has earnings. It may just consolidate in here. So, GameStop. GameStop, GME. Again, I was looking for that 27. Moved back into 27. We never got it. I mean, with a gap up like that, I thought it was pretty likely that we weren't going to get it, but could still be hopeful. Looks like, so you guys, I gave you guys my plan for GameStop. See if we can break this, 2850, 2875 level. See if we can, run a test back up to $30. If we cannot, don't fight the trend. And see, that target to the downside would be $27. $27. Let me know down below. How are you this morning? Let me know, guys. How are you guys doing today? You guys ready for the day? What are you guys looking to trade? If you guys have questions, what can I help you with? Like, what are you struggling with personally? There's got to be something I can help you guys, whether it's identify, building your plan, building it correctly. There's got to be something I can help you with. I'm not saying I'm perfect because I'm not, but yeah, it's game time though. I don't know. It's game time. I want to say thank you. I want to say thank you guys for the ones that have hit the like button, subscribed, all that fun stuff. Let's try and have a great day, man. Let's try and have a great day, you guys. We have 4 minutes left. So, went through NVIDIA. I didn't cover Tesla. It's kind of just hasn't made the radar, right? There's news with semiconductors, GitLab. I gave, we talked about this. We talked about look, it's going to freeze. It tried to freeze right there on me. So if GitLab can hold $56, guys, or even if it doesn't, and I get a pullback on this, I would like to go long for a swing trade.
Which is another thread running through all of this. Interesting balance taking place. That's Eamon Javers in Milwaukee. We'll come back to you later on today. We'll take another look here at the pre-market as we got some futures under pressure. More squall.
Again, I'm going to reiterate, just be patient. Let the trades come to you. Don't fight the trend. Let the trades come to you. Just because the sun is up doesn't mean we need to trade. If that's the case, you're not running your money correctly. You're not having responsibility. All right, you got to take responsibility and let the markets come. It's been 2 days. The only thing I've traded was DJT, and that was a small trade, not even worth talking about. So technically, in my opinion, I haven't traded this week. I've been sitting here letting the market come to me. We said yesterday, I'm looking around. I'm like, guys, I just don't see nothing. DJT wasn't moving. GameStop did move, but so you guys can see. Guess what? I didn't waste my time and lose money and put myself through misery. By getting upset because I made a stupid decision. Be great at making decisions, right? And just let the market come to you. Just be patient. I know that it's hard, especially for some that are new to the markets and are enthusiastic and stuff like that. But you have to let the market tell you when to trade. I mean, there is obviously always scalps and stuff, but it's got to be worth it. You got to be able to get paid. Let's have a great day, guys. Thank you, guys. Hit the like button, subscribe. If you guys want to donate, we have a beautiful watch list today. AMD, NVIDIA, GameStop, GitLab. Let's go look. What do you guys think? You guys have anything you guys are watching? If you guys want to throw it in the chat. Let's go. Well, I'm watching these because I want to see. And I'm watching GameStop, too, for a possible pullback. I'm looking for GameStop to get to 27. GameStop still has room. GameStop still has room to the upside, but I think we can get ourselves a little pullback. We'll see if we get a quick pop. We'll look for a pop. Let's see, 28.56, 28.30. Watch yesterday's high. 28.56. Here we go, guys. 50 seconds. Who's ready? Good luck, guys. Let's crush it. Let's fucking crush it today. I'm going to try to. Hopefully they don't rip and scream this thing right out the gates. And I'm not ready. DJT's over here. DJT, again, what did I say? Look for 36 to break, but then regain it. DJT, back to the upside. See if you can break yesterday's support level. Yesterday's low. Yesterday's low a day. Not low a day, but you guys know what I'm saying. This 36.50 level. See if you can run to 38 and run back to 40. DJT, 36 holds. Target 38.42 / the 50-day moving average is the upside target. 4 seconds. 4 seconds. Watching. I'm watching. Bang. Look at that fucking volume that came in there, and this thing doesn't even move. All right, there we go. What we said, quick pop off the bell. All right, man. Let's do it. Come on. Go higher. I want to see if we can take this. Again, pop off the bell. Three-minute. All right, I got the 3-minute up there.
S&P 500 down 58.64 after the open, down 62.80.
All right, let's see here. Post in chat if you guys see volume, relative strength, relative weakness. Throw it in the chat. Okay, post it in the chat. Take profits on GameStop if you're trading this and if you're in it, because they can do an offering at any time. The board can get together and say, yo, Ryan, Offering now, bro. What are you doing? Lock it in. Let's pay some debt off. I knew it. I knew it. It went and tested the 20-day. Went and tested the 20-day. Now we're back below that. Let's see if we can get a reversal here on AMD. Man, that sucks. We're below the 100-day moving average now.
Intel shares popping here again now, 36.55, hitting a 3-month high. November 10 goes
3-month high.
Shares up about 6.5% now on Intel.
All right, guys. So again, I'm trying to figure out what I want to do here with AMD. GitLab pulling back. GTLB. That was another trade idea. Look at GameStop or AMD just pulling back. That's okay. All right, so GitLab broke this level. All right, so there's your 100-day moving average. You're testing the 100-day right now. Shit, I should be getting in it right now, guys. No, no, I'm fucking sitting here messing around with the 100-day. Let's see here.
There's 100 days to go, Jim. So there's a lot that can potentially change. That said, the current president is
Damn, still weak. Still weak.
Said tension between tight U.S. labor markets and availability of labor and desire of firms to
There we go, making a new high, you guys. Making a new high. Look for that test and run back to $30. 29. That's your resistance from pre-market. That's a low volume bounce there. Okay, let's see here. Yo, every day at 9:30, my little girl, my cat, literally just comes in here and just like yells at me. She doesn't yell at me, but come here, love. Come here. So the SPY is popping 560 QQQ. Damn, man, look at this weakness. That's not good, man. This is crazy. AMD's down 6%. There's a test of the 20-day right there. You just tested the 20-day. So I have a support level down here. 165. 165, guys. DJT. Fed cut policy rate is getting closer. Yes, we already know. Let this thing pull back and let's look for a gap fill, man. This could be a really nice trade to the upside if we get it. We just don't have any volume. Dude, look at that downside volume. Are you serious? Bro, that was huge volume. Does anybody else see that on the Qs? Look at DJT rip it and roar.
data is consistent with a soft landing and even less of a trade-off in terms of unemployment. Waller said
All right, 38. Looking for 40. DJT. We said we were looking for a long to $42. $42. The 50-day moving average.
Waller says on monthly personal consumption expenditures, inflation. On monthly personal consumption expenditures, inflation need to see a bit more evidence that this will be sustained. Moderate consumption growth may continue in the second half of the year because personal income data holding up. Waller said labor supply and demand has finally come into rough balance. Says right now he sees more upside risk to unemployment than has been seen for a long time. Wage growth has continued to slow and now consistent with rate needed to support inflation running at 2%.
All right, watch that 39 right there. Watch 39.
Fed Governor Waller.
Whoa, that was monster volume on the Qs. Monster volume. Anybody notice that?
39.16 now. Delta Juliet Tango, Trump Media 39.20 up 6% now.
Fucking Christ. Hold on, guys. I gotta, once again, I gotta fucking do this shit.
Shares of Intel 37.16 the high, up about 7.5% on Intel.
You see some headlines out of Waller here. Getting closer to the time when a rate cut is appropriate. More evidence that first half data was an aberration. Cutting too soon would be a grave mistake. You did have Williams this morning as well in the journal. Basically,
All right, volume's starting to ease up on AMD, guys. Volume is starting to ease up a little bit. Let's see. Again, 165 is the level that I have. I don't have the chat up.
SAVA, Cassava Science is ticking higher, off the lows now, further off the lows now, about 22% after the...
So again, let me know down below. What are you guys watching? All right, we're holding up here. Let's try it. Man, this thing might just end up falling. I think we can... Dude, we should be able to get... Move. I don't understand why this thing is selling off like it is. There's really no real reason to be selling off like this. Like, I'm just being honest with you guys. It's a nice double bottom right there. I mean, we can try it. Let's see.
Plus, they are July 26th. You're going to see the closing of the vote on tap, and they may have enough votes to stop tap litigation. Which
All right, looking at 175 AMD.
The vote is of the closure because the courts, I think, are accepting the prepackaged.
Sorry, I know that
For the litigation that around the town
doesn't need to be that bright.
and that makes you feel like, well, maybe the stock's too undervalued. They do have a loss of exclusivity on Stellar, which is
Man, that's really low volume there. Come on, man. It needs a little bit more. It needs a little more. That sucks. All right. Keep an eye out for 170. Hold on. Here we go. What time is it? 172. Gap fill. 174.
Shares of GameStop, GME. GameStop making new intraday highs, 29.44. That's Golf Mike.
29.44. Again, we're looking for
your take on some of the banks. A lot of discussion today about equity trading up 3 times the estimate across the major banks so far.
Yeah, well, Goldman obviously responded well this week to the earnings that you guys covered on.
Okay, let's see here.
AMC spiking to the highs, $5.64. Alpha Michael Shirley
Even though the stock did not respond positively on that
up
earnings day.
3%.
Again, be careful.
On AMC.
Be careful out here. Be careful. It's like, don't fight it. Don't fight the trend here. Let's see. Bang. Can we get that support level right there? Nice consolidation. That's a nice reversal. Damn, that was a lot of shares. Oh, no. Okay, good. I almost took it there. I ended up trying to preview the order. Just trying to give it a minute. I'm Trying to give it a minute. I feel like they're trying to suck us into this thing.
We've talked about this many times. There's a general belief that there would be less
Right there, that should be it.
in terms of overall, but even on antitrust.
I'm going to put this 174 as a target. Right there, that dotted line. Fuck, that should be... Yeah, it's going to break down. Wow. It's got massive volume, guys. Massive volume today. Alright, let's see here. Let's see. Come on, baby. We're holding up nicely here. Well, look, there's a ton of orders there. To the upside. Damn, 87. These things are nice. I should pick these up now for this 80 price. It's still weak. AMD is still weak. I'm not fighting it. It's making a new low. Alright, so I'm going to wait for 165. I'm going to wait for 165 on AMD if I can get it. Alright, 165 is the level that I've you know, brought up. Look at these reversals coming in as it goes down. This is the level. Alright, this is pretty much the level. What is that, 166 flat? Yeah, watch 166 flat also. Dude, come on. They might have just jumped right in front of that. So, no, this dotted line. The dotted lines are for profit and entries. If I put them up there. Again, I don't like that we're below the 100-day and stuff. I don't want to fight this, but I think we might have a shot. Yeah, look, the watch. We're just making new lows. I'm just going to let it consolidate and do what it needs to do. Do what you need to do, AMD. No, not just yet. I had to use the bathroom, sorry. I'm sitting here just being patient for a second here. DJT, I'm watching it to get up to 40 or so. DJT, yeah, see, what was it? 36 holds, target 38. And I'm looking at that 50-day moving at this pivot high here, up at $40, $39. All right, so you can see we're pulling back in. Trying to hold here. Hold on one second. Let's see here. Sorry, there was my cat's in the window, and there was a squirrel that literally just like walked right up to the window. All right, so look at this level right here. Look at that pivot resistance. See if you double top up there. See if you get another run back up there. See if it struggles to get through it. I don't want to miss my trades. I don't want to miss my trades. AMD. Come on, AMD, bro. Let's turn this thing around. Let's turn it around down here. It's just, it's weak. All right, right there. Let's see how we react. Right there. Boom. See if that triggers any buys. Not really. Not really. So far. That's insane. It's down 7%. All right, let it go. Oh, AMD. Well, that was really 165. But I'm not thinking long, right? Look, it's still making new lows. Like, I'm not fighting the trend. So I'm just going to wait a second because, like, I don't understand how this news is even that big. The Qs are up or trying to bounce back, but they are putting in some resistance. So I'm just waiting to see if we can maybe, you know, I'm being patient until maybe like 10:30, 10 o'clock or so and see if we, like, I want to see some volume. Like, look, you see how we're getting off of that level? It'll suck people in, and then, you know, I want to really see that this thing's going to put in a base and turn back around. Because, again, I'm trying to target, like, a level that's above us. But the thing is now we have the 100-day, the 20-day moving average. Now we have daily moving averages that are above us. And we're below this resistance level now. So, it kind of, I don't know. Like, I'm not sure. I'm just not sure right this second. We're pulling into the 50-day now, too. So, I'm just looking to see if there is opportunity. GitLab, I'm watching GitLab too. GTLB. There's a nice acquisition buyout. There we go. We're getting some volume there on the buy side now. That, hold on here. Is it going to pull back? I almost took that AMD calls right there. But they're so far out of the money, though. Let's see if we can pick this thing up for cheap. See if it can pull back again. I'm just going to give it time. It's 9:48. Market's only been open for a few minutes. I feel like I needed to be on it right there. I just don't know, man. I don't think it's safe. I really don't. Sorry, guys. Just give me 1 second. Just give me 1 second here. Like, is even if we can test out. Here's the thing: is you got to watch that trade line. You have a lot of things that are getting ready to come in. Fuck! I should have just taken it. I knew it. I knew it. Let's see here. See if it shakes some people out. I hope I didn't just miss that. The Qs are still have some tails on them themselves. So let's look at NVIDIA. What's NVIDIA doing? Just consolidating. Dude.
Tony, it's gone. No. How am I going to do this? Welcome to the MD1.
Yeah, NVIDIA's just sitting here sideways right now. I hate that I have that gray box on there, but it's like that whole area is a buy zone. GTLB. Let me go back to the chat real quick. Okay, so GTLB did bounce, guys. GTLB is bouncing right now. Pulled right into the 100-day moving average. I fucking missed that long. Alright, I want to try to swing. I want to try to get. I want to try to swing this trade. I do. I've never traded it really before. Let me see here. Fuck, there was another one that had news too. Did I forget? Yeah, they're actually low on AMD. So we could have got them for 70 cents. I could have got them for like 68 to 70 cents. Now they're pushing 90. Fuck. Like, that's where I wanted it. Like, because even tomorrow you could come in with the gap up. Today's what? Wednesday? Yeah, today's Wednesday, so I think you get another shot. I think you can still get a pullback. I think you get a pullback and start to put in a double bottom here. I'd be cautious because we're fighting the trend right now. And you're going to see that this 9 EMA is coming in. We have a 10-year bond auction at 1 o'clock. That might help the market out.
Not just for the good stuff, the grand openings, the celebrations, but for all the hard work it took.
All right, let's go to GME. So GME is still climbing to $30. So no reason to be, you know, it's doing exactly what we said. Look for a move back to $30. 28 holds. Target 30. 30 breaks. We're going to target $32. $32 if we can break above and hold $30. All right.
The obesity drug wars continue. Roche with some positive data on a very early stage trial for its latest obesity drug candidate, something that it bought via acquisition last year, putting some pressure on Lilly and Blue today.
It's got some nice volume. Watch, AMD's getting ready to sell off. All right, if it gets down to 25 and in front of that 50-day, I'll look to try and buy it. All right, I'd like to try and get it down here. I might have already missed my opportunity, but... Okay, so that is a nice little support level there. Yeah, right here. We didn't quite get there at 165. Let's see, can we get one more little downside move? So what I'm doing, guys, I'm watching level 2. I'm watching my time in sales. I'm trying to feel the depth, right? I want to see the depth and really what's going on underneath. Like, wicks and stuff are cool. Like, I can see the volume when it comes in at certain areas and stuff, but... you got to be careful here. This might get dangerous. You might get a... no. Watch for a dump here in the next couple minutes here. Just be careful. Hopefully I'm not wasting my time on this. Do you guys see anything with really nice volume other than GME and DJT? Because like DJT, I'm kind of just... I'm waiting on that because I just don't think the puts or the calls are going to pay that much. We have a gap fill. I'm waiting to see if we can reject that 50-day and GTLB. GitLab is still struggling here. Oh, fuck. Oh, Apple. Apple. So finally, Apple broke. Nice swing trade. I forget who it was. Yes. See what I knew. I said that. I'm like, man, I hope he got out of Meta. I hope he got out of Meta. I said that yesterday or Monday. No, because I talked to you Monday. Good stuff. Good stuff. Yeah, there was a bit of signs, and again, I apologize because I didn't look at the overall markets. And again, like, you got follow me on Twitter, guys. Yesterday I posted this literally right after the close, like 5 minutes after the close, on the SPY. I said, watch that back door. Watch out. Don't get backdoored. If you're long, watch out, because I thought we were going to come in with the gap down, and that's what happened. You know, I wasn't sure about the timing. It was kind of, I saw that and I'm like, all right, just watch out because we might get backdoored there if anybody's long. Yeah, SMCI, it's still, we need to see semiconductors turn around. We need the Qs to start doing something for us. We need a shift. Intel's pulling back. Google pulling back here in front of the 50-day. See, like, even Google didn't hold the 20-day. Well, we gapped below it. So you could look for a long on Google and try to look for a move back to like 185, 185.50. And look for like this to like take you back up here and then possibly reject. But that would be perfect. That'd be too perfect. GTLB. Come on. So there was something that I feel like I'm forgetting. Like a takeover or something, and I'm forgetting about it, and I wanted to trade it because there was like, it's been a few days and now I forgot about it. So, and what I mean by that is like news comes out about something and then like the big move doesn't happen until like 3, maybe 4 days later when people forget about it. And I thought of the name yesterday afternoon, and like now I can't freaking remember what the hell it was. Yeah, it's it's the NASDAQ QQQ. QQQ, it's right here. I think 29%, 28% is communication technology. Right here. The Qs. Right here, the QQQ. That's the NASDAQ. This is pretty much technology. Communication information. Or, yeah, communication information, right? Yeah. So these are pretty much the names. It's semiconductors, Apple, like, you know, so it's all tech. Let's see here. Remember, we do have a bond auction. Let me look at the scanner real quick and let me make sure that I'm not missing anything. ADTX. Alright. I haven't checked this out. ASTS. Okay, ASTS is bouncing. RKLB. Kind of like, I don't really like that one as much. These they don't have much volume. I would. That's not good. Okay, here we go. So that's a nice double bottom, guys. But again, watch out. We have this 9 EMA coming in here.
Tesla, TSLA, Tesla at the highs, intraday high now.
Fucking Tesla's going. I knew it. The day I say I probably don't need to watch Tesla. Oh my gosh, they can't make this stuff up. Damn, we could get these AMD calls for like 70 cents now, man. I'm really thinking about it. Remember, yeah, NASDAQ. Remember, Bitcoin? Okay, Bitcoin's going. So watch watch Coinbase, all that stuff. Dude, what are you gonna do, AMD? Yeah, there's no volume just yet. We might get 165. I'm not sure if we do, but oh my goodness. Dude, part of me really wants to just try this now. But like, it's stupid. There's no volume. I can't do it. I can't do it. I cannot long this yet. It's not time. It's just weak. It's weak. Don't fight the trend. So that's what it was Biden doing something with restrictions. So, again, I had some pretty bad storms last night, and I didn't get to bed till like 1:30, 2 o'clock. So I woke up a little late. GTLB, let's go back. Yeah, so I guess this is what, like, you're starting to see it. You're starting to see this guy start to try and rush and push bills out there before his term up because he thinks he doesn't have a chance. And I said that his second term, you guys haven't seen anything. Like, the first term's cool. The second one's when you really get to know who they are. Because they don't want to lose that vote. You know, you've seen him cancel a lot of stuff, start taking back things that he was going to do. And now he's trying to, you know, so let's see here. What do we got? GTLB's pulling back, so I'm still watching GTLB. I don't want to forget about this one. Let's go look at GameStop. All right, here we go. GameStop pulling back. Pulling back right in front of where? $30. Nice volume there. All right, let's do it. All right, let's do it. That's some okay volume. All right, guys, looks like we might have a trade here. We might have a trade. We might have a trade. I'm still looking for 27. Still looking for 27. Because we never tested it yesterday. Or 2 days ago. Alright, we just got this gap here. You have a huge gap. And I thought this would be a major level. So that's going to be my target to the downside. Just give me 1 second. Oh, wow. Watch the SPY, guys. If we break this level here at 559, we have room down to 557, 556. We have room. It might happen right now. The SPY might. Dude, look at AMD, 60 cents. I'm backing out of this order before I accidentally put myself in it. So again, guys, when I'm in contracts, I want you guys to know ahead of time, I have the contracts up, right? I have the amount, I have it up, and all I have to do is press preview, depending on if I'm market ordering in. Watch this area here. This is going to be huge. This, it's going to break it. It's going to fucking break it. And we look for a move back down to 557. Move back down to 557. Just keep time zoomed in. Okay, 1 minute. I think we're going to hold it. We could hold it. I think we can hold it and bounce. Look, 58 cents. Man, this is looking like more and more of a... Oh my god, you just broke that level and turned it into resistance. And look at the increase in volume. Dude, AMD might be down like 10%, 9% today by the end of the day. That's crazy. We're already back at the 50-day. So you got the 50-day moving average right there at 164, 163.66. I can't believe that. I really cannot. I cannot believe it. It literally pulled all the way back this far. Fuck, man. And I thought we held it up. Like, we didn't even have a chance to take the short, guys. In my opinion, you would have had to have taken it yesterday at, like, towards the end of the day. No, I didn't. I said 28. And I said 28 to 30 was the target. Oh shit. You didn't know. you weren't hearing me. And I said we're going to target $30. But we have to get through $28 first. That's been the plan for GameStop. I said let's focus on 28 before we worry about 30. Look at my daily chart. Oh shit. Hold on 1 second. I thought I had a box up here. Yeah, 27. Yeah, $28. That's all. I was saying we got to get through 28 before we get to 30. So 30 has been the target, and that's why today $30. Again, if 30 breaks and we hold, which this bounce back, I'm a GameStop. I got to get on GameStop. That's a bounce back short right there. Fuck. Give me the 27s. I'm gonna go with GameStop 27s. This thing's gonna. Come on, 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 come on. Yeah, no. So what I like to do is, like, we have that round number $30. 28. You guys can see was that flat top resistance. Really, it's like 27, $28. Really 27. I said once we get through 27, like, let's worry about 28, and I'll show you why. Let me focus on this, but so you can see 27. We broke above it, and then you had 28 here, and you did turn it. You turned it into resistance yesterday, or support, I mean. 29, double topped up there. So I just like to worry about, like, if my target's 40 and I'm at like $28, I want to worry about 30 and 35 first before the target is 40, but I'm relating that, let's focus on, getting through these first. All right, so 20. I like the 27s, guys. I like 27 puts. All right, 27. That's a weekly? Fuck, it's... Sorry, I'm just trying to hurry up. I'm trying to get it. The thing is getting a good price. All right, so I have the options up. Watching this level right here. 29.22. I should have taken it. Hold on, the volume just left the building. CHGG? Chegg? Oh, Chegg? CHGG? Yeah, Chegg. What happened? No, I'm not missing it. I'm on it. I'm on it. We're good. I'm not missing anything. I'm good. I got this. I just had to hurry up. That's all. Yeah. Well, I said, SPY. If we break this level, yeah, it's on. It's on. So all right, look for the move down into 557, 556 on the SPY. All right, 556, 557 on the SPY. I want to know why this hasn't moved. Oh shit. Bro, we could get these freaking whatchamacallit. Whoa, look at that reversal right there. That's look for, let's see if we can get a bounce back. See if we get a bounce back here. What's today? Today's the 17th. Dude, they want $80 fucking for that. You're crazy. I know the VIX is popping up. I'm waiting for a bounce back, guys. I'm gonna trigger an entry like right here if we can get it. 558.50 area. Yep, we said it. I told you guys, man. If this thing, if 559 breaks, it's on. We got a few dollars to the downside. We got a few dollars to the downside. I really wish I would have looked at this yesterday, man. I don't know if you guys see it, but yo, that chart yesterday. I mean, this like, hang this up on your wall. Don't get backdoored, and that's the label of it. Don't get backdoored. I posted that again like 5 minutes before the market or after the market closed, but I wasn't looking at the overall indexes. I was, but I wasn't. I don't know how to explain it. I just wasn't looking at it like technically and looking for a trade. But when I looked at it and went to them, I'm like, oh shit, hold up. Tomorrow might be some trouble. So that I'm gonna label that one the old back door. All right, watch for this pop up here, 558.50. I'm gonna go right back, let it bounce. GameStop. Be careful with GameStop, guys. No, it's still looking good. The downside is still looking good. I'm just wondering if this thing's going to consolidate up here. Dude, what is going on? Nah, we should be good. We got room. We got room, right? We got room. We got room. We got room. Shit. We got room.
Technology, particularly large cap technology. This time around, the melt up that we've seen in technology and communication services, at least in the past week, as you folks have noted, seems to be.
All right. Let's see here.
The mid caps, the small and mid cap companies, and I think that was very.
These things are not moving. These things are not moving.
Concentration in biotech and in regional banks, so it's widened out. I think the widening out, though, is going to increasingly focus on the S&P 473. In other words,
Again, think about this, guys. We're down 1.2%. Even if we could get back to break even, that's 1.5%. And think about if the markets go green by the end of the day. Even like 0.2. Just think about that. That's a huge move. I'm not saying we are. I'm not saying we are. I'm just saying. Like, you know what I mean? Just, you know, we have a 10-year bond auction. So here we go. We're getting our little bounce up here. Again, 557, 556. There is no volume on that bounce. That's a good sign.
pretty much committed to cutting rates in September. I mean, the markets will be totally blown away if they don't, because now the expectation is 100% that there's going to be a 25 basis point cut in September.
Sorry, I'm trying to get this so you guys can see it. I hate that I always have to do this.
I just don't want to see a melt up, because the problem is, as an investment strategist, then I got to be smart enough to tell everybody.
Here we go.
When it's about to melt down, for civilized gradual bull markets, but it's not what is good for me. It's what the market tends to do. And right now, it feels as though the market is pricing in at least one. Well, actually, the market's pricing in 5 Fed funds rate cuts of 25 basis points over the next 12 months. That's what it's doing.
Just getting short down here, though, is really
broadening and rotating.
on the lows. GameStop.
It feels like one of those sort of uncomfortable days, at least if you're in the NASDAQ.
Come on, GameStop. You can break this level.
Down 2.4%. The Dow is higher. So how do we know which one?
So these options still haven't moved.
I think it's broadening. I think it's healthy to see the NASDAQ have some sort of.
What's DJT doing? Sorry, guys. I didn't have the chat up. Yeah, exactly. It showed you that last. Started to show you that if you traded that range between those two lines for GameStop. I'd have to look and see what the options were. They still haven't really paid. They're still, because I'm looking here out of the money, and the reason I'm looking out of the money is because I'm going to have a smaller position size, and it's a weekly, so we still have 3 days left. For 48 cents, if I can get in the money by tomorrow with like a gap down, or be in the money today, you're looking at a big trade. You know, we're looking at a pretty big trade here. I mean, you're pretty much looking at roughly 18 cents for every dollar, and 18 cents on 48, call it 20. That's just under 50%. So you're getting about 45% for every dollar. There you go. That's your profit. And you're using 18 cents as your stop loss. These are things I want you guys to get to sign up for a one-on-one, so I can help you guys learn this shit. All right? Like, if you're trading options, you need to know how much you're going to make and how much you're going to lose. See, I just did that right there in front of you guys without a calculator, without, you know what I'm saying, understanding if I get $1 on this, I've got about 20 cents. 21, 22 cents. If I'm paying 49 cents, it's just under 50%. 48, 45%. It might even be 50, a little over 50, depending on how fast it moves. But roughly, at the end of the day, if I'm risking, 20 cents a contract, How many contracts do I got to buy to be able to stay in my risk tolerance? You know what I mean? So you guys need to know how much you're going to make, how much you're going to lose when you're trading options. You have to. You can't just blindly take them. That's like, I don't know how, like, I'm not a good salesman, but like I said before, man, I challenge, you know, anybody that really wants to learn how to do this. I challenge you to challenge me to help you grow your account. I really truly believe in myself that you would truly benefit from it.
There was an infinity, meticulously crafted to stir your imagination.
And again, if you go to all the other ones that want to sell your information and stuff, don't get backdoored. Remember that. Upsell, 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 harass, harass, harass. That's not my motive. I want you guys just to learn this. That's it. I don't need to just keep draining people's pockets for money. Like a lot of these groups do. And then sell your information off. And harass you. You know. Alright, so here we go. We got a nice little bounce back here on the SPY. Keep an eye on the Qs and the Dow and the IWM to what they're doing. There's just nothing there. The Qs just have nothing. There's just nothing there. What's Snowflake doing? Let's see here. Snowflake. Snowflake's actually up. Divergence. This is divergence, folks. Snowflake is green while its sector is red. You know, I understand it's mostly semiconductors here. So you got a little bit of resistance zone up there. Probably pull back off of. I need to look at GTLB. This is a good one here. I think that this could offer us a good swing trade if we can get in it correctly. Okay, Abby, I'm coming. My cat's trying to come in. Just me hearing stuff again. So, you know what? Let's go look and see what next week puts would be for GameStop. Let's go back to GME. Alright, so here we go. We're getting our pop here. This is exactly what I wanted. This is our second pop, so this is it. This is it. Alright. QQ. Bye. Sorry guys, let me. Bro, I'm telling you though, man, if the Q's bounce, if we get some type of recovery, the markets, you could make a look, and they're buying the dip. I know it. We still have our 15. It might happen here. Hold on. Okay. Here it goes. Alright, listen guys. I might end up doing it. I'm going to put out a little bit of risk here. Let's see if we can get a pullback into 559. Why do I have so many options chains open? So I'm going to be eyeing up 562 area. Damn, they want way too much for this. 564, that would still put us with a possible gap. So this is for tomorrow. Alright, 560. Damn, that's all-time highs.
Let's stick with the semiconductor stocks. CGMU's Kenneth Fitzgerald, Senior Managing Director, joins us now. He has a buy rating on ASML, price target of $1,320. And
President Biden tweeted earlier, making sure no one goes to jail for mere use of possession of marijuana, and the records should be expunged.
You know, the former president's comments about Taiwan, and perhaps more importantly, what may be coming moves in the Biden administration to even try and tighten.
All right, let's see here. 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 I'm gonna wait on this. I'm gonna wait. 562. 562, 565, 562. They want too much for these. They want too much for these. I'm gonna hold off. I'm gonna let this. I'm gonna let the SPY do what it needs to do. Let's go back to GameStop and AMD and some of the others. Okay, so GameStop is still holding up. It feels like it's slowing down already, though. AMD. Again, don't listen. Do not fight this trend for some of these names. Seriously, do not try to like. If whatever you're looking at's going down and you're trying to take it higher, like that's just it's a recipe for a disaster. It really is.
Again, in terms of the actual numbers reported by the company, generally positive, correct?
Yeah, you know, I think that there was wide debate whether their bookings would come in at the kind of $4 billion.
But whoever had that Apple short yesterday, great job. Great job on that. I should have taken it just knowing that, you know, we still had some time in the week. But again, I wasn't sure. I was looking for another opportunity up there at 236. And here we go, 226. It's your support level. All right, GameStop. We need some volume to come in here. We need some volume to come in.
Yeah. Well, you know, I'm curious though, in the difference in your perspective in terms of the effectiveness on the bans that have been in place versus what may be some frustration on the part of the administration. Where does that play in? Why are you seeing
Resistance, support, it breaks. All right, I might go ahead and try it and go after it now. And look, they've actually went up. These puts have went up.
Relative to, you know, the aims and goals of the administration. And that, I think, has led to potentially a vision of putting more...
Still holding above yesterday's high.
And their competitor, Nikon, and not allow immersion tool shipments to China. But, you know, if you recall, the Department of Commerce put regulations on 16 nanometer and below for logic.
There's a couple of things I'm watching here. Let's see if... Keeping my eye on 29. I'm not going to force this trade if it's going to consolidate. DJT. Alright, DJT. Also putting in a tail. Man, I feel like I'm forgetting some names here. Tesla finally pulling back too.
Part of it. I also just wanted to get your take on these comments from President Trump that he made to Bloomberg Business Week in this interview.
Okay.
Taiwan took about 100% of Americans
GVN.
their business, and Taiwan.
Are you trading small caps?
Do you have to have a view on the
And
election and the American posture toward Taiwan?
okay, it's only 10:30. It's only 10:25. It's all good. It's only 10:25. Watch Tesla here. See if Tesla can get a bounce here. Let's see if Tesla bounces here.
15% now on AMIX.
Roughly 100% of the world's leading edge semiconductors. So if you want an AI industry with NVIDIA, if you want to, you know, have smartphones from Apple, we're relying, you know, solely on TSMC. So is that something where, you know, Taiwan school of business? No, you know.
Oh shit! I forgot about Google.
Strong subsidies in Taiwan.
It's still going down.
Barkin said no 125 basis points.
Amazon is just pooping the bed, guys. Energy's going higher.
The U.S. Central
Exxon is screaming to the upside.
appropriate to describe inflation as elevated, looking for low inflation to sustain and broaden. Starting to see the broadening U.S. labor market remains quite healthy. Recent housing inflation data was encouraging.
No, it wasn't. What the hell are they talking about?
This inflation is broadening in hopes it continues.
Let's see.
Barkin said still looking for a bit more evidence that disinflation will be sustained. The number one way for the Fed to keep its credibility is to do the right thing at the right time.
It's a nice pullback on gold.
Richmond Fed president.
Stocks to work, at least near term.
Yeah, well, I'm glad you pointed that out, CJ, because we NVIDIA shares are down over 6%, AMD over 7.5% right now. Of course, we're keeping an eye on all those names. Appreciate your taking the time. Thank you, CJ.
Thank you.
Still to come this morning, Bitcoin trades at the highest
I mean, honestly, I'm not touching it until it gets down to 115 for the long. I think you got to look for bounce backs and see if you can get a rejection. I wouldn't recommend trying to get cute, but maybe, you know, that this could be your first high or low. All right, that could be your first high or low. Give me 1 second. I'm gonna use the restroom real quick. Patience, young grasshopper. I think we need to short up there at 29.50, guys. That's what I'm going to wait for. 29.50 on GameStop if I can get that. All right, that's what I'm looking for. I think you know, if I try it now, I'm doing myself a disservice. Wait, hold on. So this still is kind of holding here. Yeah, this is holding here. GameStop could pop again. We don't have as much volume. Listen, I think GameStop's going to consolidate. There's just not a lot of volume today. So be careful with that one. It's fucking AMD, bro. Semiconductors are getting slapped. Alright, here we go with the SPY. I mean, that was a nice revert back to the mean, and see if it gives you that follow through back down to 56. I just don't see how it does it. I really don't. The volume they just gave it up. Now, that kind of is a support level too. Could be considered one.
A draw of 4.87 million, much larger than the 900,000 expected.
Dude, there is a stock that I'm forgetting. I know I'm forgetting it. And I wish I knew what it was. And it's frustrating the shit out of me because I know this thing is probably getting ready to take off.
Off the highs at 82.26, up $1.51. Again, a much larger draw than expected in crude and a large build in gasoline inventories versus a draw expected.
Banks are just breaking out higher. Oh, sorry, guys. I didn't see that.
Slightly higher.
INTC. Yeah, like I said, NVIDIA, don't fight it. I'm not fighting these because it's the only company that plays Taiwan's supply of chips. Like, listen, it's not that. They're going to get the job done neither here nor there. Here's the thing. That's the trap that people fall into. Right? Yes, it would take some time to build it up, this, that, and the third, which would what? Create another demand, because there would be less of a demand. Unless, unless Taiwan's not shutting down. But I'm going to tell you guys right now, like, between AMD, NVIDIA, and all these other companies, Micron and stuff, they'll just move somewhere else and open it up. Yes, they'll have to get workers to know how to do it, this, that, and the third, but they'll do what they have to do to get a buck, which could also create a demand. So therefore, higher prices for that demand. So it's Intel faces the same exact issue as Taiwan Semiconductor, finding the people not just to build it, but to do the job. That's the biggest hurdle. And Intel also, has to find people to do that work as well. So KRE is still going. It's almost at $60. Oh my gosh, I should have held this. I got in so early on this name. You guys understand this is... Oh my gosh. Holy shit. Guys, this would have probably been one of the best, which to me it still was, but from entry to exit and stuff, like, this thing just got started, and I literally timed KRE perfect, guys. Like, I just got in it at the right time. I saw the pattern, I noticed it, and I said, hey, it's time. I also put this on Twitter. Fuck, man. This is where you need to be if you're long. Right? KRE, JP Morgan, Bank of America. Just, you know what I'm saying? Find the trend and ride that mother sucker. If you really want to make money. If you want to trade GameStop and stuff, that's fine. But it's got to be on days that it's doing something. It's not doing nothing right now. Yet, at least. DJT. Just consolidating. That's what... Man, this sucks. Let me go to the scanners real quick. EMPH. Okay, hold up. Are we getting a sign of hope here?
When you talk to your custodian, does it feel like you're not being heard? Thank you for calling. Please hold. Now that's better.
Yeah, it's coming. I feel it. It's coming.
Instead, your calls are answered by real people who know you by name and are empowered to help. Like me. Hey, Chuck, how are you? What can I do for you?
Are you raising the child of a loved one? You're not alone. Like many others, you've stepped up to raise the child of a friend or family member, allowing them to live.
We could look at UVXY, guys, for some dated calls, too. We've done really well. We traded UVXY a while ago, and we did pretty well with it. And she'll pay.
Services, training, and support groups. Don't navigate the journey alone.
People with Pennsylvania taxpayer dollars.
Be prepared with CHIP, free or low-cost healthcare for Pennsylvania kids and teens. From checkups to unexpected bumps and bruises and everything in between, CHIP has you covered. Don't wait until you need it. Be prepared with CHIP. Because every kid deserves
All right. Let's see here.
knowing their kids are covered. CHIP, free or low-cost healthcare for kids and teens under age 19. Learn more at chipcoverspakids.com.
People with Pennsylvania taxpayer dollars.
Welcome back. I'm Contessa Brewer with your CNBC News Update. The Department of Homeland Security's Inspector General is now investigating security issues at the Saturday rally where a gunman tried to assassinate former President Donald Trump. The 20-year-old shooter was able to get within nearly 150 yards of the
CGC.
This probe will look into the Secret Service.
Watch Canopy growth. We might be early on this one. we also might be early on this one. Just watch that 50-day. You have some possible resistance here. You have some tails coming in. This thing looks like it's trying to start. I mean, it's actually already started, but yeah, that $8 is resistance. See if you can get a pullback and break $8 on CGC. $8.97. Look for pullbacks into like 750, 770, 750. We already pulled back into that. Yeah, see if you can get a pullback here into like 770. See if you can get, see if it does hold up or get like VWAP down here, and then see if you can break and maybe you gap above it tomorrow. I'd be careful with that one though. It feels like the volume's pulling back. But if you do break that, you got $2, right? $2 on $10 is 20% on the stock itself. So think about those options and what they would do. ARM, is ARM going? ARM's just holding up.
Hey David, yeah, it's great to be back talking about obesity pills yet
Yeah.
again.
So listen, here's what here's what ARM does. ARM provides, and we've traded this a lot. You just haven't, you know, I don't know if you've just found the channel, but I've traded ARM a lot. I like ARM. ARM is a pretty special company because they actually create the blueprint for semiconductors, and AMD, Qualcomm, TSM, Micron, all these companies buy those blueprint rights and they just create it, right? ARM comes up with pretty much the blueprint on how to make it, the materials, you know, the size, all that stuff, the production process, and they lease out, or I guess you could call it leasing out. They lease out the product, and you see it with like Qualcomm or whatever. They just make the physical product, and they both have their names on it. You know, I think it's important for a lot of people to actually go do some research on the manufacturing and how they make and the ins and outs of semiconductors and all the companies that are involved. Because again, even though you have ARM, right, like TSM, Qualcomm, all these companies, they wouldn't be anything without ARM, or they wouldn't be where they are without ARM. But again, they wouldn't also be where they are either if they had ARM but didn't have ASML. Because ASML makes the machine that helps them be able to get these transistors as small as they are. So it's all like the semiconductor world is like these companies outside of just like manufacturing the stuff. They each play their own role. And without them, that's a wrap. Like semiconductors are at a point right now where we've pretty much maxed out as far as the physics are concerned, with how fast the electrodes can travel and the amount that they can fit. We've pretty much maxed it out, and we have to come up with a new material and or a new design. Something's going to have to change for us to get to take it even a step further. We've pretty much maxed it out. And I really think that people haven't, maybe they have, and it's just me, but I think it's important for people to go out and really do, watch videos on this stuff. Bloomberg has done a few really good documentaries on this. They, with Taiwan Semi and being able to show you guys and really teach you guys and give you guys the ins and outs on a semiconductor. Because it's actually really interesting. From the process that makes it, the amount of companies it takes, that if it wasn't for this company, each one has their role, is what I'm going to say. And without each of them, we don't have what we have. So, I do like ARM. I love ARM. I just wish that I wish I would have bought it. But again, that was my fault because I didn't do my due diligence really on semiconductors. So if I would have most certainly bought it because I would have known, hey, yo, all these guys aren't shit without ARM. Just like ASML. They're not, they can't do what they do without ASML either. You know, again, I don't, you know, you guys may know, you know, I don't know what you guys know or don't know or have heard or, you know, with semis, but it's pretty cool and it's pretty interesting. Alright. AMD still down, so it's a good thing we did not fight that trend. They almost got me. They almost got me on that. Okay, Tesla. So, let's see here. Tesla. Pulling back. Let's see if this can hold, and we look for...
What about the mechanical side of this? People buy the IWM, the iShares Russell 2000 ETF. Right. These stocks are not particularly liquid. Right. I'm just curious how that all sort of plays out.
This is why ETFs work, because you're right. Traditionally, you try picking stocks in the micro-cap space, you're going to have a liquidity problem on a big...
Yes, liquidity issue is a problem in microcaps. Sorry, CNBC was talking about IWM and people going in there. Let's see here. Let's see here. Alright, so we do have the 20-day moving average coming up. I thought I moved it. That was a nice break and retest there on 172.50. That was a sick setup. That really was. That was a nice setup right there. You look, you popped right into yesterday's low and then sold it off from 172 to 164. Beautiful trade. And I'll tell you guys right now, ARM pays a lot. You get $2-3 out of ARM, you're looking at like an 80, 60 delta. 50 delta, I should say. I'm sorry. Like 50 to 40. Sorry. I don't know why I went that high. That's just how excited I was over it. Alright, so the SPY. Let's take it back a notch. Let's go to the S&P. Let's go over here. I'm still thinking about, yo, if we cannot get above this level, I'm still looking for puts. I'm still looking for puts. And I'm trying, dude, look at the Qs. They're so far down. This is insane. Bro. Biden fudged up, bro. He fudged up. He should have never opened his mouth.
So I did some research and called Coventry Direct. They explain life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax.
For resistance, nice reverse head and shoulder. Like, I'm surprised we broke that level at 485. 485 is trying to act as support. Shit, motherfucker! As soon as I get tied up, fucking GameStop. But like, look, this thing is still not paying. It's still not paying. It's because it needs. It's going to take a little bit for it to. All right, so it's official now. We're below yesterday's high, double top high. All right, so GameStop might be lining up for us. AMD.
We now offer
Be careful. AMD is still a little shady. Damn, that's wild. Think about that. There are some people, if somebody took those options at $100, they're all the way down. They're down over 50%. And it may have been over $100. Might have been like 120. I'm pretty sure. Yep. Yeah, I thought so. 130. They opened up at 130. Unbelievable. I feel bad for them. So see if we can't pick these things up on the low. This is a low of 75, 80. It had time with it. Nice. So 37 cents now. Oh, a low of 37 cents. Look at the volume on that thing. That would be cool if we could take this thing right back to $3. That'd be a sick trade. If there was news like Biden came out and said, yeah, I was just joking about that. I really didn't mean it. All right, let's see here. SPY, 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 SPY. All right, let's see if we can get some follow through going here. It's just one of those days, man. These, like, they've been taking these moves pre-market, and it's okay. I'm actually going to go back here with the SPY, and so this sucks. This is what stinks about this, is that like I can't get long, but I also can't get short, because I feel like the minute that we do that, you're screwed. You're screwed. Like, seriously, you're screwed. Like, go ahead, go get short and see if you know what I mean? See if you don't get robbed. So again, what I'm thinking is we have the 10-year bond auction at 1 o'clock, and I'm wondering if that could help us bounce. I forgot about airlines. There's supposed to be a strike or something going on in this sector. Let's see. Alright, I'm going to go for this GameStop here. Another test of prior day's high. You know, we are a bit below VWAP, but I'm not going to let that stop me from trying to take this thing lower. Still holding up at 50. No, I don't want that. I'm going to have to limit order in this thing. They're just not paying. These contracts just are not paying. Yeah, guys, hit the like button if you could. I know you guys can. what sectors? Let's go look again. Banks. We know banks are going higher. Energy's doing really well today. Let's go look at like CCJ. Not doing too good. GLD. So right now I'm just looking at the scanners real quick, and I'm just going through. Looks like energy, healthcare looks to be where we want to be. Dude, I'm really bugging. It's bugging me that I cannot think of the name that like, yo, why do they?
Your stock has surpassed the March
Let's see here.
crisis with SVB and
Let's see.
Still not quite at the highs yet. I wonder how the investor conversations are going and where you think investor sentiment is right now.
I gotta say, man, YouTube is like the worst for recommendations.
And Intel, because they could potentially benefit from potential restrictions. So Intel, the best performer on the Dow right now, up about 4.5%. Meanwhile, Global Foundries up about 11%. As we see, they could potentially be a beneficiary as well. So, weakness across the board aside from those two outliers.
Yeah, a good observation there. And Intel's got that value factor to it as well that helps when value is outperforming, but maybe the home court advantage too, to your point. That's a good point. That
Intel's still down 30% year to date, but having a good day today.
And we are more interested, it seems, in buying some of the losers up today than some of the big winners on. But that also depends your time frame. So, Kevin, what we talked about this morning, I think that we kind of resolved a little bit in Ben and I's discussion centered around the dollar. Because when we were thinking this morning about the dollar being down, that oftentimes opens up the door to kind of risk appetite.
Sure.
But as Ben and I were talking about how UK inflation came in hot, that may not be the type of dollar down that's automatically risk on.
Well, the UK inflation data that may pause in them cutting, by definition, means their currency's higher, the relationship trade with us down. I still think there's another factor of the overall potential Trump administration being lower dollar friendly as a way to stimulate an economy. He thinks our dollar's been trading too higher. Now, you throw in UK data and that just adds. And so, even though you're seeing risk off in stocks, you're seeing a lower dollar, counterintuitive to what you might think.
The fact we tried to buy the dip in the small stuff, going for the recent momentum instead of the old momentum, puts some of this tech stuff at risk. I mean, NVIDIA's like $119. There's not a lot of support down below.
Well, one thing I looked at this morning, first thing was the 50-day moving average of NVIDIA, and the 200-day moving average of NVIDIA is in the 70s.
Right, that's 200-day. My point.
So, and you look, it's not like it's never touched those averages. So, I'm not saying it's going to go do that. I think NVIDIA's got a treasure trove of good news surrounding it, but you can't rule it out in a global sell-off.
Hey, you're watching crude oil real quick. Give me your quick thought on that.
Crude oil is going to be at a level where a potential Trump administration is going to be a lot more pump, drill, baby, drill, replenish the SPR. I understand. It's up. That's absolutely true. But, think about this, Oliver. If President Trump, who thinks he's going to come into office and stop 2 wars, you know how you do that? You take crude oil to $40. And 2 wars run out of money.
Oh, crude's going up, though.
Inflation's come crash. Believe me, I understand the trade today.
Right.
And that could be inventories. It could be a lot of things. But long term, a Trump administration is going to be more crude oil production, more domestic.
I don't know. I'm not buying it yet. We just had the most record production ever, and we leapfrogged the entire world in crude production under the current administration. But okay. All right, we got to go. Thanks, Kevin Hicks. Thanks, Caroline Woods. We're out of time. Trade 360 with Nicole Petalides is up next. I'll see you this afternoon. I thought you had a thought on.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies.
An eye on this.
Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
See what happens right here.
Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I forgot about Baba. That was one of them too I wanted to look at this morning. My stuff is lagging.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
So, do you guys remember yesterday's watch list?
Young
where
lady
I mentioned
who
that if you get to
couple of
Monday's
kids,
highs,
recently went
look
through a
for
divorce.
rejection.
She had a lot of questions when
And
she
I
came
forgot
in.
about it.
I watched my mother go
exactly
through
what happened.
being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
All right. Well, that's it. That's the morning session.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Tesla might have some room, guys. Tesla may have some room.
Good morning.
I
We are
wonder if we
90
can take
minutes
this
into the
thing back
trading
down
day.
to
Welcome to
248.
Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you are with us today. We're seeing some new records, though tech really weighing on the NASDAQ today. So we have a busy show for you, a look at big banks and how those have been performing in line. Big tech also in focus, and a disruptor, Arista Networks, after a price target hike over at KeyBank. We'll explain. Our 360 round will dive into those earnings from Johnson & Johnson. Take a look at the numbers. So we saw some record closes yesterday, and right now the Dow is up 74 points, tacking on to yesterday's big gains of over 700 points. So that is a winner. But you see the rest of the market down. S&P's down 1.1% at 55.99. The Nasdaq's 2.3% lower at 19,924. And the Russell, which has been shining, pulls back almost 0.75% at 22.48. Oil and gold are higher, 82.46 the barrel. Gold just turned negative, 24.67, so right around the unchanged line. 14.04 on the VIX, so you do know that the VIX is moving a bit higher, and the US dollar 103.51. We won't leave out Bitcoin, 65,225 after a pretty great run that we've seen recently. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on Schwab Network, and Five Below grabbing some attention as these shares are selling off as well. Give us the very latest. Jenny, good morning.
Good morning, Nicole. And it appears that overall a shakeup in the company's org structure is really what's contributing to a lot of this pressure today in Five Below. As we did see, they announced actually yesterday after hours that Kenneth Bull has been named now interim CEO of the company to take over for Joel Anderson, who stepped down actually as his role of CEO and from the board to pursue other interests per this press release. Now, we also are seeing there is another figure for assuming the role of executive chairman to support the transition. That's Thomas Velios. He is the co-founder, the non-executive chairman, and former CEO of Five Below. But with a long runway, they said, and of continued growth and industry-leading returns on their new stores, they do still remain focused on driving sales, optimizing margins, and providing customers with exceptional value that they expect from Five Below. This was set on the path ahead. Alongside the C-suite of development, they also announced their total sales for the 10-week period that ran through July 13th, increased by 9.5%. So as a result, they now expect their sales for their second quarter to range between around 820 and 826 million, and assume approximately 6 to 7% decrease in their comp. So also, we are expected to see a range of earnings arriving in at around 53 to 56 cents a share versus the roughly 63 cent per share consensus estimate. So some slight lowered expectations for now their fiscal second quarter, I think, across the board. And as a result, we are seeing several analysts, including Morgan Stanley, Citi, Evercore ISI, and Mizuho, all downgrade shares. So just adding on to some of the weakness today, it's like when it rains, it pours. It seems like a obviously bad news day for Five Below, and we're seeing a sell-off as a result of that, frankly.
Sell-off. Good to see you, Jenny, and thank you for reporting on this important story. Let's get some insights on the news shaping the markets. For that, we welcome in Sam Stovall, Chief Investment Strategist at CFRA. Yesterday, we had record closes for the Dow and the S&P. In fact, the Dow was up over 700 points, its best day since June of 2023. So we've seen some excitement in the market. What do you make of the market right now? What's the big picture, Sam? Good morning.
Well, good morning, Nicole. Good to talk to you as always. I think the big picture is the increase in the likelihood that the Fed will start its rate cutting program in September. We had Fed Chair Powell report to Congress last week, and instead of saying, or I should say, he started off by saying he's not going to give any indication as to when they'll start to cut interest rates, but basically everything he said thereafter gave investors reason to believe that he will be cutting interest rates starting in September. Also, we had a much better than expected CPI reading and the beginning of Q2 earnings estimates, which right now are outpacing the estimate as of quarter end. So looks like this will be the 59th out of the last 61 quarters in which actual results have exceeded end of quarter estimates.
So with this, I mean, now we have this 100% likelihood that we will see these cuts, right? Now, everyone's betting now on September. Very interesting run in the small caps. I mean, everybody's been waiting a year and a day, right? A lifetime and a day for the small caps. And ta-da, here they are. Tell me a little bit about the rally that we've seen, but more importantly, what does it mean going forward for this group?
Sure. Well, I like to say that fundamentals tell you what, but technicals tell you when and how far. And from a fundamental perspective, mid and small cap stocks have been attractively valued for quite some time. We're recently trading at a 30% discount versus their 20-year relative PE. This is the mid caps. Small caps were at a 35% discount, so they looked very attractive. But investors seem to be saying, well, you know what? I'm going to wait until I get a better feeling that the Fed will be cutting rates, because if the Fed keeps rates higher for longer, too much longer, then that could throw us into a recession. And we do know that mid and small caps underperform during recessionary periods. So now that it seems as if the Fed will be cutting in September, I think investors are feeling comfortable enough that they can rotate into the mid and small cap arenas and take advantage of these very attractive relative valuations.
Yeah, so at this point, when you talk about valuation, and you made the point of small caps and how fairly valued they really are. Well, let's turn the corner here and take a look at the other side of the coin, and that's some of those tech names, some of the mega caps. Where do we stand on some of those, particularly in this election year?
Well, I think right now, I mean, tech, I think, looks a bit expensive. Our tech sector group head feels that valuations are 3 to 6 months ahead of where they really should be at this point. Primarily because of the momentum and the optimism coming from lower interest rates and the AI scenario. So our belief is we probably could end up seeing tech as market performer, maybe even a slight underperformer over the next 3 to 6 months. But we look to stocks on a 12-month basis. And so right now we are maintaining our overweight recommendation to tech and to communication services. Semis certainly look as if they could go through a mid-cycle correction, which is normal, but then recover. So our feeling is that we're not going to be downgrading any stocks at this point, because in our opinion, it would be foolish to try to time on a very short-term basis. We still believe they have very strong upside potential 12 plus months from now.
You know, what's interesting is I mentioned the election, you always have, if the incumbent is in and running, you know, you always have all those great details, but this was almost a really different, not historical type of comparison, because A, you have a former president running again, so he's not a newbie on the one side, and on the other side, there was talk of replacing President Joe Biden, in which case it wouldn't be an incumbent, it'd also be another face. You know, how are you handling trying to assess historically what this year could bring?
Well, that's a good question, Nicole. Historically, if the market rises between July 31 through October 31, then the incumbent person or party tends to get reelected, whereas conversely, a down market implies that the incumbent will be replaced. So this in some ways sort of reminds me of 1980, in which you had Jimmy Carter up for reelection. The market rose, yet he was replaced. We also had a third-party candidate in John Anderson, the way we have in RFK Jr. today. But when talking to our Washington Analysis Group, which is a political strategy group, they give President Trump at least a 60% likelihood of being reelected, and even have an above 50% likelihood that both houses of Congress swing to the Republican side. So I think that we could find that a rise would not be an implication that the president will be reelected, but that there will be a major shift, and investors are buying into it right now.
Yeah. All right. Sam Stovall, great to see you at CFRA. Thank you always for coming on and shedding some light on the recent action we're seeing on Wall Street. Sam Stovall.
My pleasure.
Thanks.
Thanks, Nick.
Plenty more to come here on Trading 360. Up next, the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will go through the technicals. Don Kaufman takes us through the trades for ExxonMobil, Netflix, Goldman Sachs. Trading 360 here on Schwab Network. We will be right back.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I'm glad you're with us because now it's time for the big three. 3 stocks, 3 charts, 3 trades. And Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Great to see you both this morning. Don, how are you feeling about the markets as we hit record closes again yesterday, though some shakiness today with the NASDAQ down over 2%. Some of your thoughts, Don?
Yeah, no question. I mean, so specifically today, what we're looking at right now is some sell-side activity that is like expressly inside of NASDAQ. But the area you got to look at is the advanced decline line is really positive, and this could actually proliferate to a lot more sell-side activity. Look, the moves that we're seeing in the last couple of trading sessions, really since last Thursday, have been absolutely manic in terms of rotations.
You know, when people talk about maybe some of the unloved stocks getting a bid or a rotation in the market, et cetera, but we managed to hit the highs, but you're talking about the volatility, and I see it. How about ExxonMobil? This is a name right now as we see $82.53 the barrel. Exxon's on your radar, and why is that?
Yeah, you know, one of the reasons is I think the political climate, as your previous guest was just mentioning, is going to be really, it's going to be beneficial to a lot of the energy complex and much more specifically into ExxonMobil. So in this particular case, like we're going to be looking at, you know, maybe a lift as we start to receive some of the polling data in the next few months. And I got to tell you, I want to be in the energy business right now if I'm going to be long in this marketplace. Energy looks like it's going to be a fairly good play. So this trade in ExxonMobil is out to the September 20th expiration. As I said, the political climate is definitely turning in favor of energy. I'm going to be buying the 120 calls, selling the 125 calls. This trade's done for $1.35 debit. Decent time to look towards the energy complex and several of the energy stocks for bullish plays into this election season.
What do you think here, Ben, when you take a look at these charts?
Yeah, the technicals support the fundamentals, Nicole. This one is trending higher across multiple time frames. You know, that's what I look for. Let's break it down. We'll start off with a more granular, work our way up into the longer term, and you're going to see exactly what I'm talking about. All three of the charts I have for us here today in terms of Exxon are bottom left, top right, and feeding into exactly what Don was just kind of laying out. Let's first off start with the rally we've seen over the last few days into the end of last week and to begin this week from 110 all the way up to 118. And you can see how we're holding on to this upper level. No rejection as of yet. Now, I like this one because take a look here. You're going to notice, what is it? Every $2, the market just in this miraculous kind of systematic and very predictable fashion has paused. 111, 113, 115, and now look at this. We're balancing around 117. So the bull's in charge here. Value's moving higher. Again, it's a trend up. Now this chart, we've got a 4-hour candle chart. We're going all the way back to looking at the rally we've seen off the lows in the beginning of January down around that $95 level. And look at this move up here. Again, we're talking about a bullish pattern. Two areas that my eye was drawn to. 115 is important right now because we're building momentum through it, which builds up and sets up for a potential test of 123, those highs, if you remember from back in this spring. But either way, a bullish pattern. And then you also have, again, this most recent move lower, not necessarily what they were looking for, the longs, but it held above 103. That was important. And again, just sort of solidifying this working assumption across multiple time frames that trend is to the upside, values moving higher, and you can see on this daily candle chart the bulls remain in control. Take a look here. We're going all the way back to, we're talking about the lows that we saw around 2020, $30 if you remember. A double bottom that formed down there, and it's been off to the races since. Speaking of a very systematic approach in terms of these areas of consolidation, we're talking 40, 60, 90, 110, balancing right now, again, with momentum above 115 here, opening up a door for a retest of 123. This is a stock that, yeah, as Don laid it out here, the chart's very much in line with his analysis.
All right. I mean, he even mentioned 123 there, John Kaufman. So let's see what you're thinking about for this trade.
Yeah, no, the trade is, again, straightforward. You crack over that 123 level, and we're pretty much home from there. Again, that 123 kind of retesting that other high. We break through there, we're to 125, and it looks like, again, it could take off to that upside potential.
All right. Next up, you have a bearish earnings put spread for Netflix. Why is that?
All right. So Ben is not going to like this nearly as much. So to me, this is a very short duration trade and has everything to do less with the technicals, much more with what is going to be subscriber growth. Looking at Netflix chart since the last earnings period, like every ounce of good news is already packed in here for subscriber growth. They better hit spectacular numbers or this stock could actually fall. You're seeing some sell side activity today, but it's pales in comparison what you could see around the earnings. I am actually building an earnings very short duration trade. This one's expires on July 19th, right? It's this Friday. It's a weekly expiration. I'm going to be buying the 615 puts, selling the 610 puts. The $5 wide put spread done for a $1.40 debit, predicated on, look, the news can be decent. It could even be good, but it has to be spectacular or this underlying could fall.
And, I like this short play. You're going to be playing on earnings. Let's see what Ben thinks about which direction is headed. Let's see. Ben, the technicals.
Well, longer term still looks to me like the bulls are in control here, Nicole, but let's just start with where Don kicked things off, and that was with some of that short-term weakness. We've definitely seen some stocks coming under pressure, not just the last day or so, Don. I mean, this really started out into the end of last week. I identified the move lower first and foremost on a 5-minute candle chart. It was up around 700, if you remember. Again, today we're talking down to that 640, 645 area. No rejection, this lower level as of yet. Again, we're talking about a 5-minute candle chart here, so we want to be careful how much weight we put into this, but I think it's pretty easily identifiable. The value is moving lower in this instance, currently balancing again around 654, and as mentioned here, no rejection of this lower level, headed into a big catalyst, as Don mentioned. Let's take a look. Stepping back, adding quite a bit of time on, hourly candle chart now, and we're going all the way back to the lows that we saw this spring, early May, end of April, around that 565 level, rally up, areas of consolidation formed at higher and higher level. Again, here's an instance where we've broken down, right? We were balancing around that 677, 680 area. We've come off that, not what the bulls wanted to see, but we still have yet to take out 635. So again, testing a key area, possibly just forming one larger area of consolidation. And with that thought in mind, let's take a step back and look at the daily candle chart, because you're going to see a similar pattern playing out. Not only a well-defined trend up off that spring 2022 low, we were trading around 160 if you remember, but this month just shy of 690. Now we're starting to transition from that high conviction vertical phase to the upside, it looks like, to something a bit more overlapping and rotational. And again, you are seeing that play out here. So that's what's, again, I think on that short-term chart, that weakness, but still relatively contained, still holding up above key levels. So yeah, it looks to me like, although the 5's a little bit of a disappointment, that more granular chart, this longer-term one, again, the bulls are being rewarded for sticking with this one, and it doesn't seem to be rejecting this upper level as of yet.
Okay. Don, have you been playing a lot of the earnings? Is that part of the strategy? Do you love earnings season and do a lot of these?
Let's forget for a second about directional bias. Just push it aside for a second. Don't worry about being bullish or bearish. Netflix has approximately a $55 move implied in the options, right? So I'm going out and buying this $5 wide spread for $1.40. So I've got $3.60 of upside with almost like this 50-50 shot, whether it's going to go higher or lower. And in this case, like, look, we can talk about subscriber growth. We can talk about, what the technicals look like. But the interesting irony, it is exactly that. It's about the strategy. It's about the proper risk reward with a decent size expected move. And it's one of the reasons I love earnings trades.
Yeah, okay. We could sense the excitement. I think we all love earnings season. What about Goldman Sachs? I mean, all the banks have done, had double beats for the most part. Your thoughts? You saw the upside breakout and you thought it was overextended at this point.
Oh, I mean, come on, Goldman Sachs. And, again, Ben, I'm going to bring up some specific technicals. You know me, I'm much more of a quant, not a big technical guy, but everything I'm looking at here, RSI is just wildly overbought. Stochastics, it's in ridiculous territory. Linear regression, it's actually hitting the upper edge of the linear regression over here. I mean, every aspect of your technicals are just an overcooked chicken at this particular point. And I am taking the short side of this, no question about it. I can get into the fundamentals and talk about credit loss provisions to the future, which I think are going to rise. But again, push that aside.
Yeah, I grabbed some calls down here. You just got that rip up there.
I am going all the way out to the October 18th. Why?
8 cents.
October 18th expiration's way out there.
Just got long on the SPY. It's like 8 cents to 32, 33 cents. I got filled at 32.50 with commission, so I got filled probably like 34 cents on those calls. I took half of that position off, so that position's pretty much free for the most part. It was a nice chunk of change here. I will not let this go red. I think you still have to be careful. Guys. Don't get too cute. That was a very nice rip. That rip just paid like hell. That was awesome. Let's see here, though. Keep an eye on the QQQ. I'm just putting some money in my pocket, Sorry, I didn't see your comment. D. 35, guys. 35 cents from 24, 25. I'm not, wherever you guys got in, we got it. You could have got it to the mid to low 20s. Remember, 20 cents to 40 cents is 100%. 20 to 40 is 100%. 20 to 30 is 50%. All right? Pay yourself. The market is weak. People are trying to buy this thing up. Sell it. Get rid of it. Take your profits. If 35, 20%, 40%, 50% is not enough, I don't know what to tell you. Okay? We can do this all day. If you want to take your profits, keep a couple on just to have it on for when we go into the bond auction here at 1 o'clock. Cool. But just understand, if you're in dailies, you're still fighting theta, this, that, and the third. So it's not worth it. At the end of the day, it's not worth it. All right? The trend is to the downside. You can, listen, don't ever be scared to say, well, what if it's more expensive, or what if I have to pay more? If you have to pay more, then think about it like this. People pay more for for grade A real estate. They will pay up for A-list real estate. They don't want C or B. Well, B is not bad, but they don't want C. An investor that's in real estate does not want C. It's C for a reason. So see your way out of that deal. This is why you take profits. The trend is to the downside. There's a lot that I see right now. I'm just not saying it. Here we go. We're going to 557. So if you didn't get out of that, you better get out of it now. I'm telling you guys right now. We're headed to 557. Watch. You're going to start getting a limit down. Boop, boop, boop. Watch. Boop, boop, boop. It's going to break. It's going to break. New low a day. Watch. Here it goes. Here she goes. I want you guys to get this good. I want you guys to be able to do this shit. You guys can do really well for yourselves. And there's people that probably did not take profits on those calls, and they're like, oh yeah, I want to get calls. Like they're trying to fight the trend. This is different than when you get a pullback. Like if you come into the day and the market pulls back off the bell and then it continues higher. No, listen, there's a news catalyst. It's going to sell off all day. You'll probably be down 2% by the end of the day, 1.8%. What I tell you? What the did I just tell you guys? And you wonder why I want you guys to sign up for a one-on-one. so I can physically work with you guys individually to get you guys to do this stuff.
Same thing's true at Google. Like the YouTube infrastructure is using these GPU-based architectures. So first off, a lot of the spend is actually generating real returns right now.
Hit that like button for me. I appreciate y'all. Hit that like button, subscribe. I hope you guys are having a great day. Let's just relax for a couple minutes. I'm going to grab a bowl of cereal. I'm going to scan around the markets and look. We'll go through some charts. God damn shit.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
People love pricing things and trading and forecasting and speculating. Yeah. And this is the beauty of our building. We're a mechanism to price any future event, anything in the future. Just price it and price what this probability, is it going to happen, is it going to not, and allow people to come and negotiate via trading based on what they think is going to happen in the future.
Join us, the latest episode, Market Overtime, a new way to trade everything. Kalshi's co-founder and CEO, Tarek Mansour, explains event trading and operating the first legal prediction market. Trading everything from pop culture to politics. Kalshi's approach offers a whole new realm for investors to explore. Find this episode and more right on schwabnetwork.com. Schwab Network YouTube page as well. And welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange, where we've seen a mixed bag. Dow at new highs, major selling in the NASDAQ. So big banks in focus, certainly after all the earnings we've been seeing. Taylor Kriskowskiak is with us, VP Investment Strategist, Themes ETF. Thank you for being with us. So some of your thoughts here, Taylor, on what we've been seeing with the big banks. I mean, we could say beat, double beats on all of them for the most part, but what's the real deal?
Absolutely. I feel like it's one of the more untold stories of the market in the current time frame, where we see so many headlines being dominated by the Magnificent Seven. But one of the unsung stories, I think, is the performance of these big banks, specifically the too big to fail banks, or these global systemically important banks. You just mentioned one of the big names, JP Morgan here at home. Just to put some numbers in context, to give people a little bit more context of this story, 17th century bank like Barclays, you normally don't associate with double-digit returns. That name is up 54% year to date. And just to put, again, all of these numbers in context, those are outperforming 6 of the 7 Magnificent Seven stocks, something that was really highlighted after the sell-off last week. So in looking at this market where there are so few places for growth and people were feeling like the markets were getting very tech heavy, this is a great opportunity to diversify your growth in your portfolio towards these big banks that have really seen a lot of windfalls given the current macroeconomic environment that has inherently favored the way that they are positioned and are relatively insulated from a lot of the factors that are pressuring some of their smaller peers, and they have stood to be benefactors in this market. And again, there's a story that I think will continue to benefit them over the course of the next year and going forward for years to come, given the sort of elements that we're looking at in the market right now.
I really love that chart right there, because it's an unusual one. We don't see those names in that way in that kind of chart. So it really does tell the story. I mean, you have Mitsubishi, a Japanese bank, Barclays on top, then Meta, Google, Amazon, right? It's also today, I was listening to Bob Diamond, formerly of Barclays, the former head of Barclays, and he was talking about the four big banks really just, holding all the chips, and how maybe some of the others, Credit Suisse, he mentioned UBS, he mentioned, I felt like there was a bit of a divergence. He also noted the consolidation we're likely to see in the regionals. Is it all about the big banks? I mean, Barclays, you noted, has been doing really well, and I think that's notable too. What are some, if you do it name by name, what do we need to know?
Well, I think we can see it in the earnings across the board, whether it's JP Morgan just reporting its record earnings. It once again surprised, beat expectations, posted a record profit. Bank of America did the same thing. Citibank did the same thing. So you really look down the rest of the roster, there is incredible strength amongst all of these names. And when you really unpack the reasons why, there's a lot of kind of eccentric and esoteric data to unpack here, but I think it's integral to the story. Specifically, everyone keeps talking about commercial real estate and the sort of slow car crash that we've been watching unfold. Everyone seems to think that we got the good CPI read last week and we're out of the woods with inflation, the Fed's going to start cutting. But really, I think that doesn't pay proper respect to the environment that we're in right now, because the reality is the Fed hasn't cut yet. And because they delayed cutting, even when we look out 2 years, the implied policy rate is still 46 basis points higher 2 years out because they delayed cuts. Remember, markets started the year thinking that the Fed was going to cut 4 times this year. They haven't yet. And the reality is that's pushing back the timeline of those rates cuts. Meanwhile, all of this commercial real estate, specifically those loans, are going to need to get refinanced at the prevailing rates of interest right now. So when we take a look at the amounts, I mean, the notional value of the IMF just put out a great report a couple months ago about their financial stability report. There's $277 billion worth of these loans that are coming due in this next year that need to be refinanced. There was actually great reporting out of the Wall Street Journal just last night, hit the tape. Their headline was "Real Estate Meltdown Strains Even the Safest Office Bonds." So this is a really significant trend that we're seeing play out in the market right now as everyone moved from the office to work from home. The office sector down 23% over the last year. So it's really, really hammering anyone who has exposure to this commercial real estate. And the important distinction here with these big banks, these global systemically important banks, again, those banks that are too big to fail, they are inherently required to have much more conservative requirements when it comes to their capital reserve ratios. And just to put some numbers around this,
are holding up
have
pretty nicely
4
here.
times less exposure to commercial real estate on a relative basis relative to some of these smaller peers. So when we take a look at how these big banks have fared ever since the Fed started hiking rates back in 2022,
Look, now you're down.
Over time, when we look at how that segment of the market has done, they are up significantly over that 2-year period. So they are outperforming the NASDAQ, outperforming the S&P 500 since 2022. And that speaks, I think, to the fact that they are not only insulated from this commercial real estate
I got a bagel
but
cooking.
Importantly, they are also
watch GameStop. That could be a nice entry for GameStop.
Names like JP Morgan were able to stand and actually acquire troubled banks like First Republic when we saw that banking crisis back in 2023. So you put all of this together, and these names, I think, are going to be a great place to be to diversify your portfolio. To put into context, our fund, the Global Systemically Important Banks Fund, ticker symbol GSIB for those global systemically important banks, is actually now, as of today, outperforming the NASDAQ since inception, and will be an important place to diversify your portfolio exposure.
Yeah. Taylor Christkowiak, thank you. Themes ETF. Good to see you, Taylor. Thank you so much for a look at those banks.
Thank you so much, Nicole.
Coming up next, the disruptors. George Sillis is standing by. He's going to take a look at Arista Networks. Saw a big price target raise over at KeyBank. He'll give us all the details and example trade next here on Trading 360.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A look at developing stories. We bring in Caroline Woods is with us, senior markets correspondent here on Schwab Network. And in the semiconductor world, we saw earnings from ASML this morning, and the Nasdaq's down 2.2% a short time ago. ASML is down 10%. Tough day for some of these names. Tell us a little bit about the story.
Yeah, the semiconductor equipment manufacturer is really under pressure, but it's likely not actually upbeat earnings that are weighing on shares, likely getting overshadowed by some of the other headlines that we're hearing in this space, because it was a beat on both the top and bottom line. We'll get to those numbers in just a second, but let's talk about these reports. Bloomberg's reporting a potential tighter export restrictions from the U.S., saying Biden is considering using the most severe trade restrictions available if companies like ASML continue giving China access to advanced technology, semiconductor technology, so potential tighter export restrictions from President Biden. Meanwhile, former President Trump told Bloomberg Business Week that Taiwan should potentially pay for defense, so that could be kind of ramping up some geopolitical tensions as well. But running through ASML's results, it was a beat on both the top and bottom line. As I said, earnings of $4.38. Easily topped analyst expectations of $3.87. Revenue rose almost 11% to $6.77 billion. That also topped what Wall Street was looking for. ASML booked about 5.5 billion euros in orders in the 3 months up to June. That's up from 4.5 billion euros in the same period a year earlier. They also stood by their full year outlook, saying we see 2024 as a transition year with continued investments in both capacity ramp and technology. We're currently seeing strong developments in AI, driving most of the industry recovery and growth ahead of other market segments. And then on the earnings call, they did actually touch upon China, saying we don't comment on any rumors regarding possible China export controls. They did say that for some fabs, for plants, there are more limitations than others, but in general, they can still operate in China, saying there are limitations that are more stringent for some fabs, particularly related to parts being sent from the U.S. or from Europe. So, we're able to touch on it, but not actually commenting on the rumors that report generated.
All right. Thank you for all of that. Thank you, Caroline Woods on ASML. Another name with a down arrow, but some big news. George Sillis is here, senior markets correspondent, taking a look at our disruptor, and that's Arista Networks. In fact, I know it's down about 4%, but KeyBank did boost the price target. Yeah. Tell us a little bit about this call.
Yeah, I mean, obviously we're seeing a pullback in a lot of the large cap semiconductor names and equipment manufacturers. And Arista, it's been one of these gainers this year, Nicole. If you look at the stock, irrespective of today's move, it's still higher by over 90% in the last 52 weeks. And the fact of the matter is this company, in terms of their network solutions, hardware, they actually provide all the backbone infrastructure for things like internet service and, of course, high-value computing and edge cloud computing from a cloud computing standpoint. But also, you got to think about mainstay customers that are essentially buying a lot of equipment from the standpoint of their basic components, like Microsoft as well as Meta platforms. And the company's earnings estimates, irrespective of the price movement to the downside, the last couple of weeks, even today, continue to inch higher. And if you look at some of the analysts today, for instance, like KeyBank, they increased their price target from $349 to $432. And I think it has to do with the fact that the hardware and infrastructure networking standpoint of major enterprise customers from a technology standpoint continue to purchase Aristanet's technologies, and their earnings estimates continue to rise. If you look at 2025's estimates, they rose from $8.50 to $9 in the past 30 days. And essentially, if you look at their profit margins as well, in the past year, compared to their 5-year averages, they're running about 300 basis points higher. So they've been growing their sales over 25%. If you look at their net income margins, they're higher. So they're growing more profitably. And I think that speaks to the pronouncement of their network gear, which is utilized for hyperscale data center as well as artificial intelligence.
All right. So how would you go now about an example trade?
Yep. So right now, obviously, implied volatility is rising in premiums. The big techs are pulling back, and I think this is a great opportunity. If you look at Aristonet, the 50-day moving average is still intact, but it certainly could come down to those levels, which is around $325. So I'm going to play it so that it pulls back, but I think that it may end up holding that area. So what I'm going to do is I'm going to sell a cash secured put right around that area of about $320. And so with that said, you could sell that put, this is the August contract, by the way, for about $11 a share or $1,100 a contract. So what we're doing in this case is, allowing the stock to continue to drift lower to those levels, which is around that 325 50-day moving average. And you can actually earn about 3.5% yield to the strike price with that premium. So this is essentially a bullish to neutral strategy, but it allows us some flexibility and drift to the downside. So if you do get assigned shares, you're going to be assigned shares with a break even of $309. And if you look at the current price around $341, that's close to 10% downside to break even. So it gives you flexibility, but if the stock does hold the 320, I mean, that's about a 3.5% yield or return in the next 30 days.
All right. Sounds like you have us covered for a little bit of swaying on the stock and then the move. George Sillis, nice to see you. Thank you so much for that. Coming up next, our 360 round, and we'll take a look at the earnings from Johnson & Johnson. It's up about 3% right now. It's looking at 3-month highs in reaction. Let's break it down. Our panel is ready. We'll be right back.
No, we're still holding.
Be part of the latest commodities action on
How long
Futures
was
with Ben
this?
Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but
30?
now I'm working for Schwab.
So
I
what is
love
this,
to
5?
help people
5,
understand the world through their lens
really, 5,
and
10,
invest
15,
accordingly.
20,
You
25,
can call
30,
us
35,
Christmas
40,
Eve
45.
at 4 o'clock in the morning. We're going to always make
45
sure
minutes.
that you have all of the financial
45
tools
minutes.
and support to secure your
So,
financial future. That means a lot for my
Run the
community
clock.
and for every community.
Run the shot clock. Sorry.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on
5,
any
10,
device
15,
for
20,
free.
25, 30, 35, 40,
Schwab
45. We're there. We're fucking there,
to
y'all.
Schwab Network.
Oh,
Daily
shit.
live exclusive
Y'all better
content
watch out.
tailored to today's
We're there.
Broadcasting 24/7 from our studios in Chicago.
5,
And
10,
from the heart
15,
of Wall Street,
20,
at the New York Stock
25,
Exchange.
30, 35, 40,
Up to the
45.
minute market insights.
This could be
Example
it.
trades
This
and
could be the.
stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis
No noise.
ahead of
Yeah,
the
no
biggest
noise.
events for the
Whatever you
economy.
say.
From bell to bell and beyond.
Watch live
And on
the
demand.
keys broke to a new low, guys.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Bro, how is
Schwab
the
Network,
spot or the
powering every
IWM
investor
already
and
at
trader
230?
every
That is insane, bro.
Ethan, how's my favorite client?
Great. I started using
GameStop's
Schwab
little
investing
bitch
themes, so
ass.
now I can easily invest in
GameStop's
trends,
such a little
like
bitch.
wearable tech.
Look at the Dow,
Trends.
just making new highs.
All that
Like a little
research
bitch.
sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From
Right,
every
I gotta
click
get to work. So
every
what I'm
tip.
gonna do is
There's
I'm
no
gonna
fear
make
of
one
missing
more
out on
bagel,
next-gen investing.
and then
Available
I'm just gonna
anytime,
say the heck
anywhere,
with
on
it.
any
It's
device
time to
for
long
free.
banks. I'm just gonna
Empower
you
your
know,
portfolio with the
I'm
Schwab
gonna
Network.
go long. Whatever
He's
the
Alex
market wants
Coffey.
me to
I'm
long.
Jenny Horn. Join us for Next Gen
Healthcare,
Investing.
1 p.m.
UNH.
Eastern.
I don't give a shit. I'm just gonna go long.
Schwab Network.
Goldman Sachs. Look at UNH ripping this morning. So it's not hard.
Welcome back to Trading 360. It's time for our 360 round, and we're talking all about Johnson & Johnson today, up about 3.2% right now after a double beat on the numbers and a somewhat mixed outlook for the company. Damian Conover.
I'll be right back, guys. Give me just a minute.
Equities at Morningstar, and Lee Brown, global sector lead for healthcare over at Third Bridge. Damian, I'll start with you. You know, we noted the double beat. They sort of pulled back on the earnings per share, still trying to digest the moving parts of the acquisitions, we understand. Tell me a little bit about your thoughts on the quarter and the outlook.
Yeah, great overview. I think one of the dynamics with J&J right now is they are making some acquisitions, and with new accounting rules on that, a lot of times those are accounted for in adjusted earnings. And so a lot of times historically those would have been pulled out, but in this case they're being added, which is consistent with what we see for most pharmaceutical firms. So even though the earnings are dropping, it's sort of artificially dropping. And if you look at the underlying earnings guidance, it was actually increased slightly. But I think most importantly, when we think about J&J, is there's sort of two dynamics that I think have been weighing on the stock. And I think what we're going to see is a reprieve of those dynamics and the stock to actually do
What's
quite
up,
well.
bro? I didn't see your comment.
Fair value of
Why is it not up here?
$164. So we see upside. And the two
Oh,
dynamics that I think are on folks'
Sorry, man. What's up, buddy?
First, the patent
I was just about to
loss
say.
on Stelara. This is about 20%
Grabbing another
of
bagel.
drug sales, and so it's a big patent loss. And so biosimilar pressure is going to start later
right
this year and
Back
weigh
in
on
just
the
a
name.
second.
Now, I
Well,
think what we're going to see
I'm
is
gonna
a lot
go
of
over
innovative
some,
products to offset that, particularly
some
in the
charts.
multiple myeloma franchise
GameStop
that they
short.
have. And really over the next 5 years, probably
Looks like it's breaking
adding
this
incremental
level. You might be able to
$10 billion
test
of
and
sales,
try to break
largely
this low a
offsetting
day.
the Stelara
Just
patent
nothing
hit.
moves,
The other point
man.
here
DJT,
is their next generation immunology
it
drug
doesn't want to
from
move.
Phia
I mean, it is
looks
pulling
well
back.
positioned to offset Stelara as
I mean,
well.
we
So
fucking
we
nailed
think
that one.
increasingly the market's getting more
What do we write
comfortable
down?
with the
DJT,
Stelara
36 holds,
biosimilar
target
threat. And then the last
38,
point I'd make,
39,
I think
42,
the market's
50-day
getting
moving
more
average.
comfortable with is the talc
Get
litigation.
short up there.
This has been a risk overhang for multiple years. We think it's increasingly likely that a settlement that J&J has already established, close to $11 billion, will be accepted by plaintiffs, and this risk
Did you get
overhang
bad storms
starts to
last
come
night?
off the name
Guild
later
worked
this
nice. Oh,
summer.
good stuff, man.
Those
That's
two
what's up.
dynamics, I think, really do help get the name.
Did you get pretty bad storms where you're at? I was up till like 2 o'clock in the morning. 1:30. It's like 1:45, 2 o'clock. Fucking storms were ripping. I mean, wind. It just, I mean, it was a show. I gotta tell you, it was a show. I'm talking just straight lightning. It was just like blue outside. It was just consistently just lightning bolt blue outside. Yeah, I was up late, and I'm like, man, as soon as I fell asleep, boom! I'm like, you gotta be fucking kidding me, bro. Like, I had this weird feeling that, like, today would have been a day for opportunity, and I'm like, man, I didn't get sleep last night. I think I might have got like 6 hours Sunday night, and I'm like, I'm not going to be up in time to have a nice game plan before the market opens or wake up early enough to take anything pre-market. I'm just like, I'm like, you got to be kidding me. So, but yeah, I had it too. So, it was really hard to get up. Like, I don't ever not hear my alarm, and like that thing was just blasting, and I was just out of it. I was just out. So, but yeah, I'm gonna go make another bagel, and then probably just go ahead and go through some charts. You know, I'm still trying. It's not that I'm trying to fight the trend, but like, I'm pretty glad that I didn't short GameStop today, or buy puts, I should say, not short, but like, look, GameStop opened up at 28.42. It's at 28.67. It hasn't moved. You know what I'm saying? So SPY tried to make a new low there. Qs are making a new low. Pretty significant news. Don't try to fight the trend unless something changes. Unless you really see something that's going to turn these markets around. Just don't fight the trend. If you're going to fight the trend and you want to go to the upside, go trade banks. Go to JP Morgan, Goldman Sachs, healthcare, oil, energy, Exxon, Chevron, Oxy. Like, just go. If you want to go long, go where the market's going higher. You know, just keep it easy on yourself and you'll get paid. So, yeah, I'll be right back, man. Thanks for stopping in, bro. It's good to talk to you. I hope everything's been good and well with you. Hope everything's, you know, hope everything is all right. And it's always good to see you, man.
End of 2023, J&J put out some pretty robust long-term growth expectations for both their device segment and their pharmaceutical segment. And we have lower expectations than management for the pharmaceutical group over the next 5 years. If management's able to hit on those longer-term growth estimates for their pharma group, there's upside to our 164. But overall, yes, I think J&J is a great stock to own right now when we see it as undervalued.
Yeah, so you talk about the medicines and the medical devices. Lee, any better players that you would run to over this name?
Well, at Third Bridge, we really help our investors make better investment decisions through primary due diligence. We don't have stock advice. I would argue that you know, it largely depends on the view of the macro.
Real quick, guys, keep in mind, the market's red, things are down. GitLab is still green and hanging out above the 100-day. It might break and test this pivot high here, which it already did test it. Just see if this thing tries to do what Alibaba did last week and just sit here, right? I don't know if it's going to do that, but it's acting just like Alibaba. It just literally traded sideways all day long and then just came in with a huge gap up the next day. Baba's selling off. I knew it, man. I can't believe I missed that. So Alibaba's moving. So there it goes. Tesla did it. I was gonna buy puts before I bought those calls on the SPY and scalp the SPY, but they wanted like 248. 54. They wanted like $400 or $500 or $4 or $5, you know, for those puts, and I'm like, it's just hard to just justify the fact that I got 2 days left, and you want me to, you know, my risk doesn't change. You know, my risk doesn't change with that. It's not like, oh, I'm risking more because I'm spending more money. No, my risk will stay the same. But it's just, you know, trading weekly options, I just worry more so about the part of the entry not being perfect or, you know, on cue to where I have, like I'm hitting my, it's not that I'm hitting my stop loss or getting close to, like, my risk. But you could get close to your risk and still be correct, and you have to just give it some room. And I just hate that. You know, if it was like Monday, Tuesday, I wouldn't have no problem with it. But you start getting into Wednesday midday, and you can really start to see every half hour, every hour, those contracts just really starting to decay on you.
In-depth technical insights.
There's a saying.
Every changing trend in market.
And I've always said this before. I'd rather have 10, 15. I'd rather have 20% on 1,000 than 100% on 50 cents. You know what I mean? Pay more for your contracts. Go out further, and if you pay more, like, it's just better. It just really is. It'll help you. You're gonna spend more, but you'll make more. For the most part. If you're buying $10, $15, $20 out of the money on something that moves $5 and you're $10 out of the money, well, you're just throwing your money in the toilet at that point. The only time you do that is if there's news and, you know, it's significant news. Oh shit, I thought that was still playing. Yeah, I had to get it on for you.
Yep. You know, if you heard some of the commentary from Fed's Waller, I said getting closer. There was some other Fed commentary also out of Barkin, encouraged by the breadth of the disinflation. Does that stop, though? That's going to be, I think, a big question for that path on rates moving forward. But, Kev, the big news today, and why tech is down, is potential restrictions on chip sales over in China. And then Donald Trump coming out and saying basically, hey, Taiwan is basically taking 100% of our manufacturing of chips, and they should pay us to defend them. So some geopolitical concerns here moving into this space. But if you look at a lot of these chip names, they're just off of their all-time highs. Magnificent Seven, 5 out of the 7 hit their all-time highs over the last week. So, you know, maybe some profit taking warranted here.
If you're surprised by geopolitics going into chips with a relationship to China, shame on you for being surprised.
Yeah.
Because that should always be looming. If any part of your income stream or what your business is related to China, you're going to have geopolitical risks.
Yeah.
And that's it. And end of story. So understand it and be prepared. Does not mean you can't trade them. They're great traders, but understand that headlines affect stocks. A headline affects stocks all over the place. A headline affects Boeing stock. Remember that time where Meta Platforms, every day it was something that you got to watch the headline stream in these names that you trade, because it affects these stocks. And, you know, one day they're off the radar screen and the stock rallies. The next day they're the double-barreled news, from both sides of the administration. It's not going to be a good day for them.
Yeah, and you've Nick, we've got Meta down 4%, NVIDIA, which we're going to talk about later on in the show, down over 5%, nearly 6% today. You know, I can see the profit-taking aspect of it, but then again, at the same time, this is a buying the dip type of market that we've been in. So maybe this is opportunities, because once that rhetoric or headline news that Kevin talked about kind of goes away, then, you know, maybe it is a buying opportunity.
Yeah, the question is always, you know, how far. If you buy it right now, you're probably not buying the low and you're probably not buying the high, right? You have to scale in and scale out. And I think on volatile days like this, you know, where particular names are sensitive, you know, it's a little bit of a wait and see kind of strategy. If you're going to buy something, you know, you can dabble, right? But you don't have to go all in. I think scaling in and scaling out always makes sense, right? You're kind of dollar cost averaging. You're not going to pick the lows. No one really knows. The valuations have gotten extended in these names like we've talked about, guys. But you know, I don't think the chip story changes the overall AI narrative that has fueled this. But we don't know, you know, if there is a U.S. governmental change, how that's going to look. You know, there's a big change in the UK right now in government, right? There's geopolitics and political turnover happening across Europe. There's political change.
Guys, if GameStop wait, what just happened? Dead dog. Oh, okay. If GameStop holds this level, I wouldn't be surprised. If this thing holds here, shit. 28.49, 28.50. Yes, 28.50. Watch this level here. If this thing holds, watch out and see if it ends up trying to rally back to $30. I'm going to keep my eye on it, because I do think that if this thing holds here, like right now, I think it, because what'll happen is if this does hold, or let me just say, how about this? If it doesn't hold, then sure, we could start to see some really, some downside here. But I think anybody that was short will start to give up, and they're like, you know, they're going to be like, well, fuck it. I'm not going to sit in this thing because it's just going to consolidate all day. It's not breaking the levels. I've moved $1.50. Like, I'm done sitting here wasting my day with this thing. The volume is low. And this technically is a consolidation. So if you're still here, either we're going to rally, test $30, or if we sit here all day, then you look for a gap up coming into tomorrow. I only have like 2 more bites in my bagel, and we'll go over some charts.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. #1 broker here for the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
What if we expanded the definition of a financial instrument to include anything that has economic and social value? And that was the genesis of what we built, which is Kalshi, an exchange where people can trade on anything, can take a position on any event by buying yes and no shares on things like politics, climate, weather, economics, COVID, health, tech, and anything that you can think about.
On the latest episode of Market Overtime, a new way to trade everything, Kalshi's co-founder and CEO Tarek Mansour explains event trading and operating the first legal prediction market. That's going to be every day this week on Market Overtime, 4:30 p.m. Eastern Time, right here on the network. Sits down with an interesting conversation with Oliver Rennick. All right, let's get into a discussion about the chip space. It's under pressure today. Taiwan Semiconductor just off all-time highs. About $20. It's pulled back from those highs that we saw just a few days ago. Let's bring in Caroline Wood, senior markets correspondent here. Caroline, ahead of earnings overnight from Taiwan Semi, it seems like the backlog of orders for the chip builder here, they build all the infrastructure for these AI chips, handsets, automotive, Internet of Things. They're building everything. They're the world's biggest. But what are you seeing ahead of earnings? Because we're starting to see continued weakness in this space.
Yes, and shares of Taiwan Semiconductor, part of that weakness, under pressure today, down about 6.5% heading into earnings, still up about 67.5% year to date. So it's really been a standout year, but definitely contributing to the chip weakness today. Earnings, of course, being overshadowed by some of the other news reports that we'll get to. I heard you talking about them with Nick as well, but concerns around China and Taiwan. In terms of the actual numbers that we're looking for, EPS of $1.37 in US dollars, but I've seen estimates as high as $1.44 for the numbers. That would compare to $1.14 in the year ago period, so all pretty significantly higher, all the estimates significantly higher than the year ago period. Meanwhile, revenues expected to rise to $20.1 billion. That's a significant increase from the year ago's $15.68 billion. Back in April, when TSMC last reported, it said it expected its business to be supported by strong demand for 3nm and 5nm technologies, and partially offset by continued smartphone seasonality. We saw smartphone seasonality weigh on Q1 as well. High-performance computing has been a real key growth driver, though, for Taiwan Semiconductor, and Wall Street's expecting solid momentum to really continue there. But I mentioned the worries about China and Taiwan. I know you've kind of already gone over them, but just to recap, of course, there's concerns of tighter trade restrictions from President Biden, according to this Bloomberg News report, that Biden's considering using the most severe trade restrictions available if companies such as Tokyo Electron and ASML Holdings continue giving China access to advanced semiconductor technology. Meanwhile, former President Trump was talking about Taiwan, saying that they should pay the U.S. for defense, saying they take about 100% of our chip business, saying, you know, we're no different than an insurance company. Taiwan doesn't give us anything. So I think that's, you know, kind of ramping up geopolitical tensions and weighing on chip makers today as well, in addition to kind of the rotation or the broadening out that we've been seeing. So we've seen weakness across the board. I mentioned Taiwan Semi down about 6.5%
hopefully we
today.
can put some pressure on the market
ASML is down more than 10%.
to get it up off its ass and actually start getting some movement going here. I'm going to go through some charts. So if you guys have charts, or I'm sorry, if you guys have any tickers you guys want to cover, you can throw them in the I get it, but yeah, like the camera's not even on right now. Like it's not even logged up. But yeah, I'm getting there. I'm getting there. I'm getting there. I know that it definitely helps views and stuff like that. GameStop here. Is GameStop going to hold yesterday's close, guys? I'd watch this, like seriously watch this level. You're going to start seeing it. I'm going to use the 1 minute. 2860. Alright. So, anyway. If you guys have tickers or anything you guys want to throw them in the chat, you can. I'm just going to go. I have this. Let me see here. I don't know. I don't see any. TKNO, AMIX, UVXY. We have Shim. There was some news. The Qs are dropping. We know that. What was it? What the hell is it called? Canopy Growth? CCG? Canopy Growth. CGC. Here, CGC. CGC, that's it. Okay, so it did not hold. I figured it wouldn't. This was a nice... Wait, no, it is holding. 15-minute chart down here at the bottom left. We said if we hold this previous high here, that you could still possibly see a bounce to break through $8. But I think this thing's done. I don't know if you're going to get that. Let's see. Alright, $7. So CGC had a nice run this morning. Look for $7. $7 on CCG. I can't even say it right. CGC. But let me get set up real quick. Again, I only need just 2 minutes. I just was wanting to go over. Okay, so we broke that. We should have held it, but we didn't. Because I was going to say that if we could break $8 on this, then you had $2 to the upside. You know, $2 on $10. That's a nice 20%. They might be. They might be. I still think you're going to get a lot of regulation or deregulation and legalization. Like common sense. Like I think people are misled on a lot of his beliefs and what he wants done. Will the vice president like it? Maybe, maybe not. I think he's got a little bit of that religion in him, but it doesn't matter. The one thing that Donald Trump cares about is getting the government out of people's lives where it doesn't need to be. There's a need for government, but this idea of big government, weed legalization, he's already talked about that. Well, I mean, it pretty much already is, but they've already did something. But either one of them is a hitting point. And the thing is like neither of them have done it yet. So I don't. There's definitely a hurdle. There's a hurdle. I don't know what that hurdle is. It got declassified, but declassifying it. Here's the thing. So if we owned Canopy Growth, right, and we were located in Jersey, or let's just say New York, the problem that you have is, if not every state is legalized, you have a transportation issue there, where you have to buy buildings and set up locations in each state. You know what I mean? So it would help if they could just get this shit over with. And that's not even the borrowing money. You know, there's the transportation issues, having one big location in multiple areas instead of having we have to make our product and sell our product in the same location. So that means more big real estate. You know, that's more money. We get more money when we want to go, through all these loans. There's a lot there. So I think you see, I wouldn't say that the Democrats would legalize weed. The only way you see the Democrats legalize weed is if they take something from you or from the people. If they ban certain types of rifles. Here's the thing, is I'm not going to say assault rifle, because assault is not a material product, right? Assault is an action between an individual, right? Assault is assault. The gun doesn't assault you. The person assaults you with the gun, okay? So whether it's a handgun, and they said this yesterday, they said on the news, it was actually Fox News during the RNC, somebody with an AK-47 style handgun. What? Like, if we could just be a little bit more educated. All right, it's a rifle. It's the same thing as any other rifle for the most part. It's got a magazine. It holds X amount, but it's the look of it that they don't like. You can put attachments on it, this, that, and the third. But at the end of the day, you're not having legalized citizens doing this. So anyway, I don't want to go down this path. I feel like I grew up around guns. I feel like if you're idiots are gonna act like idiots. So I feel like the only way you really get them to even focus on weed, is if they take something from you. You know what I mean? I feel like they're like, oh, well, we're gonna take this, but let's give them this so we can take this. Like, if you go look at a lot of this stuff, you'll see that there's a give and a take there. Like they've taken something or they've done something, and then they do something else. They do something completely different by, like, let's just say legalizing weed, so you don't see that I opened the border. Oh, I legalized weed. Like, that'll be the talking point. Because we don't want to talk about this. That should be talked about.
Set to explore creating a stable coin deposit token. That's Sandy Tango.
So State Street to get a whatchamacallit. But yeah, I get it. Democrats will legalize weed. They haven't done it yet, so you know what I mean? I wouldn't go to as far as saying they'll legalize it, because no one has done it yet. Obviously certain states have, and they try to it's been decriminalized. They've scheduled it down. I think that carrot has been there for a long time, and they like dangle it. That's a carrot that they just want to be able to keep dangling. All right, hold on. Something happened here. Coinbase. Let's look at Coinbase. Mara. State Street. What is State Street's ticker? Do you guys know? I know State Street has... Or no, is that why they were looking at S&P Global? STT. 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 Oh yeah, so I don't know. I just was what I was going to say was don't be surprised if it doesn't come from the other side. Don't be surprised. Just like Bitcoin. Gary Gensler was if you guys go look, you guys can see a bunch of videos that Gary Gensler made from MIT on crypto, and he has not done anything for crypto. He hasn't done anything. Like, he brought back ETFs. What do fucking do? Like, again, you got to remember, that is the Democrats. That is, you know, we don't want anything to do with Bitcoin because we are the government. We stand for government. We stand for the US dollar, which is okay to an extent, you know. I think there is honestly a big, like, what's the word? See, this sucks because I've been struggling with words lately. I think there is, like, not like butting heads, but like there is a, like, let's say this, right? Like, what's the word? Give me the word for this if you guys can, please. If, let's say I get in trouble and I go to jail, but my mom and dad work at that jail. That is a conflict of interest. That's what I was getting at. Conflict of interest. So, I feel like there's a conflict of interest with accepting Bitcoin and, like, I don't know. I think, personally, like, I don't know what people want. If you guys could chime in, like, what regulation do people want? Like, if they're not going to embrace it, then they can't embrace it enough to regulate it. Like, okay, Coinbase, they follow NASDAQ, New York Stock Exchange, uplisting, whatever banking issues there are, or laws, not issues. I'm sorry, whatever banking laws that they have to follow, for the most part, like, you know, sending the IRS people's information, having X amount of cash on hand, clearinghouse stuff. Like, I get all that. I don't know. I just think, like, I don't know what people want the SEC to even do about anything. Like, I don't know. Like, I don't know, like if the U.S. accepts it, like, I don't know, like, because, like, a business, what I'm trying to, it's hard because, like, no, I get it. I don't smoke inside. A business can accept Bitcoin and stuff like that. Like, I feel like they don't really want to dive into crypto because they're afraid that there's a conflict of interest there, and if they start it, this could be a storm that could really put a hurting on the U.S. dollar, which being the reserve currency. And what does that mean for everyone else around the world when the U.S. doesn't have dollar dominance? I still think the U.S. will still always have dollar dominance. You want to know why? Because every style, movies, fashion, Hollywood, just like anything you could think of or dream of as far as innovation, automotive, like just cool shit, it's America. I think we are still probably one of the last places to have guns. I don't know if Russia does. I know, like, obviously Australia, Canada does, you know, for hunting, you know, you just say it's for hunting and stuff like that. But, like, I still think that there will still be that dominance in the U.S. Like, you know, it's just my opinion. I don't know. I don't know what, like, the thing is, I don't understand what they want from the government for crypto in the first place. Here's what I will say. I think that thinking that it's okay to tax crypto past the first like the first transaction. What do I mean by that? I don't think the United States nor any other country should be taxing crypto or Bitcoin or any other crypto. Like if that dollar is not used, like let's say I turn my dollars over to the bank and I go buy Bitcoin. Okay, that first transaction from taking like the United States dollar and buying Bitcoin, I can see being taxed. I use their property or the country that I'm from's property to buy crypto. I get it, but can you guys answer this for me, because I don't know much about crypto. Yeah, it's legal here in Delaware too. So can you buy like Ethereum with Bitcoin, and can you buy like Dogecoin with Bitcoin? Can you buy other cryptocurrencies with crypto? With a cryptocurrency? You guys know what I'm saying? Like if I had like 1,000 Ethereum, could I go buy Bitcoin with that Ethereum? Or no? Is that not how it works? This may be a stupid question. Because if you can, then that would be the exact transaction that should constitutionally not hold up in court for the United States to tax you. Because what are they taxing that has nothing to do with the United States? So there should not be a tax on that transaction. Giving someone Bitcoin should not be a transaction that's taxed. I did not give you, I did not hand you over United States dollars. Or and even if you tip somebody $100, why would you be paying taxes on that crypto that you gave because it's $100? Like just because it's crypto, like that in and of itself is pretty fucking stupid, and I wouldn't pay taxes for that. I wouldn't pay taxes on it. I would say you're gonna have to take me to court, because if I give somebody over here $100. I don't have to pay I don't have to pay taxes on that $100 that I just gave them, even like USD. Second of all, I didn't use anything of your property. I didn't use, I didn't use a euro. I didn't use a yen. I didn't use the United States dollar. Right? This has nothing to do with you. The only thing that is relating to the United States is my feet on United States ground. That's it. So I could see some regulation in that part, but the fact that they are trying to like tax, like, again, listen, I don't know, because I don't own crypto yet. I was on my way to owning it, and then it just ripped, and it is what it is. It's still early, but I'll just never own it. If I don't get a decent price, I'll just never own it. It is what it is. But I don't know. Those are just my thoughts. I don't know what you guys think about those, but if it makes sense, I don't know if it does any of that stuff make sense? Like, cuz I don't understand how they expect people, if I were to pay somebody or just give somebody crypto, they expect that person to pay taxes on it. Like, it doesn't make any fucking sense. Yo, I gave the bum $100, and you are like, they're not knocking at your door for taxes on that, or charging that bum to pay taxes. Like, second of all, it had nothing to do with the United States of America. The only part that had to do with the U.S. was the first transaction. Outside of that, it has nothing to do with them. Again, I don't know anything about crypto, Alright, anyway. Let's move on. We'll go over some charts.
Curious. They're moving up here. You have a big high yield fund, SPHY, that's been seeing inflows. What do you think is going on here?
What we are observing is that investors are using a risk-on appetite. There is a risk appetite that we have not seen in a while. So high yield, investment grade, senior loans, they are all registering a positive flows.
ETFs are now, I've been covering this for 20 years, ETFs are finally approaching a $10 trillion business. It's a really important mark we're just hitting right now. You're doing a panel discussion tonight on the next $10 trillion. Where is the next $10 trillion in the ETF business coming from?
Well, it's coming from different places. Customization is going to become really important. What we see with the wrapper is that innovation is a never-ending story, and clients' appetite and clients' client sentiment are changing. New clients are coming, retail clients, do-it-yourself investors are coming. So the next $1 trillion is going to be really different, but still driven by the same strength of the wrapper.
We're going to talk about this coming up. There's a lot more on this coming up on the Great Rotation and how it's being played out in the ETF space. That's going to come up on ETF Edge, 1:10 p.m. Eastern Time. Anna's going to be joined by ETF journalist Dave Noddick, who will discuss broader ETF trends for the rest of the year. ETFedge.cnbc.com. Melissa, back to you.
Bob, thank you. Bob Pisani. Straight ahead, we are trading the record rally in gold. The metal touching a fresh all-time high today. How the committee is playing that next.
All right. I'm surprised State Street isn't moving off the back of that news. So I guess State Street had come out and said that they were wanting to do a. They were coming out to do a stable coin, I guess is what it's called. All right, let's see what we got. Let's see what we have here. Fuck. Oh, Lord. Dude. Oh, that's why.
Sink this ball into that hole. Sounds easy, but it takes patience and practice to gain an advantage when so many factors affect my game. It's a lot like investing, but with CNBC Pro, I'm never playing the markets. I've got an advantage. Pro's exclusive.
I haven't smoked weed in a minute. I used to. I used to, though. I just don't really give a shit to just really, I don't know. I just don't really, I don't know. It's just weird. Because I used to smoke all the time. All the time. Like, for a long time. All the time for a long time. Sorry guys, listen, I'm just getting my stuff together here.
The same day. The best part is that treatment is covered by most insurance plans, including Medicare. Don't wait another day to take control of your life again and get back to doing the things you love.
And then we'll start going over charts. So that was a nice little trade on the SPY today. Nice little 20%, 18, 25% in that area. Might even have been more. Might even have been like 30%, 35%. I'll have to do the math on it.
All right, so Melissa, 24.8840. That's the level that you're going to see here.
All right, here we go. I'm going to start blowing those. My fucking nose is all dried up.
Welcome back. Gold hitting another record today. Let's get to Dom Chu.
It's actually been pretty dry the past few days.
Hey, Dom.
All right, so Melissa, 24.8840. That's the level that you're going to see right here. 24.8840 is the new high water mark, if you will, for those gold prices. Now, we're off by about 1/4% right now, but we've backed off those levels. The interesting part about this is whether or not we've seen a breakout from this kind of medium intermediate term range in gold prices. That is carrying over.
We got down to 557.
Some of the gold mining names out there. If you look at one of the ETFs that tracks those gold miners, the ticker GDX up 20% so far this year. The junior smaller miners up even more than that. So again, that big surge that we've seen tied to gold prices, both of those ETFs, by the way, pulling a bit back today from those high levels that we've seen. And as for individual stocks making some of those moves, we are seeing a bit of a mixed trade there as well. Check out Newmont, which is one of the bigger gold miners out there, just about flat on the session.
AG.
Agnico Eagle Mines, Barrick Gold, each down on the session.
Oh, Newmont.
Even Freeport Mac brand, not so much a pure play gold. They do copper
I'm so
as well,
pissed.
But they're down about 3%.
This shit reminds me of Newport. Every time I see it, Newmont's logo literally looks just like Newport. like really close on. You could probably say that that's kind of like copyright infringement.
5-10%. We were in gold back in 2018. We got the entry right.
Like,
but then
what is this?
We messed up on the exit.
They even put a
because
little
do you buy gold when
hook
real
on
rates
it.
are rising or falling? And it feels like that ball keeps moving around. And so I think it's a core asset for people who just want to own it long term. But I think historically it's been very hard to trade because it trades off different reasons. It seems like every cycle.
I wonder if
We
it's
would
about
rather
to start
own
going right
from
now.
From a metals or mining perspective, Freeport, which is mainly copper, as Don was talking about, because we feel like we can understand the fundamentals of when it will do well and why, and that has a better, to me,
I
track
seriously
record
get
than
sick to my
gold
stomach
in multiple periods of
every
time.
day that I've seen gold go higher, even in GLD, that I did not allocate a little bit of money to that long when I gave it out. You guys remember, you guys were here. Maybe you guys weren't there when I gave it to you, but you were there that day when I told you guys right here, here's the day that we buy it. Right there. We buy it on these days. Consolidation on the low end of that consolidation. Even if it doesn't work, it's fine. We put some money to work. We give it the risk that it needs. We give it a little bit of room. Stop loss would have probably been down in this area here to look for a breakdown. I probably would have had it just below, like, I would have probably had it at like 209.50. Maybe even 209, just to give it a little bit of room. And that's $2, $3 to make 28. Man, that's wild. It just makes me sick because I talked about gold that day right there and said, guys, we need to be buying it. We need to be buying the bottom end of the range while it's down here. We have to. What did I do? I didn't buy it. I didn't even buy calls. I didn't even go out like 2-3 months and buy like even just a few contracts. Like, I gotta stop doing that. That shit really is fucking pissing me the fuck off, man. Sorry for the language. Do apologize for the language. Because the amount of times that I've done this to myself. You know what? I can't get mad. You know why? KRE. I took this one. I didn't let this one get away from me. I took this one. Bang, right there. Beautiful setup. I said it's pulling right back into that 20. Prior support level, gap fill. Let's go. It's on and popping. You had a nice breakout volume there. Just everything you want to see in a daily chart for a long. Like, look at that. Bro, and it even gave you more. I was running out of time. I didn't give it that much time on those contracts. I think I was in weeklies. All right, let's do it. SPY 557, 556, 557, 556 we said this morning. And we're there. We're at 557. There's a lot of weakness in the market. Don't fight it. The weakness has news behind it. Let's see here. Hold on. Hold up. You know what? We might flip it and reverse it like what's her name said. Oh, my stomach. So I'm trying to zoom in here, but it's frozen. Time in sales is going nuts. So if you guys look, you have some divergence here, which could be our low. Like could be saying that the low quite possibly could be in, and we get a run up into end of day. 1.3%. Chronos? Chronos?
Company announced that the amendment of its $225 million global revolving credit facility.
Dude, what the hell is this? How do you gap down and rip?
Louisiana Pigment Company LP shows the Chronos bouncing off the lows now, $11.22. That's Kilo Romeo Oscar KRO.
We got to be quicker than that, y'all. Let's see, 10, 13. I'm just going to leave that one alone. I'm not going to worry about this. All right. So what I was just looking at here. So look at the SPY, right? If you pull up a 15-minute chart, you're seeing a lot of divergence, and you also have the volume to back up that divergence. So, you know, again, this thing could still go back and sit at 556. Look at VWAP. You're at least 2 standard deviations below VWAP. Look at your RSI, right? For every single low. Look at this. It's climbing higher, right? Climbing higher, making new lows, but this is climbing higher. It should start to get some strength here. We'll see if we can get some late volume. Remember, here in 10 minutes we have the bond auction, so that could be the catalyst we're waiting for. And I said that this morning.
It's excess of certainty that's getting fed into the market on all these different fronts. We're positive.
Can you guys hear that? Let me know if you guys can hear that in the chat, or if I need to turn it up a little bit.
About all this stuff, and meanwhile, good retail sales. Atlanta Fed getting revised higher in the last couple of days. It's a little bit of a complication of that picture.
Okay.
I wouldn't suggest. I mean, I would though. Here's the thing: is I would.
I don't even
Let's
deny
do a scan the markets real quick.
Even
Apple.
between here and there, or between here and any of those likely events, you get
Apple.
a scare, you have some misgivings, you have a rethink along
But
the way.
these guys are making the point that it's actually a much better setup now to have this
Microsoft.
ahead of earnings. I mean, the Mag 7 will start reporting.
No
We
doubt
won't even
about
get
it.
into
Now what I'm doing is
and so we're going to
Microsoft.
be in a vacuum in terms of the AI trade for the next month or so.
That is very
JP
true, and
Morgan.
very often, since they are kind of late in the reporting season,
Okay.
you have these doubts, and you have the sort
Video.
of the sort of unease getting into those
Meta's
numbers, and then
down
you get
2.
reminded just how powerful and profitable they are. However, when you have the majority of stocks up out on at the end
Google
of a
looks
limb
like a
here because they're up
possible
so much in
trade
a short
here.
period of time,
It's
that
already
doesn't
back
create
at
the greatest
VWAP
setup
while the
for
SPY.
average
Look,
company
Amazon
necessarily.
double bottom.
So are you saying the messy script begs for some reversion? It's somewhere in the middle here. It's not
I think it's
necessarily...
more like, wouldn't it make sense to have a proper pullback in
Bro.
general, as opposed to just taking it from one pocket and putting it in the other?
Sorry, my
and just
chart. I
this
don't
kind
know
of
what is
seamless,
going on
perfect,
here. Like I don't know
kind
if
of handing of the baton.
Right. Mike, thank you.
there's too much going
Coming up, a
on.
trade update from Josh Brown, plus
This-
the one chart he says is breaking out. Halftime report is back right after.
All right. We did that. We did that. XOM. XOM's still going higher. We have bond auction in 10 minutes, guys, in just a few minutes. Damn, look how red that is, bro. Dude, all these names are down. IIRC. Do you guys remember that ticker that I gave you guys for like CRM, Adobe, Oracle, Intuit? Remember I told you guys that like that whole sector was like coming, it was just bad news after bad news after bad news, and it looked like it was trying to make new highs. IGV.
NTSB said scheduled 20 hours of hearings over 2 days on Alaska Airlines Boeing 737 MAX 9 January 5th door plug emergency. Hearing will review FAA oversight of Boeing and Spirit Aerosystems. That's BA, Boeing, SPR, Spirit, and ALS.
Okay, but when? Alright, so we need Apple, Microsoft, NVIDIA. Like, we need a bounce. We need some of these tech names to try and bounce here. Even for like a mean reversion trade. What's Netflix doing? And I want to stay on track here and go through some charts. Netflix is bouncing.
Shares of Chronos bouncing here. Big bounce now, $12.15.
Big bounce.
Down 11% off the earlier lows, around $10.
Okay, so tonight we have United Airlines, Alcoa, UAL. Let's see, were they already down? UAL.
StockMarket.com.
So this gap down on earnings.
SN, Shark Ninja.
Let's get to a trade update on a stock that Josh Brown bought at the end of May. You're now out of Shark Ninja.
I am. No fundamental reason. Basically, the stock had run up, so I put a stop loss order good till canceled in at my average cost, and it got hit last week. Not really sure what the news was. It doesn't appear that there was any reason, but I no longer have any holdings in Shark Ninja.
All right. I do want to get to Pfizer, though, hitting its highest level of the year today. Josh, you say it's just breaking out here. I mean, it's sort of part of this whole theme of, you know, the money coming out of the high performers, the higher, you know, flyers within this sector and moving to some of the more value plays.
AEHR, that has some nice volume.
I think that if the stock
that's up 20% today,
around where it is, just shy of $30, it will be the first time in a very long time that you've got a golden cross. You've got a 50-day that has crossed above the 200-day. The 50-day is now rising. 200-day is still falling, but starting to flatten out. But a golden cross in shares of Pfizer would be a relatively novel development when you consider how long this stock has been in this prolonged downtrend. The narrative here is changing for a couple of reasons. Huge cost cutting. They affirmed the dividend. They are gutting some of these higher COVID-era costs that they had. They are making the COVID-era drugs a legacy business, reporting them separately, and really giving the street guidance about what the company is meant to be in the future. There's a new chief science officer coming in. They've kind of cleared the decks. But the big catalyst and the reason why I think the stock is
this is a heavy level of support.
The daily weight loss pill. So the industry standard right now, Novo Nordisk and Lilly, you're seeing those stocks come off, and you're seeing Pfizer now start to report a lot of positive things about tests that they're doing on the pill version.
Sorry, guys, it randomly freezes up on me when you see that happen, and I move the chart like that. It's because it freezes up on me.
Weight loss space, check out Roche today. The shares
Or it froze up on me,
on the back of early phase drug trials for its obesity pill. Stay with us. Final trades up next.
I would have to look for 36.50 for resistance there if you're looking to take a short. Spy. Alright, Spy, what are you going to do, bro? Because I think there's like enough divergence here on to try and make a bounce. Okay, so we have 3 minutes. Remember, we have 2 minutes. I already almost forgot. Just like that. It's my ADHD. It sucks, guys. It really sucks. I hate having it. Let's take a look at AMD. So AMD pulled all the way back into its 50-day moving average. All the way into the 50-day. Like, and you didn't even get a warning. Like, I felt bad for anybody that got stuck in these trades. Because there was just, like, no heads up at all. You consolidated up there at 180 to 190 on AMD. You guys can see you consolidated up here. Here, let me do this. You consolidated, and then you just fell out of bed. Like, literally, quite literally. And just like that, 120-day and the 50-day just sliced through all of them today, which is pretty insane. That 200-day moving average working its way up here. I still don't think.
It doesn't matter to him that our technology helps rebalance his portfolio. She doesn't care that we work with billions in assets, and they aren't even aware that we spent over 2 decades.
I don't know. Be careful. If you know, I'm going to say this. I'm not going like if this thing gives me 159, like 160, 159.75 area down here, then sure, I might think about it. Because I'll put on a small position that if it just goes to zero and I lose my money, I won't give a shit. But don't fight this trend. It's got news, and you're seeing that it does not want to go higher. There is no recovery right now. You know, unless you get some other news that starts to make a recovery here, the 100, 20, and 50, you just shit right through both of them. So that is the sentiment of this stock right now. So maybe, you know, wait for the bounce backs and look for an opportunity to start playing the 160 to 170 range. Look for a pop back into the 20-day moving average. This is outrageous. How the hell did AMD just give this up like this?
I think it's 30 or better.
Like, what in the heck?
Cal's free cash flow yield of 8% looks timely, especially as
I
the
thought
rotation
this
draws
one
out.
would at least like do better than most because it like pulled back and it was holding up okay, so that, you know, wouldn't sell off like crazy. But apparently I'm wrong.
Thank you very much, Melissa. We'll see you later on. And welcome to the exchange. I'm Kelly Evans. Here's what's ahead. The market needed a catalyst to break that growth momentum, and our market guest says it got two. He tells us what they are and how he's taking advantage
Could be a
of
nice
the
cup
value
and
trend
handle.
he expects to continue. Plus,
Inverse
several
cup and
trades are under
handle.
pressure as candidates unveil their policy
The
proposals,
bounce back.
especially the chips. We'll get to that in a moment, but there is one trade that should work regardless of who becomes president, according to StockGen. That analyst joins
All right.
us with the
Let
theme
me
and
stop
the
playing
stocks to
around
own.
here.
Plus, three more names on deck to report. Gina Sanchez is buying the Fed and fading the consumer. We'll explain the names and the trades in that ahead. Let's start with the markets first, though, and Dom Chu has our numbers and turning lower, Dom.
It's a tale of two different markets to kind of continue that two theme that you just mentioned here, Kelly. The Dow Industrials are currently up, markedly so, about half of 1%, 237 points to the upside. 41,189 is the last trade there. Meanwhile, the market cap weighted indices tilted more towards that mega cap technology trade. They're taking it on the chin and in a big way. The S&P 500 is now below the 5,600 mark. 55.95 the last trade. They're down about 71 points. That's a 1.25% drop. Meanwhile, the NASDAQ composite is down 489 points. That's worse than 2.5% in terms of the drop. 18,019 is the last trade there. And at this current level and pace, we could be on pace for the worst day of 2024 for that tech-heavier NASDAQ composite. It's certainly something to watch. With regard to thematically, with the broadening out trade that we've been talking about, we are still seeing a little bit of weakness, but relative strength on a daily basis in that Russell 2000 index. It's been an underperformer so far this year. It's the blue line there, as you can see, versus the large cap S&P and the large cap NASDAQ 100. But take a look over the last couple of weeks. That small cap trade has broken out in a pretty big way. Whether it has momentum or not remains to be seen. But just look at that versus the moves that we've seen similarly from the large cap side of things. Small cap's a very big story for traders in the market out there. And the reason why we are seeing that tech weakness today has a lot to do with the global chip complex.
Celsius
Semiconductors
down.
very broadly lower on the day, led by ASML Holdings, the European equipment maker for computer technology and chips, down 11%. This, as a Bloomberg report says, the Biden administration is looking towards possible more export controls on some of those chip-making equipment companies. Applied Materials, KLA Corporation among the names falling in sympathy, down 7-8%. Even NVIDIA is down 6.5%.
Dude,
and the
everything's
VanEck
down.
Vector Semiconductor ETF down 5.5% or worse. Keep an eye on chips. Very big move there. I'll send things back over to you.
All right, Don, thank you very much. For more on the move down in chip stocks, let's turn to Eamon Javers, who's out at the RNC with a closer look at former President Trump's comments and how the Biden administration is responding. Hi, Eamon.
Kelly, that's right. You heard Dom just talk about that Bloomberg report about the Biden administration potentially tightening up export controls around chips to China. That's one thing weighing on the market this morning. The other is that interview that former President Donald Trump did with Bloomberg Business Week, which dropped yesterday. That's still
the U.S.
moving
is
markets
going
today.
to come to
Particularly
Taiwan's
the former
aid.
president's
China
comments about Taiwan and whether or not the
invades.
United States would come to the rescue
It's a
of
legal
Taiwan
document.
if
It's
China
been
invaded.
signed
Here's the comment from the
for
president
years.
that's got everybody focused right now. Taiwan took our chip business from us. I mean, how stupid are we? They took all of our chip business. They're immensely wealthy, and I don't think we're any different from an insurance policy. Why? Why are we doing this? So Trump there very skeptical of U.S. policy toward Taiwan, which has always been strategically vague on purpose. Whether or not the U.S. military would come to the rescue of Taiwan in a China invasion scenario has been strategically left a little bit vague by the United States for decades now. Donald Trump calling into question the idea that the United States would spend money, resources, blood, and treasure defending that country, particularly in the light of the trade imbalance there in terms of chips that he sees. You know, that is classic Donald Trump. It's an isolationist sort of approach to the world and a transactional approach to the world, saying, you know, why are we doing this given our commercial reality with that area? Trump has applied that thinking to a host of regions around the world and now to Taiwan as well. Unclear, you know, of course, ultimately what foreign policy would be in a Trump second term, but that gives you a very clear sense of what he's thinking as of right now anyway, Kelly. Back over to you.
Eamon, anything else that you would tune us into in terms of whether it was the way the Biden administration keyed off of those remarks?
Yeah, look, I mean, I think you saw the Biden announcement regarding this idea of tightening up exports to China, right? I mean, Biden has been very focused on chips, the idea of bringing that manufacturing back to the United States. That's been the whole focus of his administration. So, you know, in the broadest possible sense, I think the two leaders are aligned really on this. The idea of reshoring the chips manufacture to the United States is a goal that both administrations share, but rhetorically, you know, a very different approach. Trump characteristically very blunt here, and people might not be familiar with that, or they might not
bond
remember
auction,
that from the
man.
first Trump term, and so
I
think
forgot
it's a little
about
bit
it.
jarring for people to see it, but that's how Trump expresses himself, and that's how he'll express himself again when he's in the White House again, if that happens.
Of course, we're focusing on the company.
She just lied.
There's huge global geopolitical implications as well. Eamon, we appreciate it. Eamon Javers. The chips may be selling off on Trump's remarks, but my next guest says he's seen lots of investment opportunities, and that's outside.
She means Biden's tightening up of semis for China. All right. So this bond auction did not play a role, or it did? Looks like got some heat coming in here at this 10-year. Let's see. And then we have ECB interest rate tomorrow, interest rate decision. Oh, 20-year. I thought it was the 10-year. Shit. Okay, 4.466. Uh-oh. So there was not a demand for it. Not that much of a demand for that. These fucking people on TV, man. I swear to God. They're fucking idiots. Or they just say the dumbest shit. Jesus Christ. Excuse my language, sorry. Alright, so what I'm going to do is we're going to go to GitLab. Again, if you guys want to go through charts, we can go through some charts. I was going to start with large caps, but we know everything is down. So, I can just tell you the answer for mega cap tech. Down. ADVM. Let's see here. Let me go through. So GitLabs is underneath the 100-day now. It's still consolidating though, and it's still green, while the overall markets are red. So this whole level here is an area. I still want to keep this on watch for a few days and see if it does end up catching a bounce, because this is good for GitLabs. This is a buyout where they could potentially sell or I don't, you know, I don't know exactly, but I would imagine that they're not going to pay down for this. I don't think. I don't think that GitLab is. It's like GitLab's in trouble. It's why it gapped up on this news. So I want to keep GitLabs. I want to keep this on my watch list. And again, this was just a few months ago where it was up at $75.
Help small cap more than large cap. They help value more than tech, and then frankly less regulation. We haven't talked about it. A Trump victory would mean better banking regulation, better energy regulation, better for-profit education regulation. All of those things are looking favorable for small cap value.
Yeah, you think the two catalysts here have been better inflation data, higher probability of a Trump win. Your comments about that, as you mentioned, deregulation is one aspect. I mean, do you think they're going to allow more mergers? Because obviously J.D. Vance's comments are getting a lot of attention. Now, I would say, even from reading them, he appears to be directing his criticism mostly at big tech. I don't know if he'd have a problem with energy sector mergers, for instance.
I think that's just directionally going to get better. It's been very tough to do mergers in media, particularly tough to do mergers in banking. I think across the board we're going to get less pushback on acquisitions, and again, that's good for small cap companies. It's usually the large cap companies that buy the small cap. And when you have
Look, we're breaking back above VWAP here.
that is the lack of a catalyst upside for small caps. So I think you're right that Vance doesn't like technology, big technology companies buying everybody else, but I think he's going to be okay with banking mergers.
So again, I've traded the SPY today. I've traded the SPY today. I haven't really found anything that has had like momentum and directional movement outside of AMD. AMD was down 6%. It's a little hard for me to just hop on that train to the downside, you know, at the time, you know, because at 6%, that's a hell of a move. And I'm like, how much more does it have left? Like, is it really worth it? You know, so I did not short AMD, but I was trying to look for a reversal. I figured, you know, things really aren't that bad. Like, once again, I feel like a bunch of news kind of just, for no reason, whether it's because of the time of the month, and they're just trying to find a reason why. I think this news was a little bit overblown on semiconductors. I do. I think it could have been just a little overblown.
Unveiling his nationwide rent control plan yesterday. Diana Olick is here with the details. Before we get to that, Diana, we also got some new housing data this morning. What did we learn?
Well, Kelly, we learned that total housing starts in June came in slightly higher than expected, but it was driven.
Who thinks GameStop's going to $30? Let's see. Or, you know, at least, you know, yesterday, I keep stuttering, but 29, yeah, pretty much call it $30, yeah. 29.80 to $30. I think we could. I think we could. Look, it's starting to hold right now. Let's see. Let's see if time and sale speeds up. Let's start seeing some orders get here on the level 2. Let's see this thing really start trying to make some. It's not going to. Look at the 1 minute. There's not. The volume isn't really there. I was actually hopeful that that was going to hold, but as soon as I switched from a 3 minute to a 1 minute, the picture was clear. The picture was clear. I do not understand why he would put. Can I ask you guys a question? Why do these states and/or governors and politicians like Biden think that caps on rates is an okay thing to do? Outside of the fact that we have a free market, we're supposed to have a free market here. If you are capping interest, or if you are capping rent control, you're capping what you can raise for rent. What are you going to do in a state of time when inflation is roaring and the Fed and or government has to go to 8, 9, 10%, even 5.5%? Rising insurance, rising in taxes on top of that, because it's an inflationary environment. Insurance is going to go up. You guys know that. You're seeing it now. Like, I don't understand this shit. Like, this idea that government is to cradle people from birth to death is just fucking ridiculous. You have expensive healthcare and expensive colleges for that reason. Because the government is in that business. Because the government is paying that debt. They do not have to worry about that debt being paid, because if you, not necessarily you guys, but if people do not pay it, the government's going to pay it. So they don't care. They don't have an obligation to collect that money, to lower prices, to have competition, because they all collectively know, why the hell would we lower our prices when they're telling us, just like if you had a Section 8 home, you had an apartment, and it's a Section 8 apartment, and the government's going to pay you rent every month. You're going to say, shit, $1,800 a month, shit, try 25. I'm getting 25 out of them bitches for everything. Like, you know what I'm saying? So, even healthcare, you know, when you're guaranteed that check, that debt isn't going to be paid, or you're not saying to colleges and healthcare and healthcare businesses and hospitals that, hey, you know, we're not going to be there necessarily for you all the time or whatever. You know, we're going to get out. We want to get out of this business. They're going to start having to chase the dollars, and that's going to mean that they're going to look for ways to save money. It's going to bring in competition to get people to come to those colleges and to take those medicines and stuff. You know, that's been a big problem with the United States, is the fact that government thinks that they should be in something when it does the opposite. It does quite the opposite, and it makes it more expensive. But anyway, outside of even that, how do you adjust for times of inflation if interest rates go up to 6.5%, 7.5%, 8%, 12%? But you can't raise rent past 5%. Then what happens then? Now you have a banking crisis, because the bank that gave you the loans, that gave all these real estate investors loans, they can't raise the rents. Interest rates are 8%. It's a 5 cap. They're down 3% on each building. All right, ask New York how that worked out. Now the investor isn't going to pay that debt, right? He's going to just open up a new business. Now you have a banking crisis on your hands, and now all the depositors have to be worried that there's going to be a run on the banks. Oh, we'll just call the Fed. Once again, the government. Not a free market. This is... Bye, Joe. If you're struggling to make money, I'm just saying for anybody out there, you have an opportunity to learn how to do this skill right here. There's Ubers. There are a million different ways to make money and make a living. Create a product. Go sell it. Just go. Not everybody's going to make it. You just have to accept that. But there's no reason why the government should be capping having rent control. Like, it's the most... Like, it's not okay. It just doesn't even make any sense. It's not the government's job to do that in the first place. To tell other people what they can and cannot charge for their home or for their property. This is not China. Exactly. Like this guy said, look at New York. You got banks going up in New York that JP Morgan and them had to take over because of that very reason. They had rent control, and one bank had like just 2 properties. Take that bank out. I forget what bank it was. I think it wasn't First Republic. It was like, I forget what bank it was. All right, let's watch GameStop here. Fucking rent control. He wants to ban assault weapons. Assault weapons? I didn't know weapons were assaulting. I didn't know weapons were out here assaulting people. I didn't know assault was a gun, or a product, a materialized product or good. But we can have it. We're gonna take it from you, but we can have it, but you can't. Get the fuck out of here. Fucking retards. Like,
invest in building new houses because they can afford the cost of borrowing the money. And that's the best way for the economy to get
law-abiding citizens.
Yeah, I mean, maybe to do some incentives just on the developer side of it, or if they could, you know,
I would be upset. I'd be upset to be a law-abiding citizen and have to worry about that stuff.
and with the way the tax code treats housing. So housing gets very significant. That's just a mortgage deduction. It's huge. But
Alright, so this thing looks like it's
tax incentives are needed at any
pulling back.
significant level. I think what you do is you simply get the economy back to functioning normally in the area of investing and creating new units and renovating old units.
all right, let me then send her
So these buyers, you guys can see the amount of buyers that were up here yesterday. They don't seem to be there right now. They, like, if you go look at that volume from yesterday, the I just want to see this yields real quick. Yeah, like yields are pulling back, or should start to bounce. They should start to bounce.
And they're on the verge of some level of annihilation, or they lose both the House, the Senate, and the presidency, and they're scared. And in politics, if you're going to lose your job, that really scares you. And, you know, Adam Schiff is a constant politician. The real player here, you mentioned, is Speaker Pelosi. She is the force in the party, in my opinion, for rational thought. She's the gray hair, for lack of a better word. She doesn't have gray hair. And basically, if she's...
So it looks to me like the dollar should start to rise, but it's not. It keeps selling off. Like, look, it even broke 104, 103.98. Like, the dollar looks like it should be starting to rise here.
But the way things are going right now, the only way they're going to change things is to change their nominee. And Adam Schiff obviously has come to that conclusion. Should Speaker Pelosi come to that conclusion? And I think...
Give me 1 second, guys. I'm going right to Bitcoin real quick, and then we're going to go right back to GameStop.
And this is the truth. You can see this. He really is not the being president for the next 4 years. And you know it.
I want to ban assault weapons. I'm going to restore Roe v. Wade. Fucking retard can't do it. It's not up to him. Sorry, I got to get off that. I'm sorry, guys. I got to get off that. He's just so fucking stupid. Sorry, just people from his own state don't like him for a reason. Alright, let's see here. So you guys can see all this volume that we had here on the climb up yesterday. You know, and again, today we're just consolidating. Like, there's one. Even like after hours, you had a nice rip after hours there. This could get I don't think it is. My personal opinion on this is that we do pull back to 27, but it could get froggy. We could get a nice another little run here to $30 going into the end of the day. Did DJT break? Nope. Held again. Held again. We did say yesterday's low to watch this level right here. Yesterday's low, 36.50. Damn. Look how... Look, that line's right up with yesterday's VWAP. You might be able to get a run back to 37.50 on DJT. It's about $1. I'm not sure what the percentage would be on that.
There's a better way to get a fast small business loan. Go to ondeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
This is the most funkiest SPY intraday chart I have seen. Like, in some years. I don't think I've ever seen this. Normally, like, a lot of the different ways that the overall like ETFs or like overall markets will trade, like the Q, SPY, IWM, they'll usually for the most part have the same type of patterns. You know, obviously not every day, but like this like down, up, down, up, down, up, down, up, but like the trend is to the downside. It's just really weird. It's almost like flattening itself out to go higher. I still think we bounce. I might go ahead and do it. I might go ahead and go for some calls, guys. I think I'm going to do it. Let's look for tomorrow. I don't know why I have so many contracts open. 562. Alright, I'm going for the 562s for tomorrow. Oh my god, that delta is horrible. Horrible.
One of the biggest online sales events of the year, Amazon Prime Day or Day.
Hold on.
Shoppers spent $7.2 billion the first day alone. That was up nearly 12%.
Let me get this up. I wanna watch this.
Total sales for the two-day event around $14 billion, or a 10.5% increase year on year. My next guest company is Amazon's only buy now, pay later partner. He joins us with more on the consumer.
Wait, no, I don't want to sell it. I want to buy it. I'm still trying. Hopefully it doesn't go up on me.
We never reveal the story until it's over, so I hate to disappoint without precise numbers, but things are looking pretty good. I think the stories of American consumers hiding their wallets. And,
nice. Be able to get it a little bit cheaper. Fuck, what was the strike price? 462, right? It's up there at the level 2 box. It's over 56. Oh,
electronics. At this point, the sort of story of
562.
Travel needs to be retired. It's just shopping is back on, and people are buying, and that's not to incidentally reduce the real load people are feeling from the pinch of high prices. I think the
38, 39.
pretty resilient is not the same thing as them not caring about the prices being high and inflation still remaining relatively.
All right, I just took that, guys.
What you're saying actually drives with what we learned in retail sales data for last month as well, but also the disinflation that we've been seeing.
Bro, what assholes, man. They filled me at 40 cents. Fucking dickheads. Sorry for my language. I'm sorry. It told me 38 cents. It said 37.50. Oh my god. I sent the order and then it came back fucking, excuse me, sorry. So when I sent it in and previewed it, it gave me what I was getting filled at, then it comes back like that I paid more. So I'm the idiot. All right, that's tomorrow. It's a small position. We'll see if we can get a couple bucks out of this. I don't like it. I'm going to be honest. I mean, I do kind of like it. I don't mind it. I just don't like fighting the trend. I really don't. Don't like fighting the trend.
Just the internal growth, and we're still in almost a fully employed economy, although it is ticking up. Unemployment is a little bit concerning there, but demand is really strong.
Yeah, it's reassuring. So we would expect buy now, pay later. I would. I mean, I'm very curious to see what happens throughout this cycle if it eventually turns. You know, when do you guys start experiencing, I don't know what we're traditionally called default rates, right? Or when a consumer, if they're not making payments, they get pushed off of the service and so forth.
Just can't hold up. Can't blame it.
Any composition of the consumer to suggest if there are any segments that are under pressure?
Almost 2 years ago, we talked about seeing some degree of softness in the folks in the lower credit tranches, but since then we've really not seen a tremendous amount of change. And so again, I think the U.S. consumer is fairly strong. Incidentally, I take issue with the term buy now, pay later, but I'm willing to go along with it if you call credit cards buy now and pay forever.
Okay, wait, what would you call yourself then? If we, what's the term?
I think
I haven't traded the SPY in quite some time.
Great alternative to credit cards. We talk ourselves.
Feels good to have a little break over the overall indexes.
The most important thing that we deliver to our buyers, to the consumer, is a sense of certainty and ability to to control their finances and have a really clear picture of how long it takes to go from starting to pay for something to wrapping it up. That my joke
Remember, and look at that volume. Look how low that volume is. If you don't take your profits, the market will take it for you. I'm not saying to.
Power up 125% now at the high. Sandy Delta, Sandy Tango, $23 to high on SDST.
Is anybody trading this? What's everybody looking at right now? I mean, outside of like the stream, STST. Is anybody else trading this? Why does this look like the SPY? Wait, what?
Coming up in 30 minutes at 2 p.m. the
Hold on.
Facebook.
Hold on.
much as I dislike the term, is growing as well as it does is because there's no unpredictability, there's no revolving, there's no figuring out what's the minimum payment. The payments are precise. So
SDST, guys. SDST.
that's why consumers are turning to
SDST. That's my fault. Let's go, SPY. Let's go. SDST, be careful. Actually, it's not bad right now. You just, there's not a lot of volume. Let's go, SPY. Let's go, SPY. Alright, I gotta take some off here, guys. Hurry, hurry, hurry! Come on! You asshole! Oh, look at that. Nice. Nice. Hit that extension right there, boy. Gotta put my entry. Gotta put that exit. That last little boop. Gotta love it. Let's see if we can reload some more. That's a nice volume breakout right there. Let's go, guys. Did anybody take that with me? Nice little 10-cent nickel. Little 8-cent nickel trade there. Nick and dime in the markets. I would like another test up here in front of 558. That's why I took some profits off in front of 558. I still like where we're going. I still like where things are going, guys. Again, this is for tomorrow. The strike price is for tomorrow. It is not a daily. I was going to make a joke. You know how they say it's not your father's party. I was going to say it's not your something. I don't know. Just talking to myself. It's really nice. They're still holding up nice, guys. Good shit. Let me know in chat. Did anybody get in with us there? I'm going to tell you guys right now, I think we got lucky that I got lucky that it didn't pop when I was trying to get into it. Because I had first brought up the contracts and it started rallying. And when it was starting to rally, I was, trying to get in and I ended up selling it. And I'm like, I was like, okay, let's try and wait for a little pullback. And normally it won't pull back. This pullback right here, that one right there was a freaking savior. That pullback right there was a savior. All right, let's do it. Let's rinse and repeat. Shall we? Shit, that was quick. That was so quick. I don't even have the contracts up. Appreciate you guys. That's awesome, man. Thank you guys so much. I'm glad you guys joined, subscribed, and stuff. I want to help you guys make some money. Again, this week for me has been really slow. It's been really slow. It just, I can't force my will on the market. I'm still watching GitLab. This one I may not trade until like Friday, maybe tomorrow, maybe next week when people forget about it. All right, Baba's starting to bounce too here. I would be careful. I wouldn't try to long it. Let's go check the SPY out again. Oh, my chest. You okay?
Hey, Mama, sweetheart. You're my sweetie.
Oh, shit. Just talking to my cat. Let's turn on some CNBC or something, guys. I'm gonna, you got the volume kind of just chilling here. We have, Beige Book coming out in just a few minutes. So, I will see if... Okay, at 2 o'clock, so it's not for another half hour. Balance of trade, JPY. Okay, tomorrow we have initial jobless claims. So, they're expecting 230 to 225. So, they're expecting an increase. I wonder why that is. I wonder why they're expecting an increase. So normally I like to look at it. Oh, well, I was going to say weather because of the hurricane. That's probably why. So I wonder what happens. Let's just say because of that hurricane, if a lot of people claimed, like you could see a jump since it was last week, what the market does. Like, because you have to remember, like, we know that there was a hurricane. All right, we know that there was a hurricane. If we get a big jump in unemployment numbers, you're okay, baby. Daddy got it. If we get a big jump and they're talking about cutting rates and they haven't cut rates though, and we get a big jump in these labor numbers, how does the market take it? The market, in my opinion, would go down. Like, oh, we're trying to get the labor market, soften the labor market. If you have a big jump, like once you start getting big jumps in the labor market, the market's going to start pricing in the probability that the Fed possibly did too much. Right now, we're on track for a soft landing. At the end of the day, we have a healthy market. Healthcare, banks, tech, all catching up, like just at, going to highs. Leaders led, laggards are lagging, which are currently at the moment going up. From what I've looked at charts, like the IWM 230, right? That's where if the setup is there, roughly around 230, in the 230 area, 230 to 240. If you look back in time, even like COVID, you'll see that the IWM consolidated before COVID. I'm sorry, going prior to COVID. IWM consolidated. Well, it fell. I could show you. I've shown it in the past. Anyway, the setup is setting up exactly how we have it now. So we'll see if this 230 to 240 level brings in a pullback. It might not. We have a healthy market. There's still some stocks that are just stuck and aren't making any headway, but that is what it is. It's just crazy that we haven't started to see any type of debt problems. Like, yeah, we had banks. I don't know, honestly, what else happened to the USA and the credit, all these credit downgrades they started talking about. Like, you didn't hear shit about that. Like, I don't, like, what, nothing changed. The Fed helped the regional banks out, yes, but United States credit, like, I don't know. Anyway. So far we have a soft landing, but if these numbers start really ticking up and we're still at 5.5, 5.25, and the Fed's not cutting rates, the market may start to price in a recession or the probability that the Fed did too much. All right. So with that said, tomorrow we know when we get these numbers that they're expecting more. So even if it comes in above expectations that there was a hurricane, that we can't necessarily think, oh, just because the market pulls back on a decent increase in initial jobless claims, that it's saying that, oh no, we're worried about a recession now because that'll be what's on the news. We know there was a hurricane. It could come in line. It could come in above, well below. I think if it comes in well below, you go back to like 215, start going back to 210, 200, you're going to have a problem. I think that could also pull the markets back too. That's still going to tell you higher for longer. So I guess with, you know, we'll find out tomorrow. All right, so here we go. We'll see if we get another opportunity here. Nice little small trade there on the SPY. So that's 2 for 2 on the day, 3 for 3 on the week. Hasn't really been a week for me though, that's for sure. Last week was unbelievable. The 1 week I don't stream. I think I streamed once or twice. And I just mainly didn't have to worry about the stream or posting it. Just all that comes with it. Just the week went by. Just fantastic. And there was opportunity. There was a lot of opportunity last week for anybody that traded last week, you know. Here, I can turn this on and we'll go through some charts. Let's go look at some semiconductors. Let's go look at some semis. It's almost 2 o'clock.
And what are those companies that work out under both? But as in this is the trade. Whether you watch small companies which have been doing well, we got a trigger on from inflation last week, and as more and more visibility or probability.
Dude,
of
I think we need to bounce
coming into place.
I think we need to put that higher low in.
Sector within industrials is within
560.
small caps is industrials. So I think that's the place where I would be focused on. Again, broadly there's some nuances
that volume is too.
Where do you go? Whether you just stay with the largest of the largest.
Like guys, think about this. Look at the volume here that we've been having. The volume's been actually really low. We've made some big moves the past few days. Right? So you're talking 20, we'll say max 21, 22,000 on a 4-hour chart versus some of the volume that we had back here, which was close to double. Look at that. God damn, boy. God damn. So, anyway. I get back in these puts or I get into something, I'll let you guys know. I'm just going to run through some charts here and eye these things up real quick. Come on, SPY, start flattening out.
In 20 countries around the world, and our facilities are the infrastructure that supports consumption. So pretty much everything in your studio, whatever you're wearing and all that, at some point
Thank
in
you
its
guys
life,
so much,
its
man.
journey would have gone
Appreciate
through one
you
of
guys.
our facilities. We are not an AI play to the in a pure play way of thinking about it, but we do have a very active business and growing business in data centers. And a lot of the logistics properties that we have and a lot of the land that we have lend themselves to data center development. And we've got a number underway, and we expect that business to grow rapidly. And of course, that's fueled by AI and other things.
So are you yourselves becoming a data center, a company with a data center business, or do you just focus on maybe having the asset and having someone else do the build out?
No, we actually have the land, we get the entitlements, we build the buildings, and we lease them to users of data centers. So yeah, we continue to own them over the long term.
And what portion of the business is that now? What would you expect it to be in maybe 5 or 10 years' time?
It's a very small portion of the business today. It's less than 1%, but it's likely to be 10-15% of the business going forward in terms of impact. We're not sure. We haven't made the decision whether we're going to keep all of these data centers on our portfolio or that we're going to just develop and sell them as we go along.
Right.
It all depends on the capital requirements of the business as they evolve.
So interesting. So also this has been a unique moment for the company because we had this huge surge in e-commerce during the pandemic. Now we're on the other side of that.
I want to see. I want to see us start to just like give up this weakness where we can't make any ground and give it up. I want to see them start turning the buy triggers on. I want to see them start buying this thing. They just can't. They just don't want to do it. They're not doing it. And you have to understand that. Like, trust me when I say this. When you see it, you'll know. You'll know it when you see it. If you don't know what I'm talking about. Keep an eye on that 558 level, 557.90. It's like a 10-cent range. Like, you're seeing these pops get taken back. When you see us pop and like we're holding, and then like you see like a quick move up, and the candles are closing at highs, like you're making progress to the upside. Like, you can see it. When we go to the upside, it's really slow, and it's just like you make some progress, you get that extension, boom, you just get pushed right back down. And it's just like, okay, I'm trading sideways. Like, no, let's start going higher. Let's go up. And we just don't have that right now. We don't have it. Do you think they stop? Like, they could just like run out and stop and let people bid it higher to sell it at a higher price. But it seems like there's a lot of shares to sell. Something. It just doesn't help when every single large cap tech is just hanging out at lows, and it's just weird to see them do it also on a Wednesday. I can't remember outside of like a Fed day that the market has just like had like one of those type of days. Let me go look at the let's go look at TradingView.
It's really impressive that you sell the product, they manufacture the product, they install the product, because then you're dealing with one company, and you're dealing with one company that
we might need to get to 556 to put all this selling behind us. Not saying that we could go make new highs again, but damn, we have such a long ways to go, guys. In order for this thing to retest, like to do a break and retest on a double top, bro, that shit is all the way back down at 550. 550. And remember, just like it from the upside to the downside, you can look literally 3 days from now, you could see this thing down 15, 20 points. Okay. Let me backtrack that. 15 bucks. We've already left 565 and we're at 555. So that's 10 there. So we could be down here at 555 550 before you know it. I personally might think about if we can pop today if third time's a charm and we get these if we can make some money on these calls, I pretty much have some contracts there paid for free if we could get more downside, right? So I can pay for the puts and just have that insurance built in off of the calls. So it's kind of like, hey, if it sells off, you know, I'm a part of it, and the risk, you know, that could be a big day. If it doesn't, cool. You know, okay, I lost the money, but I made the money too. I made it free. So, earn the right to take risk. Earn the right to take the risk. That's somebody taught me that. He still is an institutional investor. Earn the right to take the risk. Right? Like gold, buying it there. Building some insurance inside your positions.
STST, another prop here, Sandy Delta, Sandy.
Dude, ST is just going, guys. Yes, Biden's policies are difficult. They're upsetting. Biden does not trust the American people. Does not think they're responsible.
Misguided and difficult
He's
policies.
two-faced.
So
I could let him know what y'all want me to tell him at the party, at the July party, 4th of July party, Christmas party.
Now, part of that
I let him know
with
at the estate. I say, hey Joe, they not digging some of the shit you doing, bro. He'll say, I know, and I don't care. I know they don't.
And not being able to get meetings with the current President Biden.
Fucking crazy, man.
Photos from the All-In Pod.
I don't want to take your guns. Just want to take some of them.
Bragging about their access to Trump, showing
Isn't
these
that the
photos
same
from
as
Sachs
taking?
fundraiser in June. Big smiles on their faces. That is Sachs on Trump's right and Palahapatia on his left. Now, with former VC J.D. Vance's running mate, even more of a direct line that this VC community has. Mark Andreessen and Ben Horowitz, with their active portfolio of nearly
Hopefully Trump and them can make it easier on VCs and businesses, small and large. Especially for these buyouts.
Support of Little Tech. You heard that in that podcast tip we played for you.
If you guys have noticed, a lot of these companies like Amazon trying to buy out iRobot would have helped save a lot of jobs. Those people wouldn't have been laid off, and you know they said that they couldn't do it. It's like it's iRobot at that point. It's like just let the owner sell it. They built it. Let them get rid of it. And no. So a lot of the workers got laid off, and I don't know. I don't know if he ended up selling. I think he might have resigned or did something. I can't remember, but I know that they mentioned that a lot of the workers got laid off after that transaction wasn't able to be. After they blocked it. So, but anyway, I'm just yapping. Don't mind me. Let's go have a look at GameStop. I don't have the chat up, so if you guys have any tickers or questions or anything, you'll have to give me 1 second. Alright, GameStop rejected. GameStop rejected. Let's see if it holds here. I think you'll see GameStop hold. I think we do. I don't think that was enough volume there to break this level here. So, another day where it just consolidated. Miss Tesla. Why do I keep forgetting about Tesla? I don't understand.
This commercial was made using artificial intelligence and did not cost us a dime. Now we both get to save money.
Few things make the market go higher than tons of M&A activity, which is why I think that Trump FTC will look the other way on most deals, like it did last time, and the market could go higher.
Yo, look, Jim Cramer. He just said FTC. That literally just what I was talking about. He was just saying that.
Post reported President Biden said medical condition could prompt him to drop out if doctors aimed at him. That was a little bit earlier.
Something about Biden dropping out because of a medical condition. He said. So I guess they are realizing. Okay, I listen, guys. This is just my opinion. Gavin Newsom, I don't think resonates with old people. These older people don't like drugs. They don't like lawlessness. Alright? They're stuck in their old ways. So that's a no. Kamala Harris, I think they see her for who she is. A lady that just wants to hang around a bunch of rich people and go to Diddy party. Like, they might not, know about the Diddy parties she attended, but I think the best person for the Democratic candidate is Joe Biden, believe it or not. I do. I do. Gavin Newsom, weed, drugs, does not resonate with older folks or people that are from the north, south, east or so. Like, you're seeing what's wrong with California. Again, and Harris, I think people just see her as, this, person who just wants to be, just does it for the money and doesn't really know what the hell she's even doing. I'm just being honest. So.
The stock here?
So we do like the stock here. This is one that we hold. We've held for a while.
At least Biden can get away with lying, saying he's a union guy when in fact, we're not even a union state. Delaware isn't a union state. So that's a flat out lie.
In July.
But anyway.
But we are expecting that it's not if, but when the Fed will cut later this year. It's being priced in as early as September. It could be November. Either way, I do think that it's going to represent an opening for the home builders. And
bro,
if you look at the state of inventory right now, inventories are still below their pre-pandemic levels. And so there is still quite a bit of pent-up demand.
You got an old
and so we
rusty
just
chair.
need affordability to pick up. And that's where D.R. Horton is an interesting pick because they have a very affordable product.
Still, I worry it's priced in, but nevertheless, we'll see maybe what they do with their results and what that tells us about sentiment. And move on to Blackstone. I mean, they're coming off a 52-week high. Private capital increasingly important, particularly in the real estate market. Could make some arguments for maybe a Trump angle here if deal making picks up and so forth. I mean, how would you play this one?
So this one has a few elements to it. If you look at what's been the tailwind has been a really strong credit boom, and that has been a huge benefit for Blackstone because that part of their business has done very well. The parts that are dragging the business down are private equity, where M&A has been largely stalled, and their real estate fund. So we think that the Fed angle is certainly a buoy for the real estate fund. That will be a big benefit. But we also see M&A potentially opening up later this year, and that could be a big boon to their PE business, which is a massive part of their profitability. So we think there's actually more room for profitability to open up.
I'm very much wondering about that. We'll close it out with
I don't know, man. They said they were going to be a little tough. It's not that I was surprised. I just.
It's up for the last couple of weeks. What do you do with it?
Wish they wouldn't go that route.
This is even broader than the Domino's play, particularly because we've seen a lot of these chains that are really hurting, partially because consumer demand is falling, because those really high interest rates on credit card balances are really starting to bite. So we see sort of a soft patch for sort of all consumer names going through the rest of the year.
All right, guys, 2 more minutes for baseball.
That's what Max Levchin called credit cards earlier today.
2
Gina, thanks
more
very
minutes.
much. We appreciate your time. Gina Sanchez, Lido Advisors. That's it for the Exchange Power Lunch. Starts on the other side of the spring. See you there.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash.
Come on.
Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement,
but we quickly realized we needed a way to supplement our
Rotation out of tech, higher NASDAQ except for the worst day since 2022.
maybe selling our policy could help with our retirement.
I'm skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
That's so funny. Like just like the image that I got in my head here with like NVIDIA, like Dow rides rotation out of tech higher. NASDAQ set for the worst day since 2022. NVIDIA's, down bad, bleeding, down 6%. Like it's a not like a soldier, but like I was thinking like I can't explain it. Because I seen this thing with Joe Rogan or something this morning. It's not like Joe Rogan specifically, but they were in that like cage and they were fighting with like the metal mass and like from like I guess like not I don't know like medieval times I guess. And I was just like, no, NVIDIA, you're down. It's bleeding. It's having a bad day. Like, I don't know. It was weird. That's what happens when you sit in front of a monitor from 5 o'clock, 7 o'clock in the morning till 9 o'clock at night.
On July 8th, economic activity maintained a slight to modest pace of growth in
All right, beige book.
this reporting cycle. Expectations for the future of the economy were for slower growth over the next 6 months due to uncertainty around the upcoming election, domestic policy, geopolitical conflict, and inflation. Prices increased at a modest pace overall, with a couple of districts noting only slight increases. That's the beige book, out now at 2 p.m.
Welcome to Power Lunch alongside Kelly Evans. I am John Fortin. The Fed is releasing the beige book right now. We're digging into that and we're going to bring you the details.
All right, SPY did not even move. SPY did not give two rats' asses about beige book.
Welcome to Power Lunch alongside Kelly Evans. I am John Fortin. The Fed is releasing the beige book right now. We're digging into that and we're going to bring you the details. Don't even act like that thing is moving off the beige book. We've got another interesting day for the markets. The Dow is higher by about 200 points, setting records, crossing 41,000 for the first time, led higher by United Health and J&J, among others. But the S&P is down, and the NASDAQ is really getting smacked, down nearly 3%.
Yikes. One stock deserves most of the credit for the Dow's two-day run. It's United Health, the highest priced and therefore most influential stock in the Dow, and it's up 11% this week, while dragging on the blue chips have actually been the huge tech names, Apple, Microsoft, and Amazon. And what's really hurting them today is the trouble in the chips, concerns that no matter who becomes president, they'll be tougher on semis and China, but Global Foundries and Intel have managed to avoid that problem, as they may be seen as possible U.S. alternatives. Global Foundries up, call that 7% today, Intel 1.5%.
Yeah, alternatives on the manufacturing side. And though the Russell 2000 is down today, it is still up 9% this week compared to a 3.5% loss for the NASDAQ over a week-long period. Let's bring in Mike Santoli for more on this dramatic change we've seen in the market with small caps overtaking mega caps, at least for a few days, Mike.
Yeah, John, it's almost as if the laggard parts of the market tried to get all that underperformance back in one big bite. It probably isn't going to be as smooth as today's action shows. Obviously, you mentioned that the big aggressive selling in semiconductors on some news, and then broader mega cap tech had been crowded. It's been kind of unwinding, and the rest of the market today can't really quite absorb that with an offset of buying. That's mostly because of that run we've already seen in small caps and the majority of large cap stocks as well. Today you actually do have more like two stocks down across the market for everyone that's higher.
Dangerous
so that's profit
out here,
taking
y'all.
in small caps. The one area that I'll say is still pretty consistently green right now is financials. So bank stocks, both regionals, the broad SIFI banks, as well as non-bank financials. So it seems as if that's where the backdrop of a soft landing and Fed cutting rates and who knows, maybe some lighter regulation seems like it has more traction as opposed to this real quicksilver trade in smaller cap stocks, which are levered to this Fed rate cutting story.
Interesting to me, Mike, that the Russell 2000 isn't performing as badly as the S&P today. The Russell's down a little less than 1%, while the S&P is down almost 1.5%. Does the Russell reflect more what the equal weight S&P is doing? Is it the bigger stocks that are underperforming more, as you were just saying?
Roughly so. I think the equal weight actually is not down that much. Honestly, in the context of a 12 or 13% gain over 5 days in the Russell, what we're seeing today is really just skimming off the top. The problem is it did get really stretched in the short term. It's also very just money flow base. It's just this reflex into the indexes. There's a lot of data about how many, options and ETF buys just kind of flooded into that segment of the market, which isn't that big. As we used to keep reciting, the Russell 2000 is smaller than Microsoft or Apple in terms of market value. So I don't think it has any special powers of prediction or bellwether status, but it does show you that this market wanted to rebalance. We were very crowded at the top, and it's trying to rectify that, even if it's a little sloppy today.
By the way, Mike, also watching the 10-year, which continues to sink lower. Still above 4%. I've read some who argue if it goes 4%, it should ignite more hard landing concerns. But the way it's acting now amid these markets seems to be more part of the Goldilocks story.
Yeah, at this point, Kelly, I agree. Around this 4.2 level in the 10-year, it's kind of where it was in December when Powell pivoted, whether he meant to or not, in terms of saying we're going to be cutting rates next year, and the market immediately extrapolated that into multiple cuts. That's when we cracked below, around that 4.2 area. So we're right back there. And right now, the market, based on what it sees ahead of it, is saying, yep, we got multiple cuts on the way. I agree, though, there's a limit to how much you'd want to see this go down in a hurry on the long end, because it probably would mean that we were getting a little more uneasy about the economic fundamentals.
All right, Mike, thank you for now. We appreciate it. 4.15 on the 10-year. Mike Santoli. For more on what's next for the markets and the economy, let's bring in Mike Klarfeld, Managing Director and Portfolio Manager at ClearBridge Advisors. Mike, what do you do here? Do you think the Russell thing is a head fake?
I think I don't think it's a head fake, but I also don't think it's necessarily a straight line from here. The markets overall have become highly concentrated, both by individual name and by sector. They're extremely cap weighted, and that reflects a lot of the phenomenal
NVIDIA,
attributes
GameStop,
of these
DJT.
platform tech companies. But as so much investor emphasis has been focused there, it's created opportunities elsewhere, such that it makes sense for people to to be looking elsewhere for value opportunities.
Like elsewhere, I mean, so you have some names, kind of energy, utilities, and so forth. But what's the fundamental case that even those who say, okay, a Trump administration, but you go back and you look at the performance of some of these areas during those 4 years, it's not always clear there was a massive opportunity there.
Yeah, I don't know that the opportunity so much outside of the big tech companies is really about Trump. And a Trump administration and what that means for economy. I think it's more just that they've been underinvested in as money flows have gone into index mimicking portfolios, and as these great companies have risen so much, capital has just become so concentrated, right? I mean, the top 3 names in the S&P 500 are over 20% of the market. So any opportunity to lighten up on those and look elsewhere, given the small size of the names we're talking about elsewhere. Again, I think the stat you just referenced, right, that the Russell 3000 is smaller than any one of those companies. A small amount of money moving out of mega cap companies can really have profound effects on these smaller cap companies. And you combine that sort of trading dynamic or tactical dynamic with attractive valuations in some areas of the market, and it's a pretty attractive setup on a risk-adjusted basis.
Speaking of looking elsewhere, I'm going to take a chance here and ask you about Comcast, which you like. It's down 8% year to date. Of course, we love it like family here since CNBC is owned by Comcast. But explain to me where you see the opportunity, especially given the challenge across both broadband and with cord cutting in general, with a consumer that seems to be pinched and looking for ways to pull back and spend less.
Yeah, so Comcast has a number of phenomenal businesses, most notably, obviously, CNBC and its terrific talent. But really, what makes Comcast so attractive right now is a combination of attractive franchises, and most importantly is its high-speed data business, right? It's broadband connectivity. And I'll come back to that in a second. The valuation is extremely trading at about 10 times earnings. It's a strong free cash flow generator, so it's about a 10% free cash flow. Dividend, which is growing nicely, and the remainder of the free cash flow is going to share buyback, which is shrinking the float, which is highly accretive to returns and earnings growth when it's done at such low levels. And the main concern around broadband and Comcast is broadband growth and subscriber growth. And there have been 2 dynamics weighing on broadband subscriber growth over the last couple of years, which we think are about to inflect the other way. So the first would be move activity. Obviously, with higher interest rates and buying homes, and that's created fewer what the industry calls jump balls, which is opportunities for Comcast to compete to get new subscribers. Coming down, we expect more move activity, which should increase the opportunity. The second area for Comcast, which has been a challenge, has been fixed wireless access. the wireless companies, Verizon, AT&T, and T-Mobile, have been as a competing product to broadband. They just launched it a couple years. It had nice growth from its start. We think, though, that towards slower growth, and really for two reasons. Comparison perspective, the subscribers for fixed wireless has gotten bigger, so the growth rate will be lower. And then the second aspect is just that it's limited in how big you can offer it. It uses a lot of bandwidth constraints to how, spectrum, and there's natural constraints to how big that can grow. So as we see, Comcast continues to have very nice pricing power in its broadband business. They're raising prices, subscriber growth this week. We think subscriber growth is about to inflect, hugely so, but at least stop getting worse. It's trading at 10% free cash flow yield when the market's over 20 times. We see very little downside and very meaningful upside when the subscriber trend improves.
As tempted as I am to say, oh, go on, I do want to hit something else with you, and that is utilities, arguably an underloved area for quite a while, but maybe for good reason. You think that there's an improved growth outlook here with the energy transition and the data center AI trade, yes?
Exactly. So obviously, I'm a dividend investor, and so maybe not surprising that we talk about utilities. But utilities right now are actually exciting for a broader range of investors. And it's not often you use the word exciting in a sentence about utilities, but it's really true today. So not surprisingly, the utilities enjoy a low-risk business model and valuations are undemanding. You can buy high-quality utilities today trading at 15 or 16 times earnings, again, versus a market that's in the low 20s. But what is unique about utilities for the first time in decades is the growth outlook. So utilities have had very little growth for the last probably 20-plus years. But that's inflecting meaningfully higher. And you highlighted the drivers. There's three drivers. The first is the energy transition. So obviously more people plugging in their electric cars, et cetera. There's increased demand for electricity. So that's the first driver. The second is obviously AI and data centers, which people have been talking about a lot lately. And the third is grid hardening and resiliency, whether it's wildfires in California or hurricanes in 10 or 20-year phenomenon, given what people are forecasting. And so you combine a low-risk business model trading at 50 grid and earnings and the substantial investment to harden it. So we see all those aspects coming together to drive meaningful growth for utilities. And this is not a 1 or 2 year phenomenon. This could be a 10 or 20 year phenomenon, given what people are forecasting. Wow. And so you combine a low-risk business model trading at 15 or 16 times earnings, and the best-in-class utilities we think can grow their earnings at 8 or 9% a year. And we think that sets up as a very attractive risk-adjusted return proposition.
Listen, maybe dividends in general just become more appealing if rates are headed lower. Mike, thanks so much for your time. We appreciate it.
My pleasure.
Mike Klarfeld. Let's go to Megan Casella now for the details from the Fed's latest beige book. Megan?
Hey, Kelly. So it's a little bit of a softer beige book overall here, especially on the labor side. Economic activity maintained a slight to modest pace of growth in a majority of the districts. 7 saw some level of increase, but 5 were flat or declining. That was 3 more than the prior period in late May. Prices were generally reported to have risen just modestly. Auto sales were varied. Some districts saw lower sales due to both higher interest rates and that cyber attack on dealers. Demand for both consumer and business loans were softer. There was a big range on manufacturing. Some districts were seeing moderate growth, but others were reporting a brisk downturn of expectations for the future. The economy was slower growth overall. These expectations, this was a big one. They thought over the next 6 months, growth would be lower due to uncertainty around the upcoming election, domestic policy, geopolitical conflict, and inflation. On the labor side, I thought these were interesting. Employment rose at a slight pace in the most recent reporting district. Most districts reported employment was flat or slightly up, while a few reported modest employment growth. Skilled worker availability remained a challenge. That's been a challenge for months now across all districts. But several districts did say that there was some improvement in labor supply conditions and that labor turnover was lower, fewer people leaving their jobs. Several districts said they thought they could then be more selective on who they were hiring, not backfilling all open positions. So again, seeing some softening in the labor market, wages growing modest to moderately, but some districts even saw slowing again due to that more worker availability and lower competition in hiring. On prices, just to wrap up here, prices increased at a modest pace overall. A couple districts saw only slight increases in prices. Consumer spending was mostly unchanged. Almost every district mentioned that retailers were discounting items or price sensitive consumers were only purchasing the essentials. They were trading down in quality, buying fewer items, and shopping around for the best deals, Kelly. So that was really a big theme here, that as that labor market gets a little bit slower, consumers once again being very price sensitive and reacting to high inflation. Kelly.
All right, Megan, thank you very much. Megan Casella. Markets are has the Dow hanging on to gains. Big tech still under pressure.
Yeah, coming up, a semi-smackdown, both sides of the political spectrum, targeting the chip space. The SMH ETF down 6% as nearly every stock in the group, unless they make the chips themselves, in the U.S. takes a hit. Got more on that next. Plus, further ahead, some big moves in small caps. We will trade some of the names in 3-stock lunch when Power Lunch comes right back.
All right, guys. You guys have TLT breaking out. Yeah, damn. Holy. What?
Welcome back. Semiconductors are under severe pressure today. The SMH ETF is down 6% on these worries of U.S. restrictions on China exports. Seema Modi joins us with more on this story. Seema, what can you tell us?
Well, here's what we know. Both leaders really taking aim at the semiconductor industry at a time when companies, NVIDIA, Microsoft, Google, and others are investing billions of dollars in artificial intelligence. But former President Donald Trump is calling out Taiwan Semiconductor's dominant role, which he's not really wrong about. Taiwan Semiconductor makes about 90% or more of high computing and smartphone chips. The company does report earnings tomorrow morning, where the company's geopolitical strategy, according to Morgan Stanley, is expected to come up in the discussion. You'll see shares of Taiwan Semi are selling off. Separately, President Biden is reportedly considering further restrictions on chip equipment sold to China. Now, that's overshadowing ASML's strong earnings report last night. Susquehanna says other names to take into account is AMD, which makes about 20% of its sales in China. Intel, under CEO Pat Gelsinger, has emerged as one of the few beneficiaries of a more contentious U.S.-Taiwan relationship, investing heavily in U.S. chip manufacturing and fabs with private equity firms Apollo and Brookfield. Shares are higher today, as is Global Foundries and Texas Instruments. And Morgan Stanley does point out that their chips still do not compete with TSMC's most advanced 3-nanometer needed to build out AI. It's interesting saying all this in front of the godfather of tech here, John.
That's how I
don't need
feel.
to tell you all of this, but clearly there's a lot of price action here and people reevaluating the opportunity.
I feel like stroking my chin after you called me the godfather there. But I think it really is an interesting dynamic, given that it's not like
Bro, what is
shut
this?
down the Taiwan
Hold on.
situation. You know,
Holy
if
shit. Sorry,
Trump
guys, hold
says,
on.
"Oh,
I
the
just-
U.S. isn't going to defend them unless they pay up," and NVIDIA can suddenly shift all of their
Holy
capacity to some U.S. operation. It just hasn't been stood up here, and it won't be ready for 4 or 5 years
for their
in
U.S.
volume.
operation. So the thing I'm confused about is the issue if TSMC has capacity in the U.S.
TSMC is, and it would take the U.S. and Intel a couple of decades to be able to replace that kind of capacity.
Already said at its Oregon plan that concert
Hold on one second.
the chips that they produce here in the U.S. will be much more expensive than what they're producing back in Taiwan. So that's sort of an open door here for Washington to provide some type of subsidy to the companies here that are producing.
But these things aren't quick to bring online. It takes years. So it's one thing if you're saying, could we produce the same sort of thing over here that we could produce over there? They're backlogged no matter where you're producing it. So you can't really take the majority of the capacity offline and just be fine.
No, or you just said to them, it can be TSMC, but it has to be in the U.S. in order to make it. But you still run into all of these.
Yeah, you don't have the workers, you don't have the capacity. Well, Seema, stick around. We're going to do a lot more on this semi-smackdown. Let's bring in Matt Bryson, Senior Vice President of Equity Research and Hardware at Wedbush Securities. Jump in here, Matt. I mean, there aren't really easy alternatives if there's the threat of losing that juggernaut capacity in Taiwan, is there?
No, you got it exactly right. You look at the next couple process transitions, and so it's not a decade at this point.
All right, sorry. I don't know what happened there.
There is no alternative. The companies are already designing their
Holy shit. So, can you guys hear my TV and shit?
and so that's where those
I didn't know that it was that loud, y'all.
so no, that business can't.
Dude.
The Samsung is on TSM.
And to clarify, I wasn't saying
Hold on a second, because I want to know, it should be real time for you guys. Alright, let's go here. Whoa, 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 gang. Whoa, whoa, bro. Calm down, dude. Let's see here. I wonder if I should make this for kids. Kids can learn the financial markets, right?
Matt, if this dynamic continues, and I'm speaking specifically about former President Trump, who's doing quite strongly in the polls right now, don't know whether to call it saber rattling, but wallet waving a bit in the direction.
Hold on 1 second, because what I'm trying to do, I want to make sure, because look, it's getting ready to go. I feel like it's about to pop off here, and I wanted to show you guys something. It was just a video that was funny. I didn't mean to click on Safari. Did not mean to do that.
So I certainly think from the risk perspective, when you think about the global risk, that for a global foundries,
All right.
between China and the US,
Let's see here.
then using them versus say a UMC in Taiwan or a TSM in Taiwan, they see some benefit from that. With Intel, it ends up being more of a mixed bag. So from a longer term perspective, if the US and China and Taiwan subsequently end up disassociating more, Intel is, along with Samsung, arguably the other choice for foundry. At the same time, remember that Intel is also still supplying computer products into China, so you gain longer term if you're able to gain share in fab capacity, but you potentially lose in the shorter term if we end up with a president who all of a sudden doesn't allow China to import certain chips.
Is there any other reason why you think the chip stocks might put under pressure, not just today, but going forward? In other words, we've had this huge surge of enthusiasm and excitement around AI, and could this reaction be more than just the market's usual reaction to comments like this?
Yeah, so I think certainly from a valuation perspective, all of these stocks have been doing extremely well. But I also think that one of the reasons that we've seen such a run in the chip stocks is demand is really, really strong. We had a bunch of Taiwanese companies report their June numbers. They were all really good, particularly AI and server-related numbers, but also to some extent handset and PC. And so, I think what we've seen in the chip stocks reflects the end markets getting better. At the same time, when you have valuations that are elevated and you get bad news, you get a sell-off maybe disproportionate to what it should be given current conditions.
Yeah.
And next we got to see what PC demand, Seema Modi, looks like in this quarter, right?
Sure, there's so much focus on AI and the more advanced chips, but of course the sectors like PCs, smartphones, that always gives us a good indicator of chip demand overall, for sure. So Taiwan semi tonight, but then next week we hear from NXP, among others.
Get more needed data points right now. Thank you both, Seema Modi and Matt Bryson. Really appreciate your time. Further ahead, it's not an illusion. The Mirage.
I'm gonna have to do this. I'll have to do it like for tomorrow's stream. I'll have to do it tomorrow. Damn, so we got a pretty nice move up here. TLT is actually starting to trend a little bit higher. What I was gonna show you guys was this. Like, I don't know what this is, but this is kind of crazy here.
Yes, we make them a top priority by getting to know their finances, family, health, lifestyle, and
Bro, what is this shit? Like, look, what is this? Like, what is it? Like, 3.9 million views streamed 4 hours ago. Like, is this cool? Like, obviously, this is what people are into, what kids are into. They must not be outside nowadays. Like, think about this. People like Ryan Nyquist, Tony Hawk, Bob Byrne, like Dave Mira, and a couple of baddies. Like, just, that's who we look like this fucking retard. He's a fucking retard. And I don't like to use that word. Actually, I don't mind, but like, what? Anyway, it's like, you know, I'm not, so like this, like, I have nothing to do with this. YouTube is offering, like, trying to show me shit that I do not give a shit about. There you go. You want to give me market call? Cool, I'm cool with that. Oh, okay, cool. Kona said, cool, I'm with it. Like, not one single suggestion. I don't even play video games. I don't know. I don't go on YouTube here on desktop. I go on my phone and shit. But anyway, so I was gonna. I just started cracking up at this video for whatever reason. Well, it was a short. Oh, he's running like a GTA character.
I'm calling the police on your dumb.
Yo, he cannot be okay. He's not mentally okay. He just isn't. Like, I just back up, don't even look. Like, what the fuck?
Oh my god, it gets even better. It gets even better.
Bro, he's not mentally there.
Oh my
He's
god.
not. Like, can I, like, can the public and these type of people that, like, want to attack other people, whether it's deserving or not, can they just, like, understand at hand when someone is physically not mentally stable, or like somebody's mentally ill? Like, I mean, because apparently this person is mentally ill.
Oh my god!
Yo, my boy jumped that shit though. Watch. My boy got a 10 on that jump. Or a 9. Like, look at his hands when he's like scratching his face. Like, I don't know what, like, he just seems, I don't know. And like, he just takes off. Doesn't even look behind him. Just go, like, I mean, yeah, he looked in the camera, but he did not look at all. Like, he didn't even, like, what was that? Yo, I could just... Yeah, I'm out. Oh, shit. Oh, my God. Oh, shit. Oh, my God. The Bachelor. Gay. Gay. Cool. Gay. Anyway. Oh shit, Ben Mallow, one person I watch. Holy shit. Anyway. I don't know. That popped up on my phone. Anyway. If you're out attacking people on the streets, you're trying to do some like IRL stuff. Come on, man. Notice the difference between somebody that's technically not with us or with you, if you go out going after people on the street, because there's a lot of mentally ill people out there, and you guys go to territories where you're more likely to find them than not find them, because you got to be like mentally, you got to be like, kind of in that state to do that type of shit anyway. So just saying. Just saying. Like, I seen it the other day. Or not the other day, but when Vitaly and then went to like Aiden Ross when they were showing that stream with the two of them, or like the group of them, you could tell that this church person that was doing that stuff was mentally not okay. Like, he was like borderline, could have had a disability. Okay, so anyway, let's get back to the markets. Sorry. Shares, TLT, SPY. So it looks like... So that's another rejection at VWAP. That is another rejection at VWAP.
With 20 zone, the awards will take place on September 15th. John, back over to you.
Okay, thanks. The Bear has to be the least funny comedy series
But
ever.
so good, come on.
Yeah, I mean, my wife loves it, but it's not a laugher for sure. Okay, thanks.
Dark humor, dark humor.
Indeed. Still to come, rising U.S. rate cut optimism steering gold to all-time highs. We'll have more on that next.
So the risk to reward, I got to be honest right now, it's not bad for the upside, guys. This is the first time we have actually put in and held a previous high. If this holds, that is the first time we have held a previous high today. You can see here we didn't hold that one. Right? Boop, fell. Okay, we rally. We pull back. Are we going to hold? Nope. And just kind of like traded sideways, and then it fell. Fell. We rallied. And then right here, tried to hold it. It fell. Oh, look at this inverse head and shoulders. Oh, look at that. Left shoulder, head, right shoulder. We pull right into this neckline. Uh-oh, watch out, guys. We might have a nice little pattern here. We might have a nice little pattern here. Look at that. Look at that neckline, guys. Watch 558.45 on the SPY. That's a head and shoulders if I've ever seen one. It's not clean like I've seen before, but that's definitely kind of there. Like there was a time where it was what, like 2 years ago. You guys remember, like, we had like the SPY put in this like perfect inverse head and shoulders throughout the day, and then just ripped going into the bell. I wouldn't mind seeing if we can hold this. Let's see, I already have the SPY up, so I'm going to go into tomorrow contracts. I do not want to give back anything that I've made today. Bro, I should be... 270,000.
Coming up after the close, earnings from UAL, United Airlines, KMI Kinder Morgan, EFX Equifax, AA Alcoa, CCI Crown Castle, EFS Discover Financial, STLD Steel Dynamics reporting after the close.
The app today.
Welcome back. Outside of stocks, we are tracking moves in currencies and in the commodity space. The dollar, by the way, hitting its weakest level since the yen since around May. It comes as the Republican ticket Trump and Vance have both called for a weaker dollar. And we're seeing the opposite reaction in gold, flip side of weaker dollar, although it's down as well. Been on a strong run to just under $25 an ounce, giving up some of that today. Here to discuss, Jens Nordvig is CEO of Exante Data, and Ryan McIntyre is Sprott Inc.'s managing partner. Good to see you. Jens, it's good to get your point of view on a time like this. There are a lot of people, Mark Cuban had some thoughts about this earlier today, saying this is all a ploy for Bitcoin to do well in a dollar debasement kind of environment. I mean, how seriously should we take these, some of these forecasts?
So I think when you have very, very violent moves in the market, it's often because somebody has been wrong-footed, right? So I think when people think back to the first Trump administration, we had initially in 2016 a very strong dollar. And a lot of people have been looking to do the same kind of trades, right? And now what has been happening in the last few weeks, right, is that, as we heard earlier, like the CPI came in low. That's starting to put some pressure on the dollar. The Japanese are starting to intervene, as we heard, right? That's starting to generate a bit of a turn in dollar yen. And then on the day today, we've had a pretty severe risk aversion that has been very specific to the U.S. equity market that is also causing some unwinding of positions. So all those people were kind of looking to try to repeat the trades from 2016, as Trump gets a more likely candidate, they probably are facing some difficulties in stopping out of those dollar longs now, and that's a powerful day.
So maybe the most direct line of thinking here, there's two ways it could run. It could run through the Fed. If there was on the margin pressure for rates to be lower, I guess that would weaken the dollar. It could run through the Treasury if they were going to use the purse to kind of run up deficits and try to kind of weaken the dollar that way. I mean, do you see dollar going below 100 significantly so? I mean, is that possible? What would the conditions have to look like for that to happen?
So in order to get significant dollar weakness, right, the way to do that is...
I didn't mean to do that. That's going to mess up my charts.
The Fed cutting rates, and we don't have monetary policy easing around the world, right? So that doesn't look particularly likely now. I think the part of the picture that is surprising people this week is that there's more and more talk of tariffs. And when Trump implemented tariffs in 2018, we had dollar strength, especially versus China, right? So people are surprised that we're going in a different direction now. And we look.
You look a little funny. You look a little. Right? And I think you look like somebody I know.
Is that this turn in dollar
what about y'all?
Is creating like a squeeze in the market where people have to stop out of their dollar longs, and they came from very, very elevated positions, and that's part of what's going on tactically. I think if you look at it longer term, and we do have increased tariffs, especially on China, it's pretty unlikely that the Chinese currency is going to rally significantly, right? So we have tactical moves, we have structural moves, and sometimes those can
that's
deviate
another
from each other.
rejection,
So Ryan,
as to
what
be expected.
do you think is the protectionism trade?
We can just hold on here. I think we can make some progress. This level here, if we end up getting off of it, I'm going to say I hope that we would start to see the SPY at least try to make some headway up higher. I also haven't looked into the IWM or the Dow to see what they're doing, because that'll give you insight on like pretty much, for the most part, what should happen if there's no news, or if like nothing changes, right? Okay, look, the IWM is flat, so chances are trading the SPY right now probably isn't your best bet. I gotta get rid of that 220, 230 bucks. The Dow's still doing well. It's on fire. This thing is on fire.
Exactly. I think gold has historically been a great store of value over time in terms of protecting purchasing power. And I think today people want that more than ever. Whether that's individuals just wanting to protect their own wealth, or even central banks and countries who have been buying huge amounts of gold over the past 3 years. You've seen, the BRICS countries in particular ramp up their purchases significantly to the power. And I think today people want that more than ever. Whether that's individuals just wanting to protect their own wealth, or even central banks and countries who have been buying huge amounts of gold over the past 3 years. You've seen, the BRICS countries in particular ramp up their purchases significantly to the point where they're buying about half the central bank purchased gold now.
Do you think we have to go? I don't know if you have a view on crypto, but do you think it's plausible? And so if I read Mark Cuban's tweet and said, it's possible Bitcoin does well, the dollar kind of in a stealthy way does not do well, do you think that argument would apply to gold as well?
It's a boring day, guys. Boring day.
Absolutely. In
boring.
I think it's probably the
Let me check in here on the small caps.
And I think it has a
remember,
long history
help the
of being
stream
able to
out, hit
protect
that like
against
button,
significant
subscribe if you haven't already
in
done
almost any
so.
environment.
I want to thank all of the ones that have greatly appreciate you guys. Get to 1,000 subscribers. I'm going to be doing a giveaway myself to you guys. If you guys want to do a one-on-one with me, you know, help you get you where you want to be, help you get your account where it should be. Really learn to do this, and you can be unstoppable. Just with a few techniques, a few little insights on things could really help turn your trading around. It really could. If you guys want to give back to the stream, just you know, a small donation, a contribution. If you want to work with me or get a hold of me for anything at all, the link is in the description. Email address, links are in the description. Follow me at Ivy League Trades. You can message me on X/Twitter at Ivy League Trades, and follow me. I post some yesterday, guys. You know, yesterday afternoon I posted, "Don't get backdoored." And again, I do apologize because I wish I looked at the markets, you know, like towards the end of the day yesterday. But I was watching a few names and it got a little boring. I was, you know, and then I look at the SPY. It was like 10 minutes after the close yesterday. And when did I post this? 4:45, 5 o'clock ish. When was this posted? Okay, 3:57. So it was right at close. That's right. I tried. Holy shit. I was trying to get puts yesterday. That's right. So I posted this and said, don't get backdoored. Pretty much anybody that was thinking about going long on that rally yesterday, be prepared. You know, like, yeah, you can come in with the gap up, but watch out. Watch that backdoor. And they got hit with it today. So, so let's see here. Simple pleasures. Yeah. Well, one's actually got a pretty... I get it, but Intel, you know, she's a CNBC host. You know, Intel's got an okay product. They just... I don't know, man. I think Intel messed up. I think there was a lot of things with Intel that they could have done and they chose not to do it like years ago. And I think that's what that pivotal decision really messed them up for the future. So the overall markets, banks, healthcare, just, you know, that's, you have directional trend there. Don't fight it. Just get on the train. Just step on board and go for a ride. All right? It's not changing. It hasn't changed. It is now. I think it, yeah, I've already had that drawn on Tesla. And it's holding perfectly. So that's where we're seeing strength right now, is in the banking sector and healthcare. Names like UNH, JP Morgan. I think Bank of America was struggling today. I mean, it's consolidating, so it's not bad. Wells Fargo, WFC. Now, I usually stick with like JP Morgan, Bank of America. These names are really liquid. Names like PNC. It's a good name, but it's not that liquid. Like, let's go look to even see the options. Like, cause I'm just curious myself, like what one of their weekly options, dude. I don't know why that keeps doing that to me. Dude, what the heck? That's... Alright, so PNC 182, we could look for... Like, yeah, like, look at this, guys. Look at the open interest, and look at the volume. That's so bad. I'm surprised a name like PNC is that illiquid. You know, I know a lot of the names are illiquid in the IWM, but that's a pretty big name. I would just... Maybe one day it can find its way to some liquidity on those contracts. All right, let's look at Tesla here. I'm just, again, guys, I'm just hanging out, kind of just waiting to see if something happens going into the end of the day. If you guys see anything with like news, volume, anything, let me know. Oh shit, Beyond. I forgot about Beyond yesterday.
It's like, oh, it's like you're in Egypt, but you're not. It seems like there's a different sort of modern, not immersed in a place.
That was the stock. You guys remember this morning when I was like, yo, there is a stock that I'm forgetting? I think it was that one. It might have been that name.
Or that it's struggling to find a foothold. There's two things. One, sports may become the driving factor in how well Vegas does, because the conventions, of course, drive it midweek, but the sporting events are bringing people in from all over the world. That's one. Number two, I don't think you can underestimate the power and the allure of the Sphere. If you love the band that is going in to play the Sphere, people will spend boatloads of money because that's a bucket list event. And I've been, and I'm not trying to give MSG or the Sphere any extra business. I'm just saying, as a consumer of an event, it was bar none like nothing else I'd ever experienced.
That's it. We're turning the studio into a Sphere.
It kind of is already, actually, you know, but there's less singing than I would like.
Well,
Sorry, guys. I was just looking at something. Some $7.
At US Bank, we know how good it feels to reach your milestones, but we also know what really goes into getting you there. That's why we introduced Cobras, which connects you to a real banker in real time to help you do anything from adding a new debit card, learning how to save smarter, even creating spending limits. With Cobras, we're always there for you on your road to here, because there's nothing as powerful as the power of us.
The all-new GoDaddy Arrow helps you get your business online in minutes with the power of AI. With the perfect name, a great logo, and a beautiful website. Just start with a domain, a few clicks, and you're in business. Make now the future at GoDaddy.com/arrow. Small businesses are the soul of the neighborhood. That's why NBC Universal and State Farm partnered to create Open Doors, a marketing 101 online resource to help small business owners like you. Visit NBCUOpenDoors.com to learn more.
Invest with an advantage with CNBC Pro.
These spreads aren't bad. I don't know if anybody else has recognized this. 650 here.
Become a CNBC Pro. Go to CNBC.com/getpro now.
It's only a 4 cent different. Even tighter now, 7 cents. For Beyond. 650 put.
With over 50 years of loving kindness, we salute our residents who remind us
It's rejections.
just a number. Clickthefacts.com. It's time to finally take the exit and discover Havre de Grace, Maryland. Culture meets small town charm in our welcoming waterfront community. Stroll our historic downtown for a variety of locally owned shops and restaurants. Immerse yourself in our vibrant art scene or take in the scenic attractions along the promenade. Whether you want to catch a live show, enjoy a peaceful hike, or hunt for antiques, Havre de Grace is your destination. Ready to take the exit? Visit explorehavredegrace.com and plan your adventure today.
Time now for 3 stock loans. We predict all 3. Today we've got our eye on small cap. Russell 2000 is lower today, but the index is riding a 5-day win streak and up more than 9% over the past week here with his small cap.
So loud.
Time now for three stock lunch. Let's see if we get to all three. Today we've got our eye on small caps. The Russell 2000 is lower today, but the index is riding a 5-day win streak and up more than 9% over the past week. And here with his top small cap picks is Chris Grisanti's chief equity strategist at MAI Capital Management. First up, KB Home. Shares taking a breather from its recent rally, surging more than 22% over the last week. Chris?
John, thanks. It's nice to be with you guys again. You know, a home builder in this environment is actually really well set up for what I see as the economic environment ahead. Rates will probably be coming down by year end. KB Homes, 60% of the homes that they're selling, and they're selling well, but they have to give 60% of the mortgage breaks. They have to subsidize the mortgage. So as the rates come down, if the sales can keep up and they don't have to subsidize the mortgages so much, this can be a winner. And remember, all these small cap stocks, the float is not nearly anything like the large caps we usually talk about. So a little investment flow their way can make a big difference for a stock that's at 10 times earnings.
I admit I didn't even think about KB as a small cap. So it's interesting just to kind of drill down on who's here. Fluor is another example, the construction engineering company. Those shares are up 60% in the past year. Is it too late to get in?
I don't think so, Kelly, because if you look back at a long chart, these guys had some serious problems. The stock was down a lot. Again, this is another stock that you might not even realize is in the Russell 2000. I was surprised when I was doing my research. So this is something that is benefiting. It's about half their business is energy. So if Trump wins, this would be a good energy infrastructure stock. But the other half is really interesting. The weight loss drugs, the new facilities that are being built all over the place. They have contracts for that. They're doing semiconductor fabs. They're doing data centers. So infrastructure is all over the place, and these guys are in the middle of all of it. So I'm excited about that.
All right, final name, Utz Brands, you know, the girl with the afro and the bow in her hair. Shares are down more than 10% in the past month. Chris, you see this as a buying opportunity?
You know, I do, John, and you and I know about the girl with the bow in her hair, except folks in Chicago and folks in Los Angeles, they probably don't. And so the key here is geographic expansion all over the place. And most snack companies can't do that because, you know, Fritos and everything else, they're already all over the place. So you and I love the pretzels, and we're going to spread them to Chicago and Los Angeles. And this is a great hedge against an economic slowdown. Terrific 100-year-old staples company operating out of Pennsylvania, Dutch country. Love the stock.
Yeah, and it's not really an afro. I was just kind of kidding. It looks a little like one at first glance. Chris Grisanti, MAI Capital Management Chief Equity Strategist. Thanks for being with us.
And remember, you can always hear us on our podcast. Don't miss moments like these. Follow and listen to Power Lunch wherever you go. We'll be right back.
Oh, man, the market's putting me to sleep again. Got to get up and walk around. Give me 1 second. I'll be right back, guys.
begins here.
Welcome back. Let's get a check on these markets. Down nearly 3%. The Dow is higher, John, but again, the reasons why are kind of narrow and almost idiosyncratic. United Health has been up almost 10% in 2 days.
Yeah, a lot of big stocks not doing that great. I was looking at stocks I follow most closely. All of them tech, and I'm going down the market caps of what's actually in the green. Walmart and Visa, and then you get T-Mobile, Cisco, Verizon, sort of in the carrier arena.
Yeah.
Comcast as well. Not going to argue about that. IBM, Intel. It's a very interesting. And then we're getting down into the $100 billion range, far away from the $1 trillion ones. It'd be interesting to see where things go from here.
I never like when Walmart's the leader. Really great sign. And speaking of some of the retail carnage we've seen lately, have you seen Five Below?
Oh yes, it's 25 below. We were talking about that on Overtime yesterday. It's an interesting contrast between the discretionary in Five Below and the must-have in Walmart.
Yeah, we had the CEO of a firm last hour who said, according to their data, the consumer is still holding up okay, but the selectiveness that we're seeing, or you could just call it disinflation, it is coming out of some of these stocks and some of these parts of the market.
And it's not just at the low end anymore. We're seeing some luxury names having trouble as well. And of course, you can track all of this action on Overtime at 4 p.m.
Very much looking forward to that. You guys have earnings too, United, Alcoa, and so much more. We'll see you then, John. Closing bell starts right now.
And welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with the gears grinding a bit in the great rotation trade of July 2024. A thorough shakeout in semis on some policy concerns and continued retreat from crowded mega cap leaders is meeting profit taking in the white hot small caps to create some broader weakness. Here's your scorecard with 60 minutes to go in regulation. The S&P 500 you see there down about 1.25% and has dipped back below 5,600 to levels seen for the first time just about a week ago. The NASDAQ, though, is the real center of the weakness, down 2.5%, was down 3% earlier or thereabouts. The Dow is actually up about 0.5% and above the 41,000 mark for the first time, thanks mainly to gains in United Health and J&J. They both had results in the last couple of weeks, but defensive names in general also getting a bit of a reprieve today. Small cap, Russell 2000. Outperforming slightly, but still lower after a blistering one-week run where it was up about 12 or 13%, and the VIX reflecting some of this choppier tape, rising to a 3-month high just under the 15 mark, basically matching the highs of May. That takes us to our talk of the tape. What do you do with this little flutter in the tape, and where does it leave the soft landing trade? Let's bring in Lauren Goodwin of New York Life Investments, Keith Lerner of Truist Wealth, and Peter Cicchini of Axonic Capital to talk about that. Lauren, so many things going on in the last week. It's actually refreshing. We have a lot of these kind of storylines that are changing. Soft landing trade on top of we can see our way to a Fed rate cut trade on top of a maybe Trump trade, all pushing in a similar direction. Has it caused you to sort of rethink where you'd want to be positioned?
Only on a tactical basis. This is a market, a Fed pivot market, 2-3 months before we expect a cut, exactly as we'd expect to see it. A lot of uplift in areas like small caps, other areas of the risk market where capital's really unlocking. But the reality for the market is that we've already been in a soft landing for the next 9 months. And so as we look to why the Fed is cutting rates and the market starts to catch up with that reality, might be a couple months from now, but we expect that the economy is still liable to slow. So portfolio balance is really the name of the game here. And we can talk about politics all day, but of course that layer is important as well.
When you say the why the Fed might be cutting is significant, you suggest that it's in response to slowdown fears or a slowdown underway, as opposed to just, hey, inflation's back toward our zone and it's time to be less restrictive?
Right now, it's the latter.
Yeah.
It's the data is really not reflecting a stressful amount of slowdown, and that's why I expect that in the next couple of months we will continue to see improvement in risk assets overall in breadth of areas like small caps. It's a risk-on rally, but that's what happens only when the Fed is cutting at a moderate pace. If we do start to see the labor market deteriorate, which I expect will happen as we get towards the end of the year, that's when you would start to see the market reacting to, oh no, the Fed's cutting, bad news is bad news, as opposed to what I expect to be more constructive in the near term.
Keith, what's your read on just, I guess, the tactical rebalancing of this market that's happened in such a dramatic way? Obviously, the scene was set by just exactly how narrow and crowded the top of this market was for so long, and we've got this snapback effect. But where does that leave us right now?
Yeah, well, first, great to be with you, Mike. It's been an interesting period. You know, we downgraded tech at the end of June because we had the best relative performance relative to the S&P on a one-month basis since 2002. And then, as you mentioned, we had a condition heading into last week. That means the most oversold condition for small caps and the average stock we've seen in about 20 years. And the spark, as we all know, is that light CPI report. So I think where we are today is I still think this kind of rotation to small caps, the equal weight, has further to go. The rubber band was stretched so far that even right now, if you look at where we are, small caps are still trailing by a wide margin. Small caps are actually still below where they were at the end of 2021. So I think it has longer to go because of position. And I also know we're going into more of a seasonal weak period for things like semiconductors and tech. But I think more broadly, the market will start to chop around at the headline level, and we're going to expect to see more of this as we move into the back half of July and into August. Ultimately, we still think this market has legs. We think the bull market's intact, and ultimately, we think that the money will rotate back into tech later this year. But at this point, I think investors have to be somewhat patient on that trade.
Yeah, Peter, it's a pretty decent reminder today that, you know, the market doesn't necessarily owe you a place to hide and absolute returns on a short-term basis. If one thing is not working, it doesn't mean everything else offsets it and works. But what's your read on not just what's driving it, but whether it was more than just mechanical and what the fundamental message might be?
Yeah, there is really a place to hide, Mike. I agree with you on that. I agree with Lauren, and this is a pretty typical market action into what the market initially expects to be an infallible Fed that can manage the economy into a soft landing. The market will typically trade up across the board. There are obviously some differences this time around given the AI narrative, but typically rallies into the first cut, and then as the read-through is that the economy is slowing, and that's actually the reason for the disinflation, as opposed to a Goldilocks scenario where you have disinflation and optimal growth relative to inflation. The market sells off. So typically when the Fed is deep into its rate cutting cycle, markets tend to sell off. I don't think we're there yet. I do think it's 3 to 6 months away. And our view is that into the end of the year, the Fed is gonna cut pretty hard. I would also say that this massive rotation into small caps, with small caps up 10 to 12% in 4 days, is also a result of the fact of what Keith said, which is that small caps have been sideways for quite some time. S&P volatility has not been realizing, meaning that anyone who has tried to use the S&P as a hedge has lost a lot of money. And so people were tending to use the Russell as a hedge proxy, especially for credit portfolios. And as a result, a lot of people were wrong way positioned. And when the Russell started to rally on retail participation, which has been massive on a historical basis, a lot of people got squeezed in the Russell. And I think that's really primarily what's responsible for the rally.
Yeah, there's no doubt there was very extreme short positioning in those index futures in the Russell leading up into this period. Although I guess, Lauren, I do wonder how much we want to refer to or rely on the historical playbook for the kind of Fed tightening cycles, Fed easing cycles. Hasn't necessarily played to script recently, right? I mean, this bull market started when the Fed was still tightening. Usually before the Fed actually starts to tighten, you get a little bit of a honeymoon period where the market thinks it's a good thing that it's happening. We didn't get that in 2022. So I just wonder at this point right now, either you can say it's going to be like the mid-90s, and that was the absolute perfect Fed soft landing that Peter refers to, and you had no hiccups at all, or it's something different. It's just its own animal.
I mean, every cycle is its own animal to a certain extent. And when we're looking at a cycle that comes off the back of a historic pandemic and historic policy support, we should absolutely expect to be taking themes rather than exact lessons from the past. But I think the themes are likely to apply here. What we're looking at is an environment where the Fed is likely to begin its rate cutting cycle when the economy and the labor market are still okay. That's an environment where risk assets can perform well on average, which I do expect is likely to be the case heading into September, including in credit, not just in the equity market. But where we've also seen a pretty consistent story historically is when the labor market starts to weaken, or importantly, when earnings start to weaken, the market's likely to respond to that. So rather than guess exactly what the Fed will do or the economy will do, I'm looking at unemployment claims. Are they ticking higher? And I'm looking at how are earnings expectations looking, not just the beats, but really like how is the future expectations for earnings playing out? Both of those are still intact. So for me, that's the constructive market signal.
And you know, Keith, it's easy to fixate on the small cap index. It's had the most dramatic move. It obviously was the most depressed, and that was stretched pretty far to the downside. But it's really not just that. It's like kind of everything but secular mega cap growth that has gotten some relief, right? The equal weight S&P still outperforming today. It's actually barely down at last look. Financials are up today, big ones too, not just the small ones. So is it really just about, a little bit of the pressure being taken off the average stock here as we have an unwind in things like Meta? I know you don't necessarily want to talk about the specific stock, but this is not a semi. There's just nothing specific going on with Meta. It's down 15% off its high.
Yeah, no, I believe it's the latter, Mike. I mean, we have to remember, not only Meta, but the three top stocks in the S&P were each over $3 trillion, which was more than the entire S&P, the entire small cap index. So as you take a little bit of money out of these concentrated areas and you move them to other areas of the market, I mean, that's a lot of energy to move stocks that have underperformed. And I think the other thing, Mike, all year long, people have been talking about this broadening rally coming, right? All year long, they've underperformed. So once folks in the market start to see that trade working, they don't want to be left behind. So I do think it's a little bit coming out of an overheated area, going towards the broader market, which is healthy. I will say, again, later in the year, and I think probably more in the fall, I think money will ultimately come back to tech, but I don't think this corrective or relative underperformance cycle is over yet. But this cycle has really been different, but it's also, the main theme is artificial intelligence, technology. And I think, for that to change in a meaningful way, that will likely be the next cycle. So again, we're being patient. We think money comes back, but in the interim, I still think there's more to go to these other areas of the market because they're still relatively cheap. Even small caps, I mean, they're still at the lowest relative valuation since we've seen since 2000. That 6-month underperformance was also the lowest since 2000 as well. So probably more to go here.
Yeah, although as I keep pointing out, the great relative performance of small caps after that period in 2000 mostly came because big caps fell apart. It wasn't just because of small caps going higher, but obviously maybe some differences here. Peter, as people go down the checklist and say, okay, the market looks like it's in modest pullback mode, is there anything worrisome going on elsewhere that we should be aware of? Right? Our earnings estimates look okay. And then credit. People will point to it and say, hey, not really showing a lot of stress. It seems like that's kind of giving its blessing to the broader soft landing or macro space. What's your read on that?
Well, as John Galbraith might say, finance has a very poor memory, right? And yeah, there are some differences this cycle, and deficit spending is probably the biggest. So I think the cycle has been extended and prolonged. But the things, to your question, that we typically see as we go into a default cycle are with us. Speculative grade default rate is actually creeping up towards 5%. And that's versus high yield spreads, let's call it at 320. That is a massive disconnect. We look at the 2016 rally, Fed funds rate was at 0.25%, default rates on a trailing basis were at 2.5%, and spreads were at 500 basis points. So, you have to ask why these disconnects exist, especially when you're seeing the economic surprise index surprising to the downside for months, for a number of consecutive months. We're seeing consumer companies continuing to talk about an accelerating weakness in the consumer. We saw that in the 5 below revisions lower today. So there are a number where, we do a lot of structured credit here. We look very granularly at remit data for alternative consumer finance companies. And delinquency data doesn't look great. It was improving for a little while, and really the trend is especially for subprime consumers, the trend is not good. Delinquencies are actually rising. So there's a lot under the surface that's being masked by tighter credit spreads, which are being supported by equity market sentiment.
Okay, so in other words, you're suggesting you think there's a rising chance or a high likelihood of a hard landing, and the credit markets are essentially either blind to it or they're underpricing it.
Yeah, I think it's underpriced right now, and that's how we in this business are able to make outsized returns, is by understanding conceptually when things are not priced correctly. And I think that's probably one of the most interesting mispricings right now is high yield credit versus interesting parts of the structured credit market, where you can get 10% yield. You're looking at much lower yields in high yield credit with no collateral. And so I do think the credit market is the place to look. And to Lauren's point, I think we need to see continuing claims pop up above 300,000, and then we'll sort of be, we'll see the whites of the eyes, if you will, and that'll be time to buy volatility.
Yeah, that'd be initial claims, I know you mean there, for above 300,000 a week. Yeah. Lauren, in terms of how you would navigate the bond market in this scenario, I mean, obviously, if you think the Fed's cutting, cash isn't going to be quite as attractive, where would you look to move?
So, while I agree and have said that I believe the economy is likely to slow from here, another reason why we may be seeing credit not pricing a disaster is because the structural quality of credit has changed, especially for publicly traded U.S. credit over the pandemic. It's been Fed programs, it's been well-capitalized balance sheets, and so I expect we may not see spreads widen quite as much in the event of a market drawdown. But importantly, as the Fed starts moving, this isn't just a Fed cutting cycle, this is a Fed cutting cycle off of rates we haven't seen in a really long time. And so I expect that we'll see capital moving into short duration credit, including high yield, but also investment grade and municipal bonds, to lock in higher rates. And that's a move, especially with a maturity wall that's 2 or 3 years away, that makes a lot of sense to me. For investors that aren't as interested in a particular call on duration, I happen to be aligned with that. With the yield curve inverted, just doesn't make a ton of sense. You can balance short duration credit exposure with the long end of the municipal curve. It's not inverted.
Okay.
But perhaps just as important, if we're expecting this major Fed transition, there's been other areas of the capital markets, including the private markets, where deal flow has been completely locked up as a result of just concerns about where this market is going. When we start to see the Fed actually move, we are likely to see deal flow in private equity, private credit, even real estate start to unlock over the course of the next 6 months as well. So I think this is just the beginning of a very big move in capital.
Gotcha. And just quickly, Keith, you did mention you expect it to be a little bit choppier here. Is that based just on, the seasonal effects, the fact that you get a pre-election nerves hitting the market, positioning? What is that based on?
What?
But also,
keep your eye on tomorrow's options, guys. All right, for anybody that doesn't do that, I'm going to give you guys some insight here. All right. Notice where your volume is before the market closes. On the put and call side, you want to see where your liquidity is at. All right. You can see here we have 49,000 in volume. All right. We have 49,000 in volume to the buy side. You can see 97,000, 62.57. Let's go over here. 60, not nearly as much on the put side. We could start to see that after today. You're going to start seeing that ramp up. And you should see these drop off possibly a little bit. And you want to get those key areas that have the highest open interest and volume, which really help a lot of different reasons, right? It's liquidity, the price, get some real decent price move it. It can really, expand on, how much you make off of the trade. At least how much the options are going to pay you. So also high to low. Let's see, what did we trade earlier? The 562s, right? Let me look. Hopefully I didn't get logged out of my. Okay, cool. I didn't get logged out yet because I wasn't in my broker at the time. So let's see, orders. Okay, so we traded. What did we trade today? I traded calls. We traded calls twice, so 17. Okay, so one was a daily and one was for tomorrow. So the 18th, 562 calls. 562. 562. So we can see here the 560s is really where the chunk, where the meat of the, really where the chunk of the meat is. So let's go to 562. Let's go look at the, so we can see our range and have an idea today, the past couple days, what was our high to low on these options. So this is a 15-minute chart. Let's see here. So they peaked around $1.16 and they had a low of 30 cents, guys. So they're demolished.
94 on the S&P. I think it can be a more inclusive market, and certainly the outperformance that we've seen in mega cap tech versus the rest of the market, I think that gap will shrink. But I think as we look out 6 to 12 months, I think the ultimate outperformers will continue to be the mega cap names. It's a theme that we've been all over in terms of the large cap and mega cap secular winners, that until we really have that economic sort of cleansing, that they are going to be the leaders in the market. And I don't think that the events over the last 5 days or what the Fed's going to do in September is really going to change that. Obviously, on a tactical basis, there's a lot of nuances in there on a tactical basis, but that's kind of our more medium-term view.
I mean, referring to an economic cleansing, I mean, you basically mean a genuine downturn in the economy that's going to flush some things out, or is it just a reacceleration somehow?
No, I think a further slowdown. So right now the economy is slowing at a slow pace. And one of the things that we're looking at is what are the causes of the slowdown, and are those causes going to change in the coming 6 to 12 months? And you think of the causes, restrictive Fed policy. So I would expect the Fed funds rate to be 300 basis points above the inflation rate for the next 6 months, and will likely decline to 2% over the course of the next year, but still in restrictive territory. And the consumer is still battling high prices, right? We have an inflation rate that's down to 2%, but we're still well above trend. That's causing a headwinds for the consumer, albeit being offset by the fiscal situation, right, where we're spending $2 trillion that we're jamming into the economy every year. And in addition to that, the wealth effect, right? Higher stock prices, higher home prices have absolutely help this economy. And so until that changes, that'll be another buffer for the economic outlook. But we are slowing, and we don't really see a change to that path. It's just a matter of whether it picks up or not.
And so looking out the next couple of months, obviously we're going to be dealing with whatever the election sentiment swings are, whatever we're going to try to handicap in terms of that, even if it doesn't matter over the course of a cycle very much, it matters a lot in the near term. And then, the defensive parts of this market, or the ones that have been defensive, are all these like 30 times earnings, secular growers. So is that what you would say? Just take shelter there?
Yeah, because I think that, we're entering a period where, I think it was mentioned earlier, that, from a volatility perspective, we're entering a trickier part seasonally. And when we're going to have a lot of events around the election, and we're also, trading at a very high multiple. And when you're trading at a very high multiple, you never know that's going to come at you that is going to cause an issue. And you're just much more vulnerable at 22 times earnings than if you were at 18 times
Which is
earnings.
where the S&P is, right?
Correct. And so I just think that, and I would also say that, we've done a lot of, from a technical standpoint, a lot of back testing around when the RSI and the S&P has gotten this high, and it got to 81 on July 10th. It's only happened 12 times in the last 50 years. But in those 12 cases, the returns were not friendly. We were down 3 weeks later in 10 of the 12 times, and we saw a drawdown of average drawdown was about 3.5% over the next month. And then if you look at just returns when the market's been strong over the course of the first 6 months, over 10% we use as a threshold, which happened this year, you typically do see a drawdown. In fact, 10 of the 18 times since 1970, you've seen a drawdown of 5% or more from that June 30th price. So we are just, these things are out there. We're susceptible from a number of different perspectives.
Usually maybe a stronger finish to the year, but definitely not without some payback along the way.
That's correct.
Eric, good to see you. Thank you.
Great seeing you.
All right, up next, more on today's market sell-off, including some of the biggest movers as we head into the close. We'll be back after this break. Just over 16 minutes till the closing bell. S&P down 1.3%. Let's get back to Seema Modi for a look at the key stocks to watch. Seema.
And Mike, VF Corporation catching our eye, up 14%. Eyewear group EssilorLuxottica announcing an agreement to buy VF's Supreme brand for $1.5 billion in cash. VF Corporation is now up more than 20% so far this month. And then there's GE Vernova down about 9.6%. The company telling us it's investigating a blade issue on one of its